We're about to start, and I'm very pleased that everybody has turned up so punctually, and we'll be able to get underway in just a few minutes. And I'm sure people are still coming in from outside, enjoying their croissants and their coffee, but I'm sure they'll be with us. My name is David Marsh. I'm the chairman of OMFIF, which is a group which brings together public and private institutions all over the world. And so what we're doing here today is very much part of that mission. And as Christopher Garnett, who is one of the inspiring forces behind this, and many of you know him from his time at Euromoney, as he says, this is all about getting serious people to come to Budapest to talk about serious things in a serious place. There are lots of serious things to talk about. So we're going to be talking today not just about the development of the Hungarian economy, but also about the region as a whole. I'm very pleased we've got representatives from many parts of the Central and Eastern and Southeastern European region. We're going to be talking through the macroeconomic aspects, the investment aspect, capital market, financial markets, the whole green issue, which is, I know, very dear to the heart of the Magyar Nemzeti Bank, and where you've been a pioneering force for many years. And then we've got a panel at the end talking about fintech, where, again, Hungary has made some very big strides in recent years, and I think you can well say that you could be a real force in this area for the region as a whole, but also extending into Southeast Europe and also extending further afield to the east. Now, we cannot avoid politics as a whole. There's lots of very big issues. Our standard questions here are economics and finance, but we cannot ignore the world outside. The war is still raging in the Ukraine. We have a new war on a second front, if you like, now between Israel and Hamas after the horrific massacre on the 7th of October. And we cannot be impervious to all that. A glimmer of hope, I think, overnight. The Biden-Xi talks have resulted in a minor breakthrough, and I think for a country like Hungary, that is very close to China, that's an extremely important development. So that is our agenda for today. All this is being live streamed. This is all on the record. Journalists are here to take note of what you're saying. So we have to be alive to the fact that this is a matter of public record. I think it's very important that we do make this statement here, that Hungary, we hope, is going to be on the map from a financial and economic point of view. The whole question of Western enlargement, Western Balkans enlargement, of course, is going to be absolutely on our mind, particularly in the first panel, which I have the honour of presiding over in a moment. So lots of things to discuss. Very pleased that we've got two very high representatives of Hungary to speak. First of all, very pleased, Minister Varga, that you're with us today. You've been Minister for 10 years. You've weathered a lot of storms there. So you're going to be speaking for about 20 minutes on the Hungarian and maybe the regional economy and what you've got to offer the rest of Europe, but also what does the rest of Europe have to offer you. And then we've got my old friend Barnabas Virag, who is the Deputy Governor responsible for international affairs, as well as keeping a very strong eye on domestic monetary arrangements. He's speaking next. So now, without more ado, I pass over to Minister. Please do take the stage, and we're looking forward very much to what you have to say. Thank you for being here.
Thank you, David, and good morning, everyone. It's an honor to greet you and speak to you and give a short presentation about the underlying figures of the macroeconomic situation in Hungary and about the possible future, the possible outlook of the country. So, firstly, a couple of words about the macroeconomic update and outlook. So first of all, the main element of the growth and about the growth position of the country and the economy. So Hungary, as you can see in the chart, recovered quickly from the COVID crisis, reaching record high 7.1% GDP growth in 2021. Despite the negative circumstances, the Hungarian GDP grew by 4.6% last year, exceeding the EU average by 1.2 percentage points. The growth was slowed down by the drop in the retail trade, industry, and the construction industry due to the fall in demand caused by the Russian-Ukrainian war, high energy prices, and not a question that the high inflation. However, with the inflation gradually falling and interest rates moderating, the Hungarian economic growth is set to strengthen significantly in the second half of the year. A couple of words about the labor market, because it's a good element of the position of the Hungarian economy. So the labor market proved to be resistant against economic challenges, while the number of employed people remained around 4.7 million since months. Employment rate has reached record high levels, putting Hungary into the top performers in the European Union. In the second quarter 2023, the employment rate was 75% and remained stable despite the recent negative macro events. So labor market reserves have been well exploited. Employment of typically less mobile groups, such as women, young and elderly people, have increased due to the targeted employment programs and tax reduction measures. So the employment rate was 75%. I think is a good sign, because it means that it's not a typical crisis when the people lost their jobs. It's very important that the tight labor market can secure the future economic growth. Inflation has peaked in January and has decreased from 25% to 9.9% in October. So the target single-digit inflation has already been reached in October. Inflation is expected to further fall in the remaining months of the years. The tight monetary and fiscal policy can help to reach the average 6% inflation in 2024. In the first half of 2023, the Hungarian current account balance recovered. The balance of goods and services are the main force for the improvement. In the recent months, the price of energy dropped significantly, which caused a major improvement in the trade and goods balance. In the first half of 2023, the Hungarian foreign trade balance improved also significantly. As the prices of energy normalized the first 6 months of 2023, it boosted the balance of goods. As the effects of the crisis of the recent years ease, the foreign trade balance is expected to reach the highest balance ever in 2023. Investments have increased by a total of 54% since 2010. Thus, the Hungarian investment rate rose from 20% in 2010 to 27% in the second quarter of this year. So despite the unfavorable international economic circumstances, corporate investment activity remained high. In Hungary, remained the best performer in terms of investment activity among the European Union countries. Investment has well resumed after the pandemic, supporting growth and quick recovery of the economy. Particularly, high investment activity in the manufacturing sector plays a pivotal role in Hungary's good long-term economic prospect. Geographical situation. The Hungarian economy remains Budapest oriented, but the imbalance in the geographical location of investment has improved considerably over the past 10 years. The ability of the eastern and western parts of the country to attract capital and investment has been roughly balanced. In the recent decade, several large-scale investments have been implemented in the eastern part of the country. For instance, I have to mention that the Chinese CATL or the German car manufacturing company, the BMW, is also located in the eastern part of the country. So the overall picture, I think, is favorable, and the inflation, as you can see, we expect the inflation to decelerate further. The labor market remained resilient. Investment shows a record high levels of foreign direct investment in this year. The balance, the current account, its improvement, and the growth outlook in 2024 will be around 3 or 4%. So I think it's favorable. Yesterday I read the published new European Commission economic report, economic forecast, so-called autumn forecast, and it shows that in the region, in the next 2 years, Hungary will be the best performer. Energy security, because it's a key issue, and in the coming year, the new capacity expansions goal to reach 2 billion cubic meters domestic production. Hungary is deeply interconnected with its neighbors, which provides high energy security. Hungary's total natural gas storage capacity is 67 terawatt hours, which is one of the biggest in the European Union. The large capacity of natural gas storage provides further electricity security. In 2022, the natural gas consumption of Hungary was 9.5 billion cubic meters, which was 14% lower than in 2021. So I think it's a good sign to accommodate the consumers to the situation. In order to further diversify its natural gas market, Hungary signed contracts with new exporters such as Azerbaijan and Qatar. So update fiscal performance, tax and public debt. Increasing the competitiveness of tax system is a key factor in Hungary. The competitiveness of the tax system is a multi-phased concept. It includes low tax centralization, a growth-friendly structure, adequate provision of incentives for social development and welfare, example, employment, family tax system, and last but not least, simple regulation, reduction of the administrative burden. It's very important for the government. The result of these measures contribute to Hungary performing particularly well in the benchmark tax competitiveness rankings. Perhaps the most comprehensive tax competitiveness index available today is the International Tax Competitiveness Index, published by the Tax Foundation. An independent research organization in the US, the world's leading tax policy competitiveness index. Hungary is ranked 11th in this ranking, and of the 38 OECD member states. Based on the latest data for 2023, it was in 2022 according to the updated methodology. The 9% corporate tax rate, lowest in the European Union, the single rate personal income tax system, which is 15%, and the development of some our international tax rules play a significant role in our strong performance in the ITIC ranking. Hungary also provides generous investment incentives, such as the development tax credit and the development reserve. The International Institute for Management Development, the IMD, global competitiveness ranking covers 64 mainly developed countries and examines, among other things, the effectiveness of government. In the tax policy sub-ranking, Hungary moved up 3 places from 2022 to 2023. About the budget. The revised 2023 budget sets the deficit target at 5.2% of the GDP. Based on the first result of the first half 2023, the ESA deficit reached 6.3%, which didn't meet with the expectations due to the high inflation and increased energy prices. The unfavorable international environment, the increased national defense expenses due to the war situation in the neighborhood country, the maintenance of utility protection, the preservation of the real value of pensions, the maintenance of family support, the increased interest rate expenses, and the lack of the EU funds justify the revision of the deficit target. The expected deficit rate in 2023 is 1 percentage points lower than in the previous year. In the current unfavorable environment, there is an urgent need to strengthen fiscal resilience. The fiscal framework must primarily ensure the sustainability of the public debt and macroeconomic stability. So not a question that it will be a strong position to the government to show that the fiscal position is will be better. So the next year, 2024, we would like to reach the 2.9% deficit, which is a necessary element to avoid the excessive deficit procedure in the European Union. Structure, the public debt management. I have a different, The public debt management, which is a strong element. Our strengths in the public debt management priorities remained the same for several years. The share of households within the total Maastricht debt rose to 27% by early 2020. And this level decreased to just 22% as a consequence for last year's several crisis situations. This means households are the trustworthy sector. Hungarian debt management can rely on them. And another chart, the public debt situation. So on the other hand, additional financing needs during recent years were covered partly from the international debt markets, proving investors' confidence in Hungarian economic policy, as well as demonstrating that Hungary can diversify successfully its financing sources without jeopardizing the debt sustainability. Proactive debt management. In the past period of the government debt management agency has been actively retiring bonds. Thanks to this approach, debt coming due to within the next 3 years amounts to less than 2 billion euro. Given the current increase in euro yields, this proactive approach turned out to be an important tool. From a debt management perspective, it mitigates refinancing risk and associated cost as well in an unfavorable in the environment. So, ladies and gentlemen, thank you very much indeed. As you can see, we are in a tough period, but the outlook is I think, it's favorable. So thank you for the kind attention, and I wish everyone a successful meeting today. Thank you.
So thank you very much indeed, Minister. And I think some of those figures are really quite startlingly positive. And you are actually closer to meeting the Maastricht criteria than many countries that have been in monetary union for many years. So one might be tempted to say, and I know we've got European Central Bank representatives here, so I have to be careful what I'm saying, but one might be tempted to say it's not a question of when Hungary will join the euro area, it's a question of when the euro area will join Hungary. You're setting a good standard, I think. And I know we're going to go into these issues of the public debt and the structure, maturity structure, very important, the FX side. That's meat and drink to us, so we'll be looking at all that. My own feeling is that the further you go away from Europe, if you start touring Asia, shall we say, the more receptiveness you will find, because they want to diversify some of their holdings into other currencies. I'm sure you know that, but I do think it's a very useful tip that you can take those slides around the world, I think. I think you'll get a very, very good reception. I know the debt management agency is doing things like that anyway, and we are certainly ready to help do those things too. Now, I want to now introduce Barnabas Virag, who I mentioned before. Of course, he's now taken over this international portfolio, but he's also carrying on with the domestic monetary policy and the financial stability. He doesn't look tired at all, but he'll soon be like Hans-Dietrich Genscher, the archetypal German foreign minister, who used to meet himself coming back on aeroplanes. They used to be traveling around so much. So Barnabas, you've just taken on this job. You've got a very important portfolio, but you're of the same size in terms of your height as Paul Volcker. So I'm pretty sure that sooner or later you'll become just as big a hallmark of stability and resilience as Paul Volcker is. So looking forward very much to what you have to say. Whenever Barnabas comes into the room with his very big size, you feel a burst of confidence coming over you. So Barnabas, over to you.
Good morning, ladies and gentlemen. Thank you very much, David, for the very kind introduction. Dear Finance Minister, dear distinguished guests, ladies and gentlemen, it's a pleasure to be here. I have to say that I'm in a tough situation after a very wide and comprehensive presentation we heard from the Minister. But I try to deliver my best and to say some news about the regional developments and about the Hungarian issues. In my presentation, I want to focus on our public enemy. And we know well that the public enemy in the last 2.5 years was the inflation in the world. And of course, as I'm responsible for monetary policy department within the central bank, and I promised several times that you can expect very clear communication about the Hungarian monetary policy, and I know well that many investors and journalists are here in the room waiting for some new message about the Hungarian monetary policy. So I promise I will deliver some new message about the Hungarian monetary policy, but of course, as in case in a new book, only on the last page of the presentation. Okay, starting with so the title of the presentation, Battle Against Inflation, Where We Stand Now and What Next. So starting with the regional developments, as I mentioned, the high inflation period globally and in Europe started somewhere in the first half of 2021. So now we have some historical data, some historical perspective about the story. And when I heard from our Western European colleagues that, okay, this pretty high inflation period was a big issue in our country, I'm always saying that, yeah, it's maybe it was a big issue in your country, but it was a nightmare. It was a disaster for the Central Eastern European and for the Baltic countries. So you can see in that chart that why the European average inflation in the last 2 years, so since the middle of 2021, was 17%. In case of the Western European countries, it was 15.6%. In case of the Central Eastern European countries, this number is near 30%. So near double of those inflation numbers we saw in case of the Western European countries. So I think for the Central Eastern European countries, this battle against the high inflation is a big and very important battle, because otherwise we are not able to continue our catching up story in midterm. If I look at the pattern, it's pretty interesting to see that in case of the Eurozone countries, we have a very symmetric inflation path. So as I mentioned, the inflation succeeded the 2% lines somewhere in mid of 2021. So after that, it took 15 months till the peak. It occurred somewhere at the end of 2022. And after that, we can see a declining path. And as I mentioned, a very symmetric way. Of course, now the Eurozone inflation is 2.9%, and now we are waiting for the last mile. We will see when the Eurozone can deliver this last mile. What's the situation in case of the Central Eastern European countries, in case of the new members who joined to the European Union after 2004? We can see something similar, but in a much higher level. We reached a peak somewhere in the last quarter of 2022, in the Hungarian cases in the first months of 2023, but after that, in the region, a short plateau came, and the disinflation started in a very robust way only in the first quarter of 2023. So nowadays, the average inflation in the region is around 6 to 7%. Minister Varga mentioned that in our case, in Hungary, the October data was 9.9%, so we joined to the club where the inflation is again in the single-digit territory. And I'm very certain that we will continue our track towards the regional averages in the coming months. So these are the growth numbers. As the minister mentioned, the recovery from the COVID-19 crisis in the region was pretty fast, very robust. So these numbers show the GDP levels relative to the pre-COVID situation in the middle of 2021, so on that era where the high inflation period started in Europe. So you can see that the regional countries performed in a better way than the EU average. But it's worth to look at the case after that. So as the high inflation appeared in the region, it held back the growth in the last 2 years. So in many cases, in case of the regional countries, we saw weaker growth numbers in the last 2 years than the EU average. So that's why I'm saying it's a key battle for the regional economies to combat successfully against the high inflation we had. The other story elements in our region is the external balance. So of course, in case of the Central Eastern European countries, the energy intensity is higher than the EU average on the one hand, and on the other hand, we are net energy importers. So in line with that, the high energy prices we saw in 2022 made a big damage on our current account position everywhere in the region. Good news again that since the end of 2022, we can see a very sharp improvement in the field of current account position, especially in case of Hungary. So in the second and I think also in the third quarter of this year, the current account position of the country jumped to the positive territory, to the surplus territory again, which is needed in case of a balanced growth path. The big, very positive trend is the labor market, as the minister mentioned. So we can see everywhere in the region that the labor market remained tight during this recessionary period. I think generally it's a very, very interesting question. So how we can explain that 10 years ago we talked about a conference like this, we talked about the jobless recovery, we talked about the jobless growth, and nowadays we are talking about job-rich recession. I have two explanations for that. The first one is linked to the supply side. So of course the demographic trends started to play against the labor market situation. So nowadays, of course, the demographic trends turn to the aging side in the region, which cause structurally tighter labor market conditions everywhere. And the other explanation is linked to the profit situation of the firms. So we saw, especially here in Hungary, but I think in case of many other countries in the region, that in the last 2 years, during the period of high inflation, many firms were able to increase their own profitability. So they raised the prices, the consumer prices, to a much higher level that it was driven, relative to that level, it was driven by the cost side of their operation. So that's why I think nowadays the firms have room for maneuver for labor hoarding. And of course, they can use this room in the coming years to compensate the relatively high nominal wage growth, which is also expected in the region. So let's say some words about the credit market developments. So we can see a lot of similarities on that field. So the credit markets are generally cooling down in both in the households and in the corporate segment. But it's also worth to mention that the numbers are pretty similar, while the interest rates are different. So in some cases, the interest rate, as here in Hungary, is still in the double-digit territory. In some cases, around 7%. In case of the Eurozone countries, around 4%. But the numbers are pretty similar. Sending the message, the key driver behind the credit market development is the demand environment, is the uncertainty regarding the future. So as soon as the demand will turn, as soon as the uncertainties will start to diminish, looking ahead, I think we will have a good chance for a turnaround in the credit market developments. So we can see very similar numbers in the corporate sector. So you can see the red line is the Hungary, the green line is the Visegrádian average, and the black line is the Eurozone average. So you can see very similar paths in the credit markets. Let's say some words about the current global issues, because of course we are all open economies, strongly linked to the European economy, strongly linked to the global financial markets. So I would like to say some words about the global issues. Okay, starting again with the inflation. As I mentioned, that's the public enemy. But that was the public enemy in the last couple of years. So we can see a clear downward path in case of the big economies in the Eurozone, in US, and also in China. I think the Chinese numbers are pretty important as one of the key exporters of the world, and we can see near zero, slightly in the negative territory, inflation in the last more than half year in China. So I think, or I can imagine that at some point China will start to export this low inflation to their own partners, which can generate also this inflationary path globally. But all in all, the inflation is around 3% also in the US and in the Eurozone. So we can say, maybe we can see the first lights at the end of the tunnel. So till now, it was a big question mark. The big central banks can reach their own inflation target or not after this very high inflation period. I think it's pretty hard to answer that question. But I think nowadays we can be more optimistic regarding that. What can we see? What's the main driver of the financial markets? Of course, the very high long-term yield environment we have in the developed world. Both the US and German yields rise to a high level. If I compare the numbers to those developments I saw in the last decade. Of course, there was some correction in the last couple of weeks, but these yields are still high, and of course can generate a new era for the emerging world. So that's why I'm always saying that we have to be pretty cautious, because the yield environment in the developed world changed very rapidly, and I think we know well from the history, when the yield environment changed very rapidly in the developed world, it can generate, non-expected waves in the emerging markets. So that's why we need a very cautious approach in our policy. A new phenomenon is the positive real interest rate environment also in the developed world. So you can see the numbers in case of the major economies. So the real interest rates are deeply in the positive side, both in the US, in the Eurozone, and also in China. So of course, it's a pretty important message to the emerging markets. You have to put more focus on your own real interest rate path. So that's why we emphasize several times in the Hungarian case, we have to deliver a positive interest rate environment nowadays, first to continue the disinflation and to react for those developments we saw in the developed world. I don't want to talk too much about the geopolitical tensions, because I'm not an expert in geopolitics, but of course the geopolitical tensions have a big influence on our life. I think it increased the uncertainty, it increased the volatility in the markets. So I think we have to know that these geopolitical tensions are not only a transitory phenomenon, maybe it can be a more permanent part of our life in this decade. So finally, I would like to say some words about the Hungarian story. And as I mentioned, some words about the Hungarian monetary policy. I absolutely agree with the presentation we saw from Minister Varga. So in the side of inflation, we made a very big step in this year. The Hungarian inflation peaked about 25% in January. It was 9.9% in October. And I think we have a good chance to reach around 7% in December. But in my view, I think we have a good chance to have a number in December below 7%. But of course, it strongly depends on the oil market developments. So that's why I'm emphasizing based on the currently available information. So of course, it's pretty hard to see how the oil markets will react on the geopolitical tensions we have. So all in all, if I compare the Hungarian numbers to the historical evidences, to those evidences in the history where we saw inflation about 20%, we can say that we are on the side of winners. So we are moving in the green territory, in that territory where the countries were able to regain the price stability, were able to regain the low inflation territory. If I look at the current underlying inflationary numbers, I think it's worth to put more emphasis on the month-on-month and 3-month-on-3-month indicators, especially in case of the core inflation. So if I look at the numbers, it's pretty clear that the price decisions changed very significantly in the last half year. So the month-on-month core inflation is the pattern of the month-on-month core inflation is pretty similar to that one we saw before the COVID-19 crisis, and also the 3-month-on-3-month indicators are near to 3% to that level we saw also before the COVID-19 crisis. So that's why I'm saying at the end of this year, I'm quite sure that the Hungarian inflation will be in the range of the regional averages. So I think till now, that was the headline, that the Hungarian inflation is the highest within the European Union. But I think in the coming months, these headlines will change, and the Hungarian inflation will turn back to that territory where the peer countries are. So this chart shows the cumulative price changes since the December of 2022. It's around 6%, which is again in the middle of the regional numbers. So that's the forecast of the central bank we published in September. So I mentioned the December data can be around 7%. Till now, I said can be somewhere between 7 to 8%, but based on those information I saw in the September and October data, and based on that information I saw in the global oil market, I think the end of the year data can be around 7%, but I think, so that's my view, we have a good chance to have a lower number than 7% in December. Some words about the growth. I think as inflation falls, we have a good chance to continue our growth in a balanced structure. So I think we need a balanced economic growth from the next year. And I think we have also a good chance. Why? Because as the inflation falls, the real income and the real wages start to grow again. It started to grow in September. It will continue in the next year. I think the real wage growth can be around 4 to 5% in the next year. The second pillar is the investment decisions. In the last 2 years, especially in the last 1.5 years, we saw the firms and also the government postponed a lot of projects. So looking ahead in a more normalized demand environment, I think these players will start to realize these postponed projects, which can add the economic growth in 2024 and 2025. And the third element is the export side of the economy. Of course, I know well that there are nowadays downside risk in the global demand environment, but on the other hand, we invited a lot of new FDI into the country in the last couple of years, and nowadays these new FDI capacities are turning to the production phases. So it will add an extra boost to the Hungarian exports. So that's why I think we have a good chance to grow in a range between 3 to 4% in the next 2 years in a balanced structure. Some words about the current account position. I mentioned it. I think it's one of the key story elements in case of Hungary. I'm always saying that when the current account position of a country hits -7, -8% range, it's pretty hard to stabilize the markets. And in the last year, in 2022, we were in that situation because the current account deficit of the country was more than 8%. So now, as I mentioned, we can see a big improvement in that field. I think in this year, the current account position of the country can be near to zero and will jump to the positive side, positive territory in the next year. So why I repeated our numbers from the from the last financial crisis from 2008 and 2009, because the improvement we can see nowadays is faster than on that situation. So I think, again, we are in a good track to regain our stability in the external position. So finally, I would like to touch the monetary policy, as I promised. So again, the real interest rate turned to the positive territory in the last 2 months. And looking at the facts we had from the developed world, the positive interest rate is needed to continue the disinflation and to stabilize our markets. So of course, the positive interest rate helps to achieve the inflation target. So if I take into account the very fast disinflation which is expected in Hungary in the coming months and in the coming years, we have a good chance to provide this positive interest rate environment for the further disinflation. In October, the monetary policy entered into a new phases after the normalization phase. So within this new phase, we will focus on the macro fundamentals. As I mentioned, we had many positive signals and positive shifts in case of the macro fundamentals, in case of inflation, in case of current account developments. The GDP started to recover from the recession, but also we have to take into account the financial market developments we have globally. So the goal of the central bank, the goal of the monetary policy is to create an interest rate path that ensures the continued disinflation and the stability in our financial markets. And of course, at the end of the day, at the end of this road, the interest rate environment will support the recovery of market lending in 2024 and stimulate economic growth. So let's say some words about numbers. Of course, again, so we cannot sit back. The inflation target of Hungary is 3%, so the numbers are still above the inflation target. So we cannot sit back because we are flying in a very turbulent weather conditions if I look at the global market developments. So the MNB will continue to use a data-driven and careful approach in their decisions. If I look at the numbers, I can say the incoming inflation data in October was below our expectation, was better than the expectations. Again, the oil prices are lower than previously assumed. And nowadays, the firms will get their own new energy contracts. And I think these new energy contracts will reflect that better energy price environment we had in the last year. The external balance position improved sharply. So I think we will reach the positive territory. We will be very close to the positive territory in this year, if I look at the whole year average. But we have to know the risk environment remains uncertain, so we have still geopolitical tensions. There are global recessionary fears. But if I look at the developments in the last 2-3 weeks, the elevated long-term yields in advanced economies started to decline. And there was also some changes in the persistently tight international monetary policy environment, so the bets on rate cutting appeared on the horizon. Of course, I don't want to overreact these developments, but that's the news. So again, we are flying in a very turbulent weather conditions, so the volatility is still the part of our life. So data-driven and careful approach is still needed. What does it mean for the coming months? I think based on the currently available data, the continuation of the base rate cuts is supported by the current environment. So if I look at the macro data, if I look at the financial indicators, it's pretty clear that the monetary policy will continue the base rate cuts. The current environment supports the continuation of the rate cuts at an unchanged pace of 75 basis points in November. And based on the current realistic scenarios, the interest rate could fall below 11% by the end of the year. So till now, I mentioned it can be around 11%. So based on the currently available information, I think the interest rate could fall below 11% by the end of the year. I always get the question, okay, we have a single-digit inflation now, when the base rate can step into the single-digit territory. So now I can say, based on the currently available information again, the single-digit base rate emerged on the horizon, and I think it's realistic to expect that the base rate can reach the single-digit territory in February 2024. Looking ahead, again, it's still key. The real interest rates remains in the positive territory, so we will deliver that. And when setting the level of real interest rate, we focus on two factors. The continuation of disinflation, so it's a need. The lower the inflation is, the stronger the recovery in the domestic demand will be. And the other elements is the developments in risk environment. So of course, we know we are flying in a very turbulent weather conditions. So now that's why we have to need a data-driven approach, assessing the global market developments, I can say, a daily basis. But that's the picture we have now. Thank you very much for the kind attention, and I also wish very fruitful conversations for the day.
The Minister as well, in front of one of your slides. Mr. Minister, would you mind coming up here, and we'll have a photo with Barnabas in the middle, I think. I think the Minister. Oh, right, okay. But I'd always rather liked the idea of a law firm called Marsh, Varga and Vierhag. I think that would actually go down very well. So this could be the beginning of that, you never know. So where is the photographer? Good, good. So we're looking very positive. While we're doing this, this lectern could be taken away. Thank you. Okay. Yeah, right, get that out of the way, yes, exactly. And make sure it's a very bullish slide behind us, showing all the right things. Interest rates coming down. Oh, no. Good, thank you very much. And thank you, Barnabas, also for telling us about interest rates as well. You gave us some news. Thank you very much indeed. Thank you for taking part. So, ladies and gentlemen, I'm going to invite up now the contestants in the panel. So you know who you are. We've got 6 gentlemen coming up here now to take part in the panel about the macroeconomic outlook. Jeff, could you sit on the outside there, please? Pavel, if you sit there. Yeah, there. So Jeff on the outside here. So Rainer, please, if you sit in the middle there.
Hey,
David, if you could sit on the outside.
Yep.
Left. We'll have Thomas also sitting in the middle here, and then Radovan. There we are. So everybody's assembled here. So I think what we've heard just now, ladies and gentlemen, has given us a very good entree into this panel, which is going to be about macroeconomic developments in the region as a whole. We're not going to be speaking about individual countries. And so I can introduce now the panel to you. Also, you might notice that Paweł Kowalewski from the National Bank of Poland, the Narodny Bank Polski is here. Unfortunately, Marta Kreitley, who's the Deputy Governor, couldn't come, but she's sent in as a late substitute. Paweł is very keen on football, and he is the late substitute. And she sent me a message saying that she thinks that Paweł is an excellent replacement for her. So that's one change in the program. I'm going to introduce the others in the order that they'll be speaking, starting off with Jeff Gottlieb. He is the senior representative for the whole region, based in Warsaw for the International Monetary Fund. We have on my left a person who's a household name, who's not only the chairman of the Erste Bank here in Hungary and CEO, but also the president of the Banking Association, Radovan Jelezity. And he, of course, is also a person who has got Serbian nationality, and he was for some years the governor of the Serbian National Bank. So you're a perfect person to be speaking about this enlargement that we're talking about. David Lodge, he's in the best tradition of quietly spoken Irish men working at the European Central Bank. We all remember Patrick Honohan, who of course was the member of the Governing Council for quite a number of years. They used to say about Patrick Honohan, who was the governor of the Irish Central Bank, he was the bard, he was the Shakespeare of the European Central Bank. And I'm sure you're keeping up that tradition, David, as one of the staff members. Rainer Martin, who is Executive Director of the National Bank of Slovenia, also with a very strong background. Slovakia, sorry. Also with a very strong background at the ECB. Slovakia, now one of the newer members of the Economic and Monetary Union, but you've also, of course, had a stint at the Austrian National Bank. And that brings me on to Thomas Schlachik, who is one of the senior economists looking after the whole CEE region at the Austrian National Bank. So we've actually got a lot of people on this panel and relatively little time to speak about it. So I'm going to ask you to be fairly snappy. So Jeff, you can set a very, very good standard, I think, by kicking us off. You are the person, after all, who's got responsibility for looking at the macroeconomic progression in the region. We heard a lot about resilience. I think that was actually very, very encouraging, what we heard from the Minister, but also from the Deputy Governor, about the resilience of Hungary. Also, very notably, the current account turning around, and it seems as though the recovery now from the upheavals of the last couple of years is going to be actually much more stable and sustainable than what we saw in the period after 2008. So tell us how it looks from your vantage point, from the International Monetary Fund's point of view, Jeff.
Sure. Thanks, David. It's very good to be here. For the outlook, I think it's a moment of turning points, and I think there's 3 turning points that I would focus on in particular. The first is on growth. We've had a big slowdown in the region. Globally, growth bottomed out at the end of 2022. Growth is bottoming out likely in the middle of this year. We're starting to see a recovery in this region in Q3, but it looks relatively weak. That recovery is driven by recovering real wages. So you see stronger household income amid still strong employment. We also expect inventories, which have been a major drag on growth in recent quarters, to start to turn around. Meanwhile, investment is a bit of a mixed picture in the region, depends in part on how much is happening on EU flows, and external demand still looks weak, particularly for countries that are reliant on Eurozone and/or China demand. So we see a recovery, but mostly below potential next year. So I think growth turning around is one turning point.
Jeff, could I just ask you at that juncture something that Barnabas said, very significant. I think he gave us an outline of what the monetary policy will be in Hungary in the next few months. The IMF has been very solid about the need to keep up the fight against inflation. About 10 years ago, you were a bit soft on that, I think, but you've turned very hawkish lately. Are you advocating interest rate cuts in this area?
So that's the second turning point.
Good.
On inflation, we've had one turning point already, which is that we're no longer in a period of rising inflation, we're a period of declining inflation. But when you look backward, there's a very high degree of correlation across countries in the region on inflation. Obviously, Hungary was a bit separate, but what the turning point that I'm referring to is we're moving from one driven by the supply side pandemic and energy shock period of inflation, in which countries were facing very common shocks, to one which maybe more a function of underlying pressures. And the core macroeconomic driver of inflation is wages. And so that's what we are focusing on in this next period. If you look across the region, you still see nominal wages growing much faster than productivity, which is rising unit labor costs. And those rising unit labor costs are a rising labor cost for firms to deal with. Firms have 3 choices. They can reduce employment, they can reduce profits, or they can pass on further price increases. So in this next stage, what's so important is that demand remains sufficiently weak that firms are not incentivized to pass on those price increases.
So that means you're not advocating interest rate cuts for the time being?
There's 2 things that we're looking for in particular before we see significant loosening. One is just more progress on core inflation overall. So the recent data on core inflation is absolutely good. Over the summer, including the data that Deputy Governor Barnabas showed, core inflation just wasn't sticky. So if you look at month-on-month, rolling 3-month average, annualized, you just don't see high core inflation. But still, on an annual basis, core inflation is high, and there's still further pressures for wages. So we're looking for more progress on core inflation, and a reduction of risks on the side of wages and expectations.
Okay, well, look, let's stop you then. Let's go over to Radovan to get a point of view from a banking perspective, but also a central banker as you've been. Are you comforted by the message that you heard this morning from our two leading Hungarian policymakers, and do you think that's susceptible to be repeated elsewhere in the region? You do, after all, have a regional hat here with the Erste Bank. And then bringing us onto this issue about the enlargement towards the Western Balkans, you know a lot about that. You have got Serbian nationality as well as your Hungarian nationality. Are you optimistic we can hit this target of 2030?
Let me first maybe just relate a little bit what Jeff has mentioned about the inflation trajectory here in Hungary.
Can everybody hear you? Because I don't think you've got a microphone, have you? No, everybody else has. But always a microphone in the house that we could give. But I think you've got a loud, commanding voice. So why don't you carry on speaking, and then you can get fitted up in the meantime. Or is there a roving microphone? No, no, we missed it. Well, in that case, let's go over. We'll keep to the numerical order, alphabetical order. Let's go over to Pavel, because he's K, and so he comes after J, and so he was going to speak. And just turn your attention, ladies and gentlemen, away from Radovan as he's been mic'd up, and we'll go over to you, Pavel. The same question to you, basically. Do you think that this picture of stability and sustainability we've heard from Hungary, is that capable of being played out across the region?
The answer should be rather yes, hopefully yes, because who else would be interested in the lack of stability? But the question is whether we are facing sort of a wishful thinking, or we will have to face a crude reality. Actually, as far as our bank is concerned, I guess that we have rather a realistic point of view when it comes to the disinflation. We are quite aware that it is a gradual process. That is why, according to our forecast, we expect to reach our target of 2.5% in the last quarter of 2025. But please don't be surprised with that, because I would like to use an opportunity and to focus a little bit on our tradition of conducting monetary policy. After all, I pay a lot of attention to such words like tradition and national sensitivities. In the 90s, when I was starting my research activities as a relatively young fellow, I remember that throughout entire 1996, 1997 and 1998, we were under enormous pressure that we were lagging behind inflation. And indeed, we struggled quite a lot to bring inflation to levels, to a single-digit levels, yes? And we were behind many other countries. And obviously, in the 90s, it was a time when there was some sort of a race amongst the Central and Eastern European countries. And when it proved somewhere in 1997 that even Russia managed to outpace us, and we were lagging behind Russia, there were some discussions about...
But you're still a bit behind, aren't you? And yet, just taking us through to now, Pavel.
No, but I just want to tell you,
yeah.
Please let me finalize our point. We managed to bring the inflation, but on a more sustainable basis. Right now, who cares about the level of inflation Poland used to have in the 90s? Everyone is impressed by our real convergence, that we managed to close the gap, yes? So I guess to say that sometimes it matters, pays off, to have a certain delay in combating inflation in order to make it sustainable.
But just tell us, just for a moment, about interest rates, because we did have this very interesting statement from the Deputy Governor just now. Now, Poland has already started to cut interest rates. Tell us what's happened to the zloty since you did that.
Well,
which was about a month ago, wasn't it?
Yes, this is a classical example that whether we like it or not, and it is in line with your former Chancellor of the Exchequer, Kenneth Clarke.
Which one? We've had a lot. We've had 6 or 7 in the last 6 years, actually. So Britain has had more Chancellors of the Exchequer and Finance Ministers than Italy has had in the last 10 years. So you have to tell me which one you mean.
Kenneth Clarke said that you can't separate politics from the economics, but for us it proved to be very painful, yes, because in early September we really decided to offer a very aggressive relaxation of monetary policy by cutting the rate by 75.
And just tell us quickly what happened to the zloty.
There was a short depreciation of the zloty, but all of a sudden when the markets learned the outcome of our elections, the zloty managed to reverse almost entire
and why was
losses.
that?
What can I say? This is just my assumption. Obviously, it's my.
I think the idea was that money would be flowing, wasn't it?
There was one. Then there is perhaps an assumption that the government, which is yet to be formed, because no one knows what will happen in our country, may come to an agreement with the EU as far as the new wave of EU funds, but.
Well, I don't want to get you onto the political terrain, but I did want to just mention that because there are some similarities perhaps with the Hungarian situation. Now, so Radovan, you can now be even more loud than you were going to be, and also you have the ability to have thought about the question now for several minutes.
I thought maybe as a sponsor we paid only half. This is why I'm not getting the microphone.
The money has come through into the bank account, I know.
Okay. So I think 6-7 months ago we were not so smiley about the Hungarian inflation when the rate was about 25%. In the meantime, actually, there is only one big question in Hungary. What should be the speed? Inflation is full under control. A great thing has happened in Hungary. Central bank started to lower interest rates. And what happened to Hungarian forints? It's strengthening.
So it's a similar story to what they've just had.
Which is a fantastic thing. You know, there were many times that we increased the interest rate and the forint weakened. Now,
well, of course, it's also a contrast to the euro. When they unexpectedly raised interest rates in September, the euro fell. So there's a lesson there, isn't there?
So, and it's not only that they lowered, but basically the vice governor also gave a trajectory. He basically told till February. With a pace of 75 basis points, he's expecting a single digit.
And you didn't know that before, did you, Radovan?
Well, we did a calculation already like that one, yeah. So I think the biggest question is now Hungary, how strict they are going to be on this road, meaning disinflation. I do hope that there are not going to be many challenges on this downward slope.
Well, Barnabas did keep emphasizing we are in very stormy waters. He mentioned the word careful, I think, about 16 times. So I think that, from that point of view, is actually very welcome that he did give that approach.
That's true, but the biggest question is going to be once in December the inflation rate comes down to 7% and the reference rate is still going to be double digit, you know, what's going to be then the mixture of politics and central bank, fiscal policy.
Yes, well, we'll leave that to the future. Could you just say a few words about the enlargement, which is a bit of an obsession of mine, as you can see?
I love it. I hope that you will go and tour other countries about enlargement as well. You know, the joke is in Serbia that every year approximately 50,000-60,000 people are joining the EU because that's the number of people who are leaving. And the same thing you can say in Bosnia, the same thing in Northern Macedonia, etc. I think here the question is mainly how, and I think here the issue is to which extent the current function of the EU has to be changed.
You mean the voting rights, the accession to funds?
The accession finance, etc. Because obviously you cannot enlarge this and assuming that everything will be functioning.
I mean, I really do think there's an opportunity here for the CEE region to put some thoughts on the table about changing the structure of the EU. There has to be a bargain between voting rights and access to funds and to markets. And I think there's no reason why you or your bank or others couldn't actually put some thinking together. I don't think you have to wait for Brussels. I think the region can do something.
If somebody has vested interest in those countries joining the EU, it's definitely Erste and many other banks which are active players, and also some Hungarian companies which during the last 2-3 years explored the possibility, because let's be frank, Western Balkans is off the political agenda of many of the countries. That's where active players there. And it's basically with the missionary for accession, with so to say, a lot of friendship agreements that Hungary has on the Western Balkans. It is basically one of the countries which is put on the top of its agenda.
That's right. And so when I said at the beginning, this Budapest would be a place where serious people come to talk about serious topics, I mean that topic. I don't think you should wait for the European Commission to come up with their proposals and their plans. You're old enough and grown up enough and mature enough and experienced enough as a region to put forward your own ideas and then let that be discussed. So let's go over to you, David, at the European Central Bank. You've got this great task of trying to manage some adoption process for other countries. One's also got to make sure that the countries that are in already behave themselves and set a good standard. Could you just tell us how you see the outlook? Because there's still 7 countries outside the euro area, even though they're all members of the European Central Bank as being members of the European Union. Could you just give us a bit of a roadmap to anything that might be happening, say, over the next 10 years for the existing EU members? And then, just to make your job even more difficult, there is this possibility of other countries joining, so the number of adherents in waiting might increase. Just tell us how you manage this very big task.
No. Well, I mean, as you know, all but one of the existing members of the EU have the obligation to
Denmark
join,
being the odd one out.
Have the obligation to join the euro eventually. But and from the European Central Bank side, we would always welcome new members. Croatia joining was a real fillip. Good to have an extra member. It shows again that the project has people aspire to join the club. In the end, though, it's a political. It really depends on the politics. It's something the European Central Bank would step back from. We'd wait to hear when countries are ready to join. What we do in a more bureaucratic way is we have a convergence assessment every 2 years. We look at the convergence process of the countries that are outside the EU and judge them against the standards. And those standards are set down in the treaty. That countries need to have proven exchange rate stability. They do that by joining the exchange rate mechanism 2 years prior to joining. They need to have shown price stability, to have inflation rates in line with euro area averages or the best performing.
Just from a purely economic point of view, leaving aside the politics, which we know are very difficult, Poland being one of the countries, what kind of countries would you want to join? Because we've heard some very good pieces of information from the finance minister about the structure of the debt. You want reasonably solvent countries to join, don't you? That countries which are also well in line with the Maastricht criteria. So countries which have got a reasonably low level of public debt, which you do tend to get in Central and Eastern Europe, would be on paper very good candidates, but they may not want to join you. It's this old Marx saying, not Karl Marx, but Groucho Marx, I wouldn't want to join a club that would have me as a member. They may fear that you want to bring them in so you can mutualize their relatively low public debt levels.
Yeah. I mean, I would slightly argue with the way you characterize that. It's not a choice from our side. No, it's set down in the treaties. Everybody knew what they were doing when they joined up to the EU, and we follow the process as it emerges. You're definitely right that the fiscal position is very important. That's why one of the criteria in the treaty is fiscally oriented. Any country with an excessive deficit procedure can't adopt the euro at the point when we make the convergence assessment. And that has two elements. It's not just the deficit, but it's also the trajectory of debt as well. And you're absolutely right. We've learned in the euro the first decade that the dangerous dynamics that can build up from excessively optimistic expectations, loose macroeconomic stance that stores up problems, and we've been dealing with those in the second.
I think that's been very salutary, that weight of history. So we're now going to go to you, Rainer Martin, speaking for Slovakia, although also with an Austrian hat on. Also, if there is anybody who wants to raise a question from the audience, then I'd like that to happen. I don't know whether you need a microphone or you can just speak loudly, but we would like to have a bit of audience participation. So just try to catch my eye, like in an auction when you're bidding at Sotheby's. Just raise a hand or something like that, and you won't be buying an old master, you'll be able to ask a question. So, Reda, two questions to you, really. One is that do you buy this relatively positive picture, which we had painted, and it was not in any way denounced by Jeff, although he's being very cautious on interest rates. You buy this picture of a stable and sustainable growth, recovery in the region as a whole. And then perhaps you'd like to say a few words from the Slovakian perspective about the enlargement process, not just the big enlargement that I was talking about with Radovan, but also the smaller enlargement, the euro. You've got this large neighbor, important neighbor, Czech Republic, yourself. You're like Siamese twins that have been separated. You might like to give some advice to your Czech neighbors.
Okay, so on your first question, I would very much share that view. I mean, we're seeing now a recovery. It could be stronger, indeed, but we're expecting growth to increase to 2.7% next year and then 3.4% the year after. Inflation is now going down, and I think it's sustainably going down. We probably have now reached 7.1% on the latest monthly figure. So that is all looking quite good, also very resilient labor markets. So I would share that general view very much.
Do you buy the idea that there will be a recession of some sort? Germany is going through a flatlining process. It's not really a recession. The thought that we had before, if it is a technical recession, it's going to be fairly job-rich. How would you put that into words, this rather minor recession that is expected in Germany? Will that have an effect on your region?
Well, of course it will have an effect on the region, this is clear, because the trade links between Slovakia and the other V4 countries and Germany and Central Europe are very, very strong. This is clear. So if there would be a severe downturn in Germany, it would have an impact, no doubt about this. But let me also get back to your second question, which is about the euro, and I understand also the experience of Slovakia with the euro. And that was actually a very positive one. I mean, if you think about the recent increase in inflation in the region, we also had inflation that was way too high. But within the V4 group, it was still the lowest peak, so to say. And also we had this at a far lower level of interest rates than the other countries in the region. So from that perspective, I think it served us very well. And it facilitated certainly the macroeconomic policy making.
On the big enlargement, 2030 and so on, the Austrian National Bank, we're going to be talking to you in a moment about this, has done a lot of research on the CEE region. You were part of that. Would you agree with me that think tanks, research centres, central banks in the region could actually be a bit more creative and put some ideas forward about what needs to be done from a political point of view? There needs to be a realignment between the voting rights on the one hand. There needs to be some cherry picking of some sort, I would say, for this. It's not enough just to have long transition periods. I think we could really welcome some thoughts, which I know the region as a whole has for this. What do you say to that?
Well, I mean, I think this is something that needs adjustment on the side of those countries that will join or aim to join, and also on the side of the current member states. This is very clear, and I think collective thinking on that would be very welcome. In fact, actually, together with Thomas and the Austrian National Bank, we had a conference right yesterday where we talked about these issues, so the financing requirements to achieve the convergence process and the accession
Well, you've set Thomas up perfectly now, haven't you? Because that's exactly my point. I know you do have these regular conferences, don't you? You've got a very large batch of very able economists looking across the whole region. I think the regional central banks are very grateful for what you do, actually, and you've got a tremendous outreach. So do you have an answer to this formulaic question? Ukraine is clearly a very large, very poor country with all kinds of structural problems. Accommodating Ukraine, have you got a solution to that?
Okay. Of course, neither one.
You can go on until after lunch as well on this.
This is really a little bit of tough luck if your last name starts with S, right? And it goes in alphabetical order, and then everything has been said, and you are asked a question that you did not prepare for.
No, but you have prepared for it, I know. From a spiritual point of view, you're there. You just have to get it over the line.
Okay. on that question, I would refer you to our conference. I'm not really an expert on Ukraine. I think it's a very complex issue. We had a conference, as Rainer mentioned just yesterday on this. It was recorded, so please feel free to refer to that. I would like to pick up a couple of issues that have been mentioned here, if I may. Starting with Rainer, I think it is a very interesting natural experiment to compare the inflation performance in Slovakia and the Czech Republic. The former one is a euro area member, and the other one is not. And if you look at the inflation path, inflation performance, not only over the last 2 years, where inflation has been highly correlated between the two countries, they are also structurally very similar. So this is really a very interesting natural experiment. So the inflation performance has been very similar, highly correlated in both countries, and actually in Slovakia, as Rainer said, inflation was even lower at the peak than in the Czech Republic, and this does not hold true only for the last 2 years, but pretty much since the euro adoption in Slovakia. So I am, of course, not in the position to argue in favor or against euro adoption. This is not my role, but I think it's a very legitimate question to ask what is the value added of autonomous monetary policy, especially in high inflation times like those that we are experiencing now. This is not really just my question. Even senior representatives of the Czech Central Bank are starting, I heard it from them, are starting to ask this question.
Well, thank you very much for making that point. You have set a good standard, I have to say. That actually brings me onto you, Pavel, because of course that's a big issue for your bank at the moment. You are also weighing this up, aren't you, from a purely economic point of view. As you say, what are the advantages or disadvantages of an autonomous monetary policy? And you're putting on a little seminar on this next month, I believe. So could you just tell us, I know it's very finely balanced, tell us the situation just from a purely economic, not a political point of view, an economic point of view in Poland. And then let's have a question from the audience, from somebody after that.
Well, so when it comes to our country, I guess that 2 issues must be taken.
Can everybody hear you? You seem to be speaking a bit slowly.
Well, I will try. So, all in all, just let me perhaps finalize it in the following way, coupling 2 issues in one subject, our monetary policy and the perspective of joining the euro area one day. Unfortunately, here we do not have Czech representatives, but when it comes to explaining inflation where Central and Eastern Europe had to struggle with that inflation, I really like the explanation offered by the Czech National Bank. And let me explain you in more detail.
Look, I'm asking you about Poland.
Well,
we don't have all day either, Pavel.
Yeah, but I just want to summarize and draw conclusions for the regions. After all, the inflation which hit Central and Eastern Europe had to be perceived in absolute terms, not in relative terms. After all, the price of commodities. And imagine, if we pay for a lunch €1 as a result of higher oil prices, so if in Central and Eastern Europe you pay for your lunch €5 and you need to add additional euro to that lunch, so it is 6%, so the inflation is of 20%. In richer countries where you have a full real
so you're talking about the
convergence, the inflation is being reduced to the 10%. So I guess this is one of the reasons why we are so careful in launching any discussions about a premature entry into the euro area and focusing so much on real convergence.
Jeff, do you have a view on that? And then let's have a lady, Mara, I think you should put the question next. So give the lady a microphone. I want to get a bit of diversity from the audience. But Jeff, you say your piece on this first. But can we have the microphone, please? I'd like some diversity from the audience. Is there a microphone? There is one. Yes, good. You've got one. But first of all, Jeff.
On the euro.
Yes, that's right. Getting ready. Would you welcome that? Are you advocating this? You can't speak for the ECB, obviously.
Okay. I think our general view is that the types of reforms that you do to get ready for the euro are good reforms to do anyway. And so there's not really a difference between preparing for the euro and not. I think that in some cases, if you have an overly rigid exchange rate already, you've already lost some of the benefits of a flexible exchange rate, and then there's much more net upside to joining. In Poland, they have a very flexible exchange rate and have some of the benefits of an independent monetary policy.
That's right. I think we have seen some of that, and as you've just explained, it goes up and down, doesn't it? Radovan, you wanted to say something about that before we go over to our audience.
I mean, one of the strongest side effects of the strong inflation that we have seen in Hungary is that basically the euro is implementing itself. We have a continuous increase of euro deposits of the private individuals. More and more basic materials, milk, meat, etc., is defined in euros, and they just take the exchange rate. And again, this is only within the country. Then, of course, you have a huge exporting market, etc. So basically, either you like it or not, euro is implementing itself. So
as it was already in Croatia. Croatia,
exactly.
That was a very good point, isn't it, really? And it's happening also in Macedonia, Montenegro, Albania. So it's quite right. I mean, David, you must be aware of all that. Maybe you're secretly organising it all. I don't know.
You're
surely not. Surely not.
This is not the time to reveal the secret.
No. So, Mara, let's have your question now, please. Yes.
No,
it's a gentleman. Okay, I wanted a lady, but
she works for Goldman Sachs, but I don't. But I am an American.
Right. Okay. Good.
So
good.
this
You're
is
American. Can you stand up so everybody can see you?
Fine.
I think it's important that people can see real live people in the audience.
I just want to ask a question about capital markets union. Does that not increase trade flows, capital flows, growth perspectives? It's been a football for far too long in Europe.
Yeah, okay, well let's have, I think, Rainer, since you've got experience of a lot of different central banks, you can answer that question about capital market union, because it strikes me that's really essential for Europe.
Well, I think the central banks would pretty much all agree that the capital markets union would be a very good thing to have, but it's not for the central banks to decide about this. I mean, this is in the political process of the European Union. And in fact, it has been bogged down by a lot of special interests by a lot of different member states. And I think this is...
Are you talking about, say, the stock exchanges, for example, that don't want to merge their
securities
activities?
and stock exchanges. I mean, as you know, it's a very complex arrangement, right? The project would be extremely helpful for the euro area and for the European Union, no doubt about this. And I can only say my personal hope that this will be now restarted and taken more, forward more swiftly.
It's essential also for this greening of Europe that we're going to be talking about a bit later on, because you need a market solution there. Yeah. Does anybody on the panel have anything useful to say about this, rather than it's all very complicated and it's all going to take a long time? Yeah, please.
Yeah, let me just give you a personal experience. Yeah. I have shares in Erste Bank in Vienna. I get my dividends. Every year, the Austrian fiscus takes immediately 27.5% off. Then the money is transferred here. Then the Hungarian fiscus takes off a little bit. Then, and of course, the Austrians are telling me, you can, of course, come back and reclaim your taxes. Yeah. The user manual is 15 pages long. Yeah. And voila, this is democracy. You can do that. I mean, just to give you a couple of examples, how it works in reality. Yeah. So. Nice political talks, nice plans, nice milestones, but when the rubber hits the road, it's basically Austria first, Hungary first, and all the countries are basically first for themselves.
And then there's going to be a new European Commission next year. It'll take them time to settle in and so on. So unfortunately, it's a big sense of déjà vu. Anybody else got anything useful to say on that? David?
No, I mean, so I would entirely agree that it's extremely useful. And I think the classic way to understand why it's so useful is to compare to the US. So if you look at the US, the size of the domestic market should be very similar, but the financial integration is clearly lacking. And you see that appear in the capital markets, in the funding. Venture capital is much weaker in Europe, funding for projects. And it's not just the green transition, it's also digitalization and technology. There are, not to do down Europe, there are strong strengths there, but we're well behind the main competitors.
Well, it also has very strong structural effects. For instance, the fact there's not been any proper, or very few anyway, cross-border takeovers in the western part of the European Union. There have been in other parts. I think it's holding back the size of the banking market. So all these things are linked together. Are there any other members of the audience, either forced or unforced, who want to ask a question? I mean, otherwise we'll carry on very happily just speaking amongst ourselves. Something I wanted to get onto is this issue about resilience. And I was very struck by what the Minister said. Thomas, perhaps I could put this to you, because you've got a vast amount of expertise at the National Bank looking at energy markets. This Hungary, a landlocked country, making big efforts now, it seems, to diversify its energy sources. Could you tell us a little bit about the region as a whole in terms of energy dependency? Because we've all seen how dangerous it can be to be dependent on one major source. So can you tell us anything about resilience?
Yeah, I have to say, David, I feel a little bit like in my high school leaving exam, you know, where we had been given 25 sets of questions. And
Resilience was
I
among them.
I had memorized 24 of them, and I was asked the 25th. So,
But that's the way you get better, you see, by getting
exactly.
more and more
So thank you very
questions.
much for challenging me on another topic. Yeah, energy markets in, and I'll actually then try to bridge to another topic, another structural topic. Of course, countries in the CZ region, several of them, are still very energy intense. And looking ahead, with respect to the green transition, what they'll have to do is they'll have to decouple growth from their CO2 or greenhouse gas emissions. What is interesting is that they already managed to do so. There are only very few countries in the world, about 30, that did manage to decouple growth from their energy consumption. And as always in economics, it depends on what you look at. So if you look at the 1990s, this is where out of those 30 countries, maybe half of those are countries from Central and Eastern Europe, where they really managed to grow very fast and at the same time to decouple or reduce their greenhouse gas emissions. This is, of course, to a large extent for the low-hanging fruits that they were able to pick back then.
Say closing down lignite power stations and things like that, you mean?
Exactly. So if you look at a more recent period, say over the last 15, 20 years, then they all of a sudden, most of them drop out of those 30 countries. So this is going to be a challenge. Now, the other structural issue that I wanted to bridge to is the automotive industry. And you might be wondering why a representative of a central bank, especially of an Austrian central bank, feels obliged and competent enough to talk about the automotive industry in Central
I'm
and
not
Eastern
surprised at all, because I know that's one of the things you look at very carefully.
Yeah, actually, one of the reasons is that I come from a town in the Czech Republic, in the north of the Czech Republic, where the very first car was invented by Ferdinand Porsche more than 100 years ago, and it was an electric car, by the way.
You have a special car park at the Österreichische Nationalbank for your Porsches.
Yeah. The other reason is that about 2 to 3 years ago, we were asked by our governor to look into this structural issue of the automotive industry, because it plays, of course, a very prominent role in many of the Central and Eastern European countries already, and in others like Hungary and Poland, the role of this industry is going to increase. So we did that together with the EIB and the Vienna Institute for International Economic Studies. And I think I would highly recommend you to look at that paper, because it's very prophetic in several aspects. And one of the, I could conclude the paper with a phrase or a quote or a paraphrase of Giuseppe di Lampedusa's novel The Leopard, where he says, for things to stay as they are, to remain the same, things have to change. Everything has to change. And one of the conclusions that we drew was that it is highly important for the countries to provide sustainable and affordable sources of energy looking ahead. So this is one of the lessons to be...
You've very successfully squared the circle of that question, so thank you. And I think you've also shown that central banks can make a major effort actually in looking at some of these structural transformations in the real economy. So David, I know you wanted to say something about that. Maybe you as well, you looked as though you did remember. First of all, David.
I mean, I think the energy security issue has kind of had two macro consequences. So actually, Europe as a whole has shown really remarkable resilience, I think, in adapting to this huge energy shock. Both by reducing demand, but by also seeking alternative supplies, and that's been really a remarkable transformation. What it's left us, though, is that we we've reduced our vulnerabilities to Russian pipeline gas. That's been clear. But we have now got another potential vulnerability, which is we're much more exposed to LNG markets, global LNG markets. And I think that means that Europe as a whole will be facing potential for shocks. We saw that Baltic pipelines issues in Australia. We're going to be much more plugged into global markets now, and that means that the potential for volatility in our energy prices may have increased.
Do you think there should be a department at the ECB looking at geopolitics? Because it's very interesting. You have noticed maybe that Ben Bernanke, the former chairman of the Federal Reserve, is going around trying to put together a paper for the Bank of England to advise them on how they should adjust their forecasting processes. And he's actually suggesting that more geopolitics needs to come into that in somehow. Are you doing a similar exercise at the ECB?
I don't know whether we're looking for bureaucratic structural change along those, but there's a big research agenda that's looking at the implications of this new geoeconomics, the extent to which geopolitics is shaping trade, financial relations as well, and it's clearly going to be shaping the environment.
Thank you, Radovan. And then Pavel's got a question to put.
I just want to relate a little bit. We have seen a picture from Minister Varga that Hungary has built up a capacity of 40 billion cubic meter of gas being able to be imported from different routes for a country that needs 9.5. Still remember in 2006 when the first fight erupted between Russia and Ukraine, things got only political, and Serbia had no storage, and in Serbia from one to another day the gas disappeared. Hungarians helped, thanks God, because they had storage. So when you look, even these days, everybody who has a pipeline is blackmailing. We thought it's only Ukrainians. Now it's Bulgarians.
Yes.
Tomorrow it's going to be somebody else. This is just amazing. That's even within the family, if somebody has a pipeline, he tries to jump on that, saying, hey, we need a little bit more money.
Well, it contravenes the whole idea of the European Economic Community, the European Union, because I do remember there was something in the 1990s and the 2000s called the European Energy Union, and that should be absolutely countering that kind of behavior.
Just imagine, look at the number. You have to build up a capacity of 40 billion in order to sleep peacefully and hope that somewhere you would be able to buy 9.5. 4 times more capacity.
Huge insurance.
Because you just have no idea who is going to blackmail you tomorrow for gas.
No, thank you. And also, I felt the storage capacity in Hungary, he was saying it's the fourth largest.
6 million.
That's also an area where, of course, you can build in some hedging. So, Jeff, you've got something to say, and then Pavel.
Yeah, just very briefly, I think the reason we're speaking about resilience is because we're worried about fragmentation. And there's 2 types of fragmentation we're really worried about. One is in commodity markets, which is what we've seen in Russia's war in Ukraine. And the second is fragmentation in manufacturing, which is what we mean when we talk about nearshoring. Nearshoring would be probably the result of fragmentation in manufacturing. What makes commodities unique is that it's very hard to relocate production, and demand tends to be inelastic. So what we've seen in Russia's war in Ukraine is fragmentation in commodities, and we've gotten exactly what you would expect, which is higher inflation, much more volatile prices, and the net impact on growth can be less than you would expect because there's winners and losers. On nearshoring and fragmentation in manufacturing, we really haven't seen much evidence of that in the region. The biggest data point on that front is the plummeting in FDI into China, but we are seeing that relocation of production is still a difficult issue.
But just on that point about China, do you also see at the IMF, you talked about relocation, an upsurge in, say, Vietnam, India, Indonesia, because of course that could be quite an interesting countervailing force, could also be disinflationary if you find cheaper centers outside China.
Sure. The counterpart of changes in China seems to be a rise in manufacturing and exports in kind of alternative Asia. It's just that we're not really seeing it in a change in composition of manufacturing exports or FDI in Central and Eastern Europe. We've seen resilience, but we haven't seen a surge.
No, thank you. Pavel, you wanted to say something.
Yes, one question referring to the question coming from the audience.
Is there? Yeah,
No, I mean referring to the questions we had from the audience regarding capital markets union. How can we have capital markets union if we right now see some reversals as far as the single monetary union? I refer to the decision by Germany to remunerate government deposits with a totally different rate than the other members.
i.e. 0.
Yes, and the question is, according to me, ECB was very lenient as far as this reaction was
I know, but they actually did it in harmony with two very important central banks, Cyprus and Luxembourg.
Yes, but the question is, would ECB
totally
also be
harmonized,
full of
isn't it?
understanding had other countries, for instance, Spain or Greece, introduced similar decision?
Well, that's possibly something for the coffee break, I think,
Okay.
to discuss that. Now, we've got 3 minutes and 33 seconds left, so I want to ask all 6 of you, starting off, I think, with David. Always good to start with an Irishman, because they'll be very eloquent, and you'll set a very high tone. In a year's time, we're going to be sitting here having another conference. What would you like to see happening in this region of Central and Eastern Europe over the next year that would give you confidence, let's say not so much as a central banker, but as an investor? Let's say you were staking your life savings on areas of Europe. You know, what do you want to see so that you bring your savings and your grandmother's savings and your wife's mother's savings and pile it all in the CEE region?
Well, I mean, I think we heard it in the keynote speech. The good central banker in me would always worry about inflation. And if we're looking over the next year ahead, the key question is what is going to happen to core inflation, what is going to happen to wages. And you know, next year, the ideal scenario is that wage growth, although high, has started to moderate, and that it's starting to come down, the wages are starting to be more in line with productivity.
Following what Jeff was saying,
Exactly,
basically.
Question number one. The second question is the extent to which firms are also absorbing any wage increases, because there will be some, you know, there has to be some catch up in real wages, but the extent to which firms are able to absorb
and not pass it on to the
and not
consumer.
pass it on to the consumer. And those would be the two kind of key things we'd be looking at over the next year. And you know, if that's all worked out next year, then that would be
Well, thank you. That does set a
scenario.
very high standard. Thomas, what would be your answer to this?
I would perfectly subscribe to that. What I would like to see in 1 year, but I admit that it might be more of a wishful thinking, that the countries get on a sustained, robust growth path again, and that disinflation continues towards targets which are currently still very far out of reach. So I have a much more downbeat view than what we heard in the keynote speeches today when the Vice Governor Varga was speaking about the lights at the end of the tunnel. I'm not sure whether this is not a train. So,
no. Well, thank you for being so cautious. He actually said lights. I noticed he used the plural, lights, several lights. So several trains coming towards you.
There are several cyclical reasons and risks, as well as structural risks and reasons for which this inflation might not continue as we are expecting.
Okay, well, thank you for being so cautious. What do you say, Radovan? I'm sure you're much more upbeat.
Well, the best grade in Hungarian school is 5. Yeah? So I would like to see 5% inflation, 5% economic growth. We should get at least 5 billion from the EU that we are long owed to. And I would like to see the 5 Western Balkan countries to have concrete negotiations.
Well, thank you. And maybe Hungary beating England 5-0 in the next football
We did already once, 4-0. So after that.
Everybody remembers, Pavel in particular, the 1934 game, the golden Magyar. Pavel, if you 1934, yeah.
54.
No, but in 1934 there was also a game. Look it up. I know you're obsessed with the 1950s, Pavel. Tell us what you think should happen in the next year, in a fairly short way, please, because the clock is ticking.
Hopefully, a materialization of the forecast we have done here, but unfortunately there is one issue we need to take into consideration, and so far we haven't. The question is whether we will be able still to enjoy the so-called peace dividend, which helped a lot to keep great moderation.
Not the peace.
Peace dividend.
No,
Peace dividend.
You're not talking about the party.
You try to exploit my wrong pronunciation in English. Thank you very much, David. But you are, how should I say, extremely pushy. But all in all, some jokes apart, peace dividend cannot be taken for granted, especially for a country like Poland. The war in Ukraine does not seem to come to a close end. And whether we like it or not, we will have to take it into consideration. I'm very sorry to disappoint you with this forecast.
No, I think you're right about that, and that we mustn't close our eyes to the fact there's still no outcome there, and the outcome could be very, very bad. So, Rainer, on that positive note, what are you looking for in the next 12 months?
I would say 2 things. One is, of course, inflation to stabilize, that this becomes really a disinflation process to be completed. And the second one is a resumption of the convergence process. And for that, what we would need is more structural reforms, at least in Slovakia, because our key problem at the moment is a lack of labor, and it's a lack of skilled labor. And I think we need to go in that direction, and then I think growth.
And countries are more able to do that, aren't they, if the environment settles down, which, of course, as Pavel has just reminded us, is by far from being certain, because you do need time and space to do reform. So Jeff, I know everything has been said, but you have this Schlusswort, the denouement, so you're able to take this and throw the story forward.
I'll go in a different direction. I would like to, it's probably a lot for 12 months, but I would like to see a more coherent strategy for dealing with the demographic problem. This is the issue that is raised in every country I go to. It's the aging population is a problem not just for potential growth and inflation, it's also a relatively heartbreaking issue that parents don't think that their kids often have futures in their countries. So this requires much more investment in education and health, better governance to stay. It's not just a function of wages. It also probably requires much better labor force participation, particularly among the old and women, and better immigration policies, not just a function of Ukraine. I mean, this is at the heart of a lot of the challenges that we look at. And there's a lot of focus on fertility policies. So we're looking at keeping a very open mind, but this is a big challenge for everything else we're talking about.
Well, thank you very much for reminding us of some of these really deep structural issues, which I know the IMF is putting a huge amount of effort into, and I think it's very, very valuable. So we've got through the hour here, ladies and gentlemen. I think we've gone through a whole series of topics, some of which were on your study list, some of which were not. But thank you for being so flexible. So David, Thomas, Radovan, Pavel, a late substitute, but scored some goals there in the final moments. Rena and Jeff, thank you very much indeed for taking part. There's now going to be a coffee break for 15 minutes, and after that, we'd like you to be back here. So thank you all for listening. Thank you.
Or tricky.
Can we introduce a little Torschlusspanik, which is always good? The fear of closing doors. People start being shut out, they want to get in. That's all right.
Hi, Khan. Nice to meet you in person.
Right, well, ladies and gentlemen, welcome to the second panel discussion of our day here in Budapest. We've heard quite a bit about the sort of macro background and a lot of analysis, and all of those data are established. We've heard about geopolitics and geoeconomics and so on, and now we have a group of people who, one way or another, I mean both international and domestic, represent asset management firms, although they're not necessarily actually portfolio managers themselves, so they'll speak to their particular angle on the topics at hand. We're going to talk about investable securities. So this is portfolio investment in Hungary and in the region. We'll probably focus mainly on fixed income markets, but we can take a sidelong glance at equities markets too. And of course, as before, anybody who wants to join in from the floor, although I actually can't see anybody because I'm under these sort of floodlights. I'm not sure if it was like this earlier. Could we dim the lights a little bit, do you think? Whoever's got the switch. Otherwise, you'll have 6 blind people an hour from now. So let me introduce the panelists we've got here in no particular order, but to my immediate right, representing the largest local fund management operation, Georgi Eder is the Chief Executive Officer of OTP. I'm going to try it. Alapkezolo, which means fund management, right? Yeah. Fund management. To Georgi's right, we have Matthias Zajnitzer, who's a director at BlackRock for Central and Eastern Europe. He's director of iShares and Wealth, joining us from Vienna, I think. To my immediate left, Caroline Grady joins us from London. She's the head of emerging markets research at an outfit called MacroHive, and you sort of advise hedge funds and other alternative asset managers, don't you, on
hedge funds,
strategy.
Trading desks, and real money.
Okay, great. Okay, so we'll ask Caroline to tell us what some of her clients are thinking. Next to Caroline, we have Maral Shamlu, who is a managing director of fixed income and liquidity solutions at Goldman Sachs Asset Management, also joining us from London. And Khan Nazli, finally again from London, is a senior portfolio manager. So he really is a PM, an economist on emerging markets debt from Neuberger Berman. We do say Neuberger, don't we, rather than Neuberger? Neuberger, yeah, and I thought so. It's the kind of American way of saying that. So, to move straight into the matter at hand, the openings, I mean, we could spend the whole hour talking about this, but I want to get some thoughts on liquidity and relative liquidity. Liquidity, obviously, the ability to buy and sell is always the crux for people who are investing in and trading listed securities. So I'd like to hear just briefly from people how they kind of score different markets and different instruments across the region. Obviously, we're not covering every single country, but the major countries, Hungary, of course, included. Where shall we start? Khan, why don't we start with you?
Sure. I mean, of course, starting with the region, first we need start to talking about the regional liquidity. We also need to look at global liquidity. Of course, 2022 has been a pretty difficult year for emerging markets. You had record outflows from the asset class, including some of the strategic mandates. And then 23, it's been really month-on-month type of trend. I mean, you did get a lot of outflows on a net basis, although the last couple months we are getting, some better signs. And in fact, I think we are now something like 10 days of consistent inflows into some of the passive products, which is something that we didn't get used to seeing. Within that context, I think CEE obviously fares well versus the global backdrop, especially in the hard currency side, with more countries issuing in dollars over the past couple of years, including Hungary and Poland. Of course, Romania is a consistent issuer. The liquidity has remained there for sure, and the local asset management support has also been there as well. In the local side, local currency side, of course, there are differences between like the swap markets and the bond markets. But I would generally say that it's been, typically, in the global context, it's been an okay environment for liquidity.
Okay, good. Georgi, you're obviously here. And every single day focused on these markets. Your comment on liquidity and also perhaps the extent to which you might feel that not only in Hungary perhaps, but that the actions and policies of central banks may have tightened liquidity somewhat in domestic markets. So speak to that, please, and then we'll hear from the others.
I would start with it's a long downward trend in liquidity coming from or starting from 2008-9 in the local markets. Of course, every single bank cut the allocated capital to the trading desk. So that's why we felt that liquidity disappeared, and it's still going down. So I was on the trading desk in a local bank, and we felt the same even after the COVID crisis, and I can imagine what's happening now in the trading desk in 2022 when the yields went up significantly. Banking books and trading books are stuck with some inventories, so that's why, and they don't want these inventories because the funding is very expensive. So I can imagine that the liquidity is getting even worse and worse. I hope the best for the future, but I don't know what's going to change this.
But does it affect the way that you run your clients' portfolios? And in fact, if you wouldn't mind, just give us for those who don't know, myself included, just give us a sketch of how much of your assets under management is individuals' private savings and how much is institutional?
Institutional. Roughly 1/6 is institutional, the rest is in investment funds.
1/6?
Yes.
Yeah, 1/6, okay. And monetary policy across the region or in Hungary, I mean, well, not quite monetary policy, but the way in which banks, central banks, of course, most obviously the European Central Bank, but other banks have engaged in quantitative easing,
yes.
Have bought.
That's the worst one.
Have bought, well, quite. So I was just trying to feed you that one. So comment, please, on how that has affected the markets, or indeed other aspects of market efficiency.
Yes, it's quantitative easing, and all these banking book buyings, siphoned out a big amount of liquidity from the market. So, and we are still seeing that. So maybe it's going to change next year or in 2025, but we don't see the reason why. So the liquidity is in FX swap market, the liquidity is getting worse. What I'm hearing from my former colleagues and the portfolio managers, the only thing which is the only part of the market which still exists, what I heard, it's just the spot market, FX spot market. So that's why some fixed income portfolios are hedged back by the euro hub. So.
Morale, and actually Georgi has interestingly just taken those of us old enough to remember, obviously not you and several others here, but to the time when banks, Goldman Sachs being a notable example, ran huge prop trading desks, and that is effectively no longer happens at all. It is not allowed to happen. But your comment generally on the question of liquidity, and I know you do pay particular attention to domestic bond markets around the region, including in Hungary. So please give us a little bit of a, I started by asking for a bit of a kind of scorecard, but not out of 10, but just where do you see pockets of particularly liquid securities, and where is it a bit tougher?
Across the region?
Across the region, yes.
Right. So, I mean, to some extent, liquidity is related to the size of the bond market. So, obviously, a large economy like Poland is going to have a much more liquid bond market than, let's say, Hungary. And this is something that Hungary cannot necessarily do much about. It is a small open economy. I would say that in terms of bond trading, particularly for large asset managers like ourselves, having large positions could be challenging at times. I think, as Con mentioned, last year there were moments of sort of a lack of liquidity in the market. The domestic banking sector obviously was there to somewhat, and domestic financial sector, non-bank financial sector was there to some extent buffer some of these sort of evaporation of liquidity, but it remains a challenge for a small open economy, and this is not particular to Hungary. In Czech, you have a similar issue in Romania at times. On the bond market, thanks to larger fiscal deficits, it is not as bad sometimes, and it is a bigger economy. But I think that, yeah, the bond market, at moments of stress, this becomes an issue.
I mean, obviously, a country can't overnight double the size of its economy or whatever, but only in terms of more technical things that could be done to enhance liquidity, what might they be? I mean, is that perhaps sometimes a function of good investor relations or transparency, or simply bringing more people in, or diversifying an investor base, things of that kind?
Yeah, I think we ask debt management offices many conflicting goals. We ask the country as a whole to reduce fiscal deficits. Yeah. We ask them to broaden the investor base, so make every investment pot smaller, and then we ask them for more liquidity as well. So these are obviously cannot be achieved at the same time. And as you said, for a debt management office, taking the fiscal deficit as given, taking the size of the economy as given, I think there are a couple of things that can be done, and Hungary's had a very agile debt management office. One, to ensure that for its own sake, sort of there are sufficiently diverse pockets of funding that if liquidity dries up in one, particularly those who are more fickle, like ourselves, then there are other sources of funding.
And diversification of currency of issue, obviously,
is part of that. Yeah. Is part of that. And I think more on the very sort of technical aspects of liquidity, it is a little bit the regulation for the banking sector and non-bank financial sector that allows this market to be more liquid and allows there to be more secondary market trading. And I'm sure there are sort of best-in-class examples in Europe that every debt management office can look into.
Well, I'm going to ask more generally about if there have been regulatory shifts or shifts to the regulatory environment that have impeded or enhanced the investability of bonds in the region. But just really quickly to stay with you, Maral, it may or may not be public, but just put us a little bit in the picture of how, in terms of Goldman's assets under management, which is obviously squillions, what sort of proportion might typically be allocated to a portfolio, fixed income portfolio in this region? Is that a number you could give us?
Sure. So,
I mean, perhaps vis-a-vis Latin America or emerging Asia, or.
Sure. So the fund which I manage is a GBIEM indexed fund. So the region has a weight of, I don't know off the top of my head, but I would say 35, compared to maybe 40-45 with Latin America. And so that's the relative weight. And then the rest of EM being
God, it feels to me that you probably allocated something to this fund.
Absolutely. I mean, in the local currency benchmark, it's around 35%.
Yeah.
Of course, Turkey used to be considered a big part of
it's
that.
index
It has
driven,
shrunk.
yes. Yeah,
but also in the hard currency side as well, it's
Yeah.
around 35% or so. Of course, I guess it's interesting. So, if you looked at, let's say, before 2020. 21, you would think of the CE region as the, let's say, defensive area, especially in the hard currency side. Like you had also on the local currency side, a very low inflation. You had relatively loose, monetary policies. The yields were low. So if you were worried about the globe, you would necessarily, for example, go into Hungary, which didn't issue for years in external bonds, and that would be the defensive investment. Of course, COVID was a big shock, and then 2022 with the Russian invasion of Ukraine. I mean, that really brought back a lot of the, risks that we had maybe forgotten about on a regional basis. Of course, country by country, there's always a pretty vibrant news flow that keeps you busy, at night. So certainly that political risk, inflation, all sorts of volatility, in the market, that made investors more cautious on the region. But yeah, I mean, certainly, I think, with the resumption of flows into the universe, I think, and with pricing having adjusted, I think there are still opportunities in the region.
I love the idea of flows into the universe. Where are they coming from? Another universe. Caroline, when we had a brief chat before, and I said, what's the sort of mood among the people you advise? Your response was broadly constructive. So, but could you unpack that a little bit more, please? I mean, what are the concerns of the people that you advise? And indeed, what do you advise them to be concerned about?
Sure. I mean, it sort of reflects back to some of the points mentioned earlier. I mean, Hungary had this very large current account deficit, largely driven by higher energy prices, and it is very rapidly shifting. You're right around sort of 2% of GDP deficit now, but because when people sort of compare this across emerging markets, it's still higher than the rest of the region. You'd had the sort of 4 quarters of recession, which only very recently we learned has ended. So it is very much a transition phase in Hungary. The start of this year, we had these very large external imbalances, both on the fiscal side and the current account deficit. And now it is really turning around, but the fiscal is coming a bit slower. And that's on the back of a public debt level that, if you compare across emerging markets, is actually still very high. So it is constructive. Terms of trade are improving rapidly. Policy is heading in the right direction, but there are some concerns, I think, about policy predictability. But maybe just to quickly flick back to end this liquidity discussion. I mean, I hear the same comment from investors about the lack of liquidity as being a hurdle. But the other thing that's sort of specific to Hungary is the currency volatility. When we're thinking about local markets, and the volatility of the forint is quite a lot higher than the zloty or the Czech koruna, and that is something that policy can address.
Well, and we heard, obviously, from 2 very significant policymakers earlier this morning. Just not a kind of full commentary on everything they said, but were there some things that they said that surprised you? For example, were you surprised by the very open degree of what we've come to know as forward guidance that the central bank gave pretty explicitly this morning?
I mean, I think that's very helpful because there is quite a lot of uncertainty. And it's interesting, if you look at the swap market, Hungary has about 450 basis points of price cuts for next year, which is higher than anywhere else. And that's certainly feasible for the central bank to deliver, but it's how they do that. And if investors know it is coming, there was a bit of a surprise last month when we got the 75 bip cut. We weren't quite sure what size it would be. So the clarity we got this morning was certainly very helpful.
Yeah, well, I mean, Matthias, to turn to you, before the actual question I'm going to ask you, were you surprised, and if so, presumably pleasantly surprised, by the very open kind of policy statements from the bank this morning?
I think in this situation, obviously, where we see that turning points are here already, you need to be, let's say, that open as a central bank. So I think we see that across, because everyone has the expectation that once this turning point is reached, that there will be a clear path in kind of easing and getting back to, let's say, a new normal, but still to a normal environment. So I think that's good. What is interesting also to see is obviously the growth projections. I think that's something also which will reflect in the retail market, meaning in, let's say, the broader economy will also reflect in the investment behavior, which I think is then obviously much more interesting also than for us, especially in my role.
Well, tell us a little bit about your role in a moment, but to lead into that, I want you just to give a kind of broad brush picture of how Central and Eastern Europe, or at least perhaps let's say the Visegrad countries, the kind of core CE countries, how do securities, both debt and equity, how do they fit into a global portfolio, would you say?
I think it's going in the same direction as the question you had before, in terms of what is the percentage, how is the positioning. I think most of the players in the market are at benchmark level, right? I would also say...
Any reason to be overweight?
That's hard to comment, obviously, but I think...
Sorry, I know that's the question I was supposed to not ask you.
But let me put it this way. I think there is probably, if you look at the relative terms right now, no reason to really be strongly overweighted, although we have, let's say, the expectation in the market, and I think everyone in the room, that this easing will come. On the other hand, I think the CE region obviously plays a huge role in a global portfolio, and I'm kind of here agnostic in terms of equities and fixed income, because if you look back at macroeconomics, this is the region to grow, right? Also compared to other markets, we definitely see that these countries, and I'm kind of now saying 6 or 8, depending on how you count also Romania, Bulgaria, that these countries are the most, let's say, dynamic, right? Also in terms of really economic growth. And that's why I think there's a good reason to have it in a global portfolio.
And to pre-pandemic, of course, a kind of sustained golden period for many of these countries. Correct. In terms of stable 5-6% economic growth, and the biggest problem being labor shortage. You know, I mean, that's obviously every problem's a problem, but labor shortage is a good problem to have rather than. Georgi, looking at the, thank you very much. I mean, comment by all means on what you've heard, and I'd be interested to know what you thought of Barnabas Viraj's forward guidance. But as well as that, I want to ask you if you think, I mean, there's some very obvious global issuers of debt from Hungary. AKK, of course, is the most visible, and then there are some of the other big state-owned enterprises like MBM and others. But I'd like to know if you feel there are other entities that might issue bonds internationally, of course, OTP itself, but others. So first of all, Barnabas, what do you...
Starting with the second question.
Oh, start with the second question.
Yeah. I don't think... I had a discussion with colleagues, and we tried to find good companies who are not cash rich in Hungary and can go to the international market. We haven't found any. So state-owned entities and the sovereign will check the market, will come to the market.
So you've got Exim. Is Akos Dollar in the room?
Yeah, but he's SOE as well. So
he's SOE. No, but I was just thinking, so the SOEs in question are the Development Bank, Exim, MOL, and MVM.
Okay, MOL is private. MVM is rather state-owned.
Yeah.
But then and Exim and MFB is pretty much as a proxy of the sovereign.
Yeah. So, there's nothing outside that universe.
Apart from the banks, because of MREL situation, this year and next year they're going to be very active.
Yeah. Well, we're going to talk a lot about MREL in the panel immediately after lunch.
But going back to your first question, I think this sort of communication will help the Hungarian capital markets if it's honest like this, and it's going to be transparent, and they're going to keep the cutting until at least the springtime. It's going to have a huge impact on the FX as well, and it's going to be positive for the international investors as well. So it's going to be even easier for the AIC to go to the market and fund, than to provide the funding.
Maral, a couple of mentions from other panelists here about that. Caroline talked about the surprise of the 75 basis point cut. Now the surprise has been taken out, hasn't it? So the clear policy statement looking forward. And as Georgi says, perhaps that will help to diminish currency volatility. But what do you think, or comments from you on what Barnabas said from the central bank's point of view about forward guidance, about where they've been, about where they're going? Was it all coherent and it all made sense to you? They're doing a good job?
Absolutely. I think MNB has really surprised us by staying on message and focused on inflation. Since I have started covering Hungary, really the face of Hungary has been AKK, MNB, and Ministry of Finance, and there has been a
they're all there.
Yes, exactly. And I think it was a really challenging period. It was a very, very difficult period for Hungary. And MNB at the end did what it was needed to defend the currency. I think when it comes to forward guidance, the way that I would think about it is that as an investor, I don't take a promise as a promise of outcomes. I take it as a promise of reaction function. So if you remember, on the other side, when MNB was hiking rates, at some point they had a big hike, and it was interpreted as the end of the hiking cycle. The markets didn't like it, and so just a week later, they hiked another 500 basis points. So the forward guidance, or what they told us when they told us they're done, if it doesn't turn out to be the right outcome, they change. So this is how I see Mr. Virag's discussion this morning. It is not that I promise you to deliver 9.5% interest rate in February. It is, given our current projections, this is the path that we're seeing. And I, again, given the experience of the last year, I trust that if this is not appropriate, time comes in February, MNB will adjust its policy as necessary.
Pragmatic, trying to give a clear guidance, recognizing that circumstances change.
Absolutely. I mean, this is the sort of central question of forward guidance in all central banks. It's not just a Hungary-specific question.
Yes, absolutely. It's the famous remark by an old English politician about, why have you changed your mind? And he said, events, dear boy, events. Khan, let's switch the emphasis a little bit. We want to talk about the degree to which what I tend to call thematic bonds, so green, perhaps the most obvious, most visible, but also social bonds, sustainable bonds, sustainability-linked bonds, those kinds of structures. To what extent do you think they are an important aspect of investing in across the region, generally, and Hungary in particular?
Yeah, so I mean, definitely the sustainable bonds universe is, again, universe, is expanding at the expense of other universes.
Other universes are available. Yes.
I mean, clearly that's a prominent theme. And if I could give an example from the funds that we manage, so we run dedicated emerging markets funds. And if we spoke 5 years ago, I would tell you maybe 5% of our funds would have some sort of a very specific ESG focus. Currently in the hard currency space, it's around 24, 25%. So clearly there's a lot of demand for fixed income funds that will integrate ESG
and sorry, that quarter of mandates, does that weighted particularly towards perhaps official sector investors or public pension funds, or what kind of investors emphasize that most? Asset owners, I mean.
Yeah, I mean, geographically, I think Europeans particularly.
Right, yeah.
And then I would say it's a combination of official sector and pension funds.
So your Dutch pension fund kind of...
Right, exactly.
Maybe a typical... Sorry, carry on. Yeah.
Sure, yeah. But it does, I mean, go beyond that. And then within, within ESG, which is obviously a very, wide umbrella, the actual sustainable instruments have also become much more prominent. I mean, if you look at the issuance trends year to date and also the 3 years beyond, and we had a lot of volatility in the period, about 15% of all sovereign plus quasi-sovereign issuance was carrying some sort of an ESG label. Of course, this is an opportunity, but also a risk too, because currently we are getting to the point that we have enough variety that we will be asked questions like, well, you invested in this green bond, but is it credible? Is there greenwashing, let's say, or is there, this focuses on, let's say, reforestation, but we would rather have something a bit more linked to energy consumption, like things like that. But it's certainly a very important growing theme. And with the European Sustainable Finance Disclosure Regulation, you also have a lot of paperwork, and in a way, the investors having to justify what type of sustainable to profile that the funds that they manage have. So, I mean, all going towards a positive direction, but I would say it's a very significant theme.
And obviously, in recent years, this market has grown and ballooned. Much more so in Western Europe than in Eastern Europe, to begin with, certainly. Is that balance now evening out a bit?
I would say...
both in terms of supply and demand, I think.
Initially, I think, in terms of supply, initially it was really driven by more Eastern European issuers, but over the past few years, Latin American issuers have caught up quite substantially. In fact, if you look at the sustainability-linked loan space or bond space, you do see various investment-grade Latin American issuers.
Well, my dear Chilean friends invented it.
That's right.
The first ones there. Matthias, let's unpack this a little bit. This whole world is a whole alphabet soup. You see here GSS, GSSS, ESG, all the rest of it. What are the risks of, I'm just going to put this bluntly, what are the risks of a lot of this just being marketing flim-flam? And you must examine that.
Now we have to be careful.
Very, very carefully before you invest or before you even consider investing.
Just for, let's say, as a disclaimer, we have later in the transition panel our expert here, so Anastasia Petraki. So I will kind of be very prudent now in what I'm saying, obviously. But jokes aside, I think you're right. It's a little bit tricky in terms of giving end clients, and by that I mean, let's say, the whole spectrum of clients, being retail, asset managers, or even institutionals, a common sense and a common feeling about what ESG/sustainability is. So that's definitely an issue, which starts, and I would say that's probably more a problem of countries in Western Europe, by having different labels in each country, right? That makes it already very tricky, and not only, let's say, on the side of kind of launching funds or products, but even if you kind of do it on the fixed income on the bond side. So I think that's a tricky part, because each country has a different understanding, right? Historically grown, what it is. I would like to also kind of take on the point of the demand. because you said what is the supply side, I'm happy to kind of cover the demand side. I think if you look, and I kind of separated a little bit into two blocks, having the CE region and then let's say the rest of Europe, we definitely see that we had over the last, let's say, 3 to 4 years, a huge demand in Western Europe for sustainable strategies, meaning not only equity, because here it's quite simple, at least in an easy way to screen out and to do the first checks, but also on the bond side. I think that was, let's say, for broad, diversified portfolios, something you could do. If I talk to clients here in the region, and this is kind of including Hungary, but not only just Hungary, there's a certain criticism regarding that topic. There's a certain way of saying, okay, is it just marketing or not, right? So that's one of the questions we get. And then secondly, it's obviously also if you have a strong local bias in your portfolios, right, which Hungarian portfolios have, Polish portfolios have, it's quite tricky to implement that on a high scale, right, because the industries are not ready. We often hear and we see that the data is not ready yet, right, so you don't get proper data. And the last point is, there is no security in terms of what the regulator will tell you, right, so regulators are in these countries, I would say also in other countries, right? If I look at Austria, my own country, it's tricky to get really what will they at the end really control, what will they look at, what is what they want in that term. So I think demand side is here, let's say, very weak. On the supply side, in terms of general portfolios, I see in each country probably 1 or 2 players being very brave and very outspoken. With the learning, I would say after 2 years, okay, it did not change much. I did not collect a lot of money. So let's leave it with this 1 or 2 products.
Okay.
That's the situation.
Caroline, sticking with this topic, generally speaking, I mean, is it something that comes up a lot either in what you kind of push out or what you're asked to provide? And also, seems to me, you know, as a relatively close and long-term observer of these things, that the interest has possibly peaked in ESG thematic bonds. Certainly in some markets, I mean the US perhaps the most obvious, but it's a bit of an outlier in all sorts of ways. But what do you think?
I mean, to be honest, the clients we speak to is more on the local side rather than the external debt side. Obviously, it's an issue that comes up because the financing is important, right? And they can mix the financing whichever way you like. But I think you sort of broad global macro investors, especially on the hedge fund side, if the price is right and liquidity is there, they will look at it. But their mandates are not so.
It's just a bond in the end, right? It's just money.
Yeah. Whereas on the asset management side, it's a bit different because it would be sort of dedicated money.
Yeah, that's true. Khan, to give you a sort of not entirely hypothetical example, and then we'll move on to a different topic. The KPIs, the key performance indicator sort of structure of green bonds or social bonds versus the use of proceeds bond, which are, you know, more easy to understand. You know, I mean, is the has the new plant been built, sort of thing? If it's there, it has. But with the KPI stuff, it seems to me that there's bit of potential for people to be marking their own homework, you know. I mean, and to what extent, for example, did and then, you know, these are, you know, the guy is a friend of mine, the Chilean Treasury. To what extent did they, when they launched their sustainability-linked bond, did they model impact for the Treasury 10 years down the line, the potential impact, ranges of impact, if KPIs were met, if they were not met, if they were partially met? And before you answer that, just to give you one other bit of context, there's a sovereign bond came out of an African country where the social KPI was, part of it at least, one of the criteria was the number of hospital beds in the country. Now, I don't know if anybody from Goldman's or BlackRock or anybody else is going to go around, you know, counting the beds in country X. What's your thought on that?
Yeah, I think certainly, I mean, you raise very good points. I mean, we do have these sustainable instruments, and we do take the second-party opinions, like we would, let's, for example, look at a rating agency for,
with credit,
for the
same
credit
thing.
worthiness.
Yeah.
But we don't have, maybe to throw a bit of a spin to Caroline here, but we don't have the third-party type of research that's yet available that can actually say, well, wait a minute, you actually did not deliver the hospital beds, or this is the wrong thing to look at, or this is not what should be achieved with this. This should not be the priority, etc. I think the market, I think the demand is definitely outpacing the supply here. Not only in terms of only issuance, but in terms of the availability of data, as also Matthias has pointed out.
Okay. Georgi, I didn't ask you to comment on that, but that general field, but if you would like to, by all means do. But I want to move on to talk about, it's embarrassing because I can't see him because there's a big light behind him, but the AKK obviously is very much involved and moving spirit behind this event. Usually from international investors, gets pretty good marks in terms of as a DMO. How do you see, because you of course are here and you're investing in local currency government paper as well, and many of your customers are investing in the retail bond program, and then I'm sure you also have exposure to the international issuance that the AKK puts out. So what do you think of their performance? Are they transparent enough? Are they communicative enough? Are they willing to take criticism? Would you like to criticize them or praise them? But give us a little bit of a picture of how you see the sovereign funding effort in Hungary.
Okay, so let's start with the retail bonds. This is our competition.
Yeah, of course, But no doubt many of your customers will be taking deposits from the bank and putting them into retail bonds, but...
Yes. It's a competition, but we totally understand this is part of the funding of Hungary, and it's a local funding. It's better for the whole country, and we do think this market is kind of saturated, so you can increase the size, but not significantly. But it's a good funding base, so I think it was a totally good idea because all the countries around us are following this. And Croatia, Poland, and every other countries in the region fund this very good funding source. Wholesale government bonds in half. I think they are following the market totally. They would like to know what is the opinion of the asset managers and the traders. So there is a communication between the AKK and the market participants. So I think it could be better, but it's okay.
Well, that's...
And
that qualifies as damning with faint praise.
Yeah, no. I don't think the CEO, the vice CEO, and all the colleagues from AKK they're finding the good communication lines to find out what's happening in the market, and we are reacting, and we do think that it's a kind of a communication from both ways.
All right. Well, all three of you, of course, have regular communication with the AKK. Any comments? Any suggestions? Any criticisms? Caroline? Praise?
Zoltan's always on hand whenever I have a question.
Good. Does he always have the answer? Morel, any comments? I know you said to the finance minister this morning that you're, Goldman's is a keen supporter of Hungary, by which I guess you mean you fill your boots with every new issue.
So I think that AKK has, on the communication side, actually has done a very good job for foreign investors in the sense of sort of transparency compared to other debt management offices. Small things such as having everything ready in English, publishing everything in on your website, so it's not difficult to find it. Simple things like this, I think, go a long way in making investors, making life easier for investors. I would say one other thing that this is not just sort of from me, but I hear it from other debt management agencies in the region, is that they find the retail investment program that AKK has launched very successful, and a lot of them are looking to AKK. I heard directly from the Croatian debt management office. I have heard obviously from Romanians that they're looking very closely, and so I congratulate the AKK for their success in this area.
And you don't cry for the poor shareholders of OTP or other banks whose deposits are being funneled elsewhere.
That's a whole other topic which I would be very happy to discuss.
There was this extraordinary incident, wasn't there, early in the year when the Belgian Treasury said they would hit all bids for retail bond program and sold 20 billion euros worth. And if I were running retail banking at a Belgian bank, Banque Bruxelles Lambert, do they still exist? I've lost touch with Belgian banks. I'd be pretty annoyed. Khan, any comment that you want to give? We've only got 5 minutes left, and we've got heaps of topics that we can address. Is there anybody in the audience who wants to stick their hand up and either, well, ask a question preferably rather than make a statement? No? Fine. Let's talk a little bit about domestic savings, and we discussed this last night. A healthy and modern and efficient buy-side structure is obviously very important to any kind of domestic capital markets development. One normally important pillar of that is a functioning pension system. And is there one?
At the moment?
Yes.
Yes, there is one, but it could be better. So, for example, so we have the state pension fund and we have the voluntary pension funds. So voluntary pension funds are getting more attractive for people, but not for people who should save money for the sake of the future. For example, young people. The young people, they don't care. So that's this
the
one.
Same everywhere. To be fair.
They told me that in Hungary it's even worse.
Well, I don't know.
But
everywhere always thinks it's even worse than everywhere else.
We were very happy to hear that the government is thinking about to help this part of the pension funds, and they are coming up with some good ideas. So it's good for the country. Of course, it's good for the business as well. But as I said, going back to the liquidity issue, if it happens and it's going to be a big real money fund in this sector, it's going to help the liquidity of the Hungarian government bonds as well, and even the rest of the capital market.
Yeah,
so
sure.
Maybe corporate bonds.
I mean, where in government, this is pure ignorance on my part, but where in government does that policy question sit? Which arm of government needs to take hold of this pensions question and stand it on its 2 feet?
That's a good question. The Ministry of Finance?
Yeah, well, they're usual suspects.
Yep.
But Matthias, your comments on this, and also whilst you're at it, just in half a minute or less, what kind of new investment products are you seeing people take hold of here? And particularly, and we've mentioned this in the context of the retail bonds program of the AKK, digitalization of investment. Just give us a quick tour d'horizon of that.
No, happy to do so. And I think here also we see in the CE region common trends across all of the countries we are looking at. I think what is important, obviously, is a functioning second pillar pension system. I think that's something we see if you look at the example in Slovakia, For instance, where you have, let's say, a strong second pillar also with a reform just came into force last year. We have other markets where it's a little bit trickier, that's clear. I think it's a combination of, let's say, having these pension pillars and then really what the retail client is doing on his own level. And here, I think, and that's the feedback also we get across the region, is there's this local bias you were mentioning, kind of local government bonds, having local equities depending on how large the equity market is. And then secondly, I think it makes sense to have a broad diversification into international markets. And the trends we see coming obviously from Western Europe and Germany or France and UK basically are leading in that, is to diversify very simply with transparent products like ETFs. Index products, ETFs. That's something which has in the CE region not been available all the time to the retail client, meaning registration, having all the pre-contractual materials in local language. But we're working on it, at least for our product range, to enable that. We did Czechia, Slovakia, Poland. And in December, we will also finish this exercise for Hungary and have 250 products registered here in the market. So I think that gives the retail client in Hungary the same opportunities to diversify their portfolios like someone in the UK, someone in France, someone in the Czech Republic.
Have you got some forms where people here can...
It's on our Hungarian website, so it's very easy to find them.
What I found was absolutely fascinating when Matthias and his colleagues and I started talking is how many people do you employ in Hungary?
So in the Hungarian office, we have about 500 people. It's our tech and innovation hub for EMEA.
But it's a bigger number than that, I think, isn't it? That
I think here in the office it's 500 to 600 people we have, and then the rest is in London and in other offices.
but I had a bigger number than... Anyway,
okay.
I'm sure you know better than I do. Right, so we have precisely no time left, so that gives me ample time for my final question, which asset management people always hate this. Well, they don't really, they say they hate it. I want, just within the CEE universe, anything you like, bond, stock, commodity, whatever you like, government, private, bank. Carl, you'll be first off the mark with this. Give me a long-short pair.
Yeah, so on the hard currency side, we've been focusing on a bit of the next generation CEE, so Romania and Serbia. The EU funds are exceptionally strong theme for Romania, and actually it's been a couple of years that we haven't heard any political crises, and the coalition has been stable and generally on track.
But if I want to make some money by Christmas, what am I buying? What am I selling?
I mean, I think it's still the double B space in the emerging markets that you would be looking at. So Serbia would be fitting in that in the hard currency, side. Yeah.
Okay, so we're buying Serbia and we're selling.
What are you? Well, that's a tough one. I don't think there are obvious, underweights in the region.
All right. Okay, I'll let you off, Maral.
Yeah, so I'm going to answer the question in the way that I like. But addressing your question, I think that on the hard currency side, we see a trend which is moving away from what was the shiny part of the index for the past 10 years before COVID, lower quality but high-yielding credit. We are really going back to bread and butter, sort of higher quality. And I think Hungary, CEE in general, particularly Romania, Serbia, Hungary, would benefit from this fact that there is a move to higher quality. So you have higher yields of investment grade, which provides, in our view, a very good hedge to, let's say, similar American assets, US assets, high yield corporates, because they provide you with geographical diversification. So I think that CEE is a winner on that front.
Yeah, the short part of your trade can be something outside CEE. How about that?
Exactly.
Yeah.
Well, then yes. So I would belong the sort of double B and triple B, higher quality double B and triple B on the foreign currencies side. And on the local side, I think CEE is still one of the regions that has a lot of cutting to do. So again, something to for bond markets to enjoy for the next 6 to 8 months.
Okay. Caroline, so if one of your poor hedge fund guys suddenly needs to find some more money to buy a turkey for Christmas, what is he going to buy? What is he going to sell?
So for me, it would be on the currency side. It would be long Polish zloty and short Czech. It was mentioned briefly earlier. I mean, we don't yet have the new government in Poland. We should have it by the end of the year. And so there's a lot of optimism around EU fund inflows, pick up in investment, and overall a much better relationship with the EU than Poland's seen in recent years.
So something weird might happen at the central bank?
I mean,
Let's not open that can of worms. We'll talk about that after lunch.
Yeah, so we're very sort of bullish on the Polish zloty, and on the other side of it, it's more sort of policy choice from the Czech central bank. They need to loosen monetary conditions. They're the one central bank in the region that hasn't cut rates yet, so they're already doing it via weaker currency. And in the GDP data we got recently for the third quarter, Czech was very much the outlier, another negative Q-on-Q print. So that's the currency that's very much going to weaken, whereas Poland should strengthen.
Okay, great, thanks. Georgi, what are you buying, what are you selling?
I'm positive on bond market, especially on the mid curve, so around the 5-year area, because interest rate cuts are coming. And I'm not that optimistic in the long part. Regarding what I would sell, I would be very cautious with currencies at the moment, because all the regional currencies, especially Hungarian forint, we see the budget deficit. We know that they have to cut rates. Central bank is very cautious, but they have to cut rates to help the budget deficit. And I would be a little bit more cautious on euro half.
Okay. As a private individual, Matthias.
No comment on that. But I can answer. No.
I mean, you say buy gold and sell, Estonia.
No, but I think the message should be in that way, because obviously there are other experts here on really kind of saying what is the pair trade. But I would say, obviously, I'm selling investment products to the region, so that's the clear point. Other than that, what I'm buying, obviously, and I think what also many asset managers do kind of for Europe, is that we are obviously still buying the growth story, which is in CE region, especially Hungary and Poland. I would say these two markets, in terms of investment penetration, in development of the investment market, also in terms of the perception and behavior of clients, I think these are the two markets where a lot will happen over the next 2 years. And I think that's an interesting story for everyone. And I think if this investment penetration is increasing, then it's helping, obviously, local government bonds, my colleagues from OTP Asset Management. So that's something which is helpful for everyone.
Okay, great. Thank you very much. Beautifully crafted, diplomatic answer. I'm sorry nobody in the audience wanted to join in. It's too late now. The one thing I don't have here is a clock, but I see we're only 4 minutes over. So now you have lunch back outside there. But please be back in here sort of at about 1:05, when we're going to resume the conversation. It's still stuck with me, I'm afraid, but there'll be different people surrounding me, and we're going to talk further about developments in financing and capital markets with people from Raiffeisen, from Erste Bank, with Anna from the European Commission, who we get to interrogate about Capital Markets Union, which has been the most urgent thing in the EC since 2016. Zoltan himself, he's gone. I hope he's coming back. Scope, the ratings agency, and Peter Torecki from Treasury of MOL Group. So please come back at 1:05 to start all of that. And in the meantime, join me in thanking these excellent panelists. Thank you very much, guys. Right.
hosszan, hogy a stream hangja. És akkor nem megy vele semmi. Ez valami megy vele. Na, hogy megy vele mi?
ÖMV-nél van, de nem capital market, hanem ilyen insurance, azt hiszem.
It's top official.
Yes.
Oh, they have no, I have done international. Yeah, so don't ask that.
Délutáni szekció, az már igen csappan.
All right.
Hát ebéd utáni alvós szekció.
Okay.
De mindegyik mindig a leghálatlanabb.
You're broadcasting to the room, by the way. No, that's fine, but let's get on stage and broadcast to the room.
Ladies first.
So thanks.
First come, first
Sitting
serve.
arrangement.
Sit wherever you like. Why don't you sit there?
There.
Yes, why don't you sit there?
Why not?
Sit here, sit wherever you like. Sit on the end, wherever you choose.
Do you want to...
Martin, go here. Yeah, that's fine.
Dangerous. Very dangerous sitting in between you two.
Oh. It is like a floodlight. Huh? Oh, I'm live here.
Okay, good afternoon, ladies and gentlemen. I hope you all enjoyed your lunch and enjoyed this morning's proceedings before that. With this panel, the third panel of the day is a little bit of a kind of continuation of the last one, with a bit from the other side. So some bankers and some issuers, or potential issuers. So we've called it Developments in Financing and Capital Markets, which, as you rightly observe, could mean more or less anything. We've got a whole list of topics here that we talked a little bit about in preparation. But of course, again, anybody who wants to join in and propose another topic, please go ahead and do so. So just checking where everybody is. To my left, we have Martin Blum, who is the head of Debt Strategy and Capital Markets Development at Raiffeisen. You're based in Vienna, aren't you,
yes.
Martin? Yeah. Zoltán Karali leads Little Introduction, CEO of the AKK. Who we got on the end, Olaf Tolke is Managing Director and Head of Corporate Ratings at Scope Ratings, who are based in Berlin, although Olaf himself is in Frankfurt. To my right is Peter Torecki, who's the Head of Group Funding in the Treasury Unit at MOL, a Fortune 500 company.
All right.
Well, aren't you?
If you say so, Chris.
Well, apparently you are. So he's terribly modest about MOL. Anna Grochowska has an enormously long title. You must need a card about this wide. She is Deputy Head, National Financial Systems, Directorate General for Financial Stability, Financial Services and Capital Markets Union at the European Commission. And Mihály Geiszbul is the Head of Treasury at Erste Bank in Hungary. So, to start off, let's just have following on from the discussion about liquidity and so forth, in the last discussion, I just want to have a look across what people think in terms of Hungarian issuers, bond market issuers, fixed income issuers, in terms of their access to global bond markets, particularly as that compares to their counterparties around this region. So, Mihály, why don't we start with you? How would you measure or gauge the level of access that Hungarian issuers and potential issuers have to global markets?
Thank you very much for being here and being invited. It's an honor. Back to your question, I think relatively, maybe there is some disadvantage, but I think it's not coming from the fact that these companies are Hungarian, but due to the relative size. I think global names like MOL or big Hungarian companies can easily have access to the international markets. When it comes to funding to attract, I think pricing is a different issue, but it's relatively easy. When it comes to big Hungarian companies, which on a European level, just being mid-caps, more smaller, that's much more an issue due to the size, because they cannot reach the benchmark or some sub-benchmark size. So I think when it comes to and we talk about how the Hungarian companies can have access to the international market, I think the biggest disadvantage is the size of the companies. They need funding in a size of 50, 100 million euro typically. These are the so-called Hungarian companies, and it is something which normally should be done on the local market. This is too big for the local market, but too small for the international market. So if I have to highlight one major point why there is a limited access of Hungarian companies to the international market, I would say one primary reason for that is the size of the companies that come from the structure of the Hungarian economy. If I have to point just one.
And Olaf, I think you said that you rate 18 Hungarian corporates, but do you also have the sense of a kind of mid-sized trap? Too big for local, not big enough for international? And when I asked Georgi Eder on the previous panel, what other potential issuers might there be, he said, they look pretty hard from the point of view of an asset manager and didn't really see any beyond, the handful that we all know about who could issue internationally. So you're rating them primarily on their domestic credit aspect, but give us your view.
Yep, that's absolutely true. I think the size issue is a very relevant one for international investors. I mean, if they want to move into a position, they don't want to have 50% of the whole issuance on one position. So here, clearly, we see our role, and I think 3/4 of the companies we rate are SMEs, small and middle-sized companies, partly family-owned businesses with 20 million sales, maybe even less than this in hard currency. I see our role more in preparing them, in making them also knowledgeable about what is required to talk to investors. It's also a communication issue, sort of tell your story, prepare your credence or your prospects with investors. It's also communication, credit story, and enabling them to also grow. I mean, they can use the rating as a means to acquire companies, first maybe domestically as a funding and then maybe internationally as well. But you need to pave a track record based on performance, consistency, and sticking to your expectations, which is something which investors value very highly and which is not known by any company. So in a way, we also have this, I wouldn't say advisory, I shouldn't say this, but certainly educational role to take them by the hand, basically, and say, look, if you really want to play capital markets, and many companies, the first time they go into capital markets, you need to know certain things, how to behave in this new swimming pond, basically.
I mean, the global bond markets, or all bond markets, are obviously a force for discipline. If you're going to start borrowing money from international capital markets investors, you're going to have to submit to quite a lot of transparency and discipline that you maybe perhaps not.
Yeah, and you need to be aware of what is important and what not. I mean, sometimes we talk to management and we think, okay, maybe they shouldn't tell us this, or they should also focus on other things. I mean, concept of financial policy, for example, sometimes is not known at all to companies, which is more or less, what do I do to support the credit rating if things go wrong? Can I get rid of, or can I sort of not pay the dividend for 1 year, or can I help otherwise to keep the rating where it is and not get downgraded by 2 notches, maybe by selling non-core assets, something like that. So it's a credit story, financial policy commitment. Some people don't even know this. So here, moving into this, and the other complication was when I rate Unilever or Sanofi, there's 3 or 4 existing ratings. So I know roughly where the benchmark is. When you go into Hungary and other countries, there's no existing rating. So we as a rating agency, sitting outside, not speaking the language, not exactly knowing the culture, we have also something to lose. And so we need to come in and need to be very careful that we don't miss any potential risk. And here, therefore, it's an nascent or sort of an initial phase we are in. But we can help companies to really build up credibility and to qualify initially for domestic bond markets, and then secondly, maybe also for international bond markets. So it's a good chance for them to grow, because size, as you said, Mieli, is disadvantageous compared to other markets, but it's a good size really to develop on from this basis.
Zoltán, and obviously we all know that you have plenty of access to markets, but one of the functions or one of the kind of collateral functions often of debt management offices like your own is to kind of establish a presence internationally, establish a yield curve and so forth to prepare the ground for companies to issue, banks or industrial corporations. Is that something that you consider in your plans? I mean, is there a kind of cohort of Hungarian issuers ready to go into the market that haven't, or is that just not, are they simply not there?
Yeah, so I think first a little bit of a history, sort of not necessarily a lesson, but like a little bit of a description of how this works. So clearly, we have a market economy since 1990, so that's not a very long time. And the banks in Hungary, either because they got privatized or because the local banks got really strong, really offered good financing solutions for corporates for long, which meant that there was no need for the corporates to go to the international markets. There was a very strong mortgage fund briefer market in Hungary up until obviously the financial crisis, and then beyond as well, but then not really international issues because nobody was taking FX debt. With respect to the pricing reference you mentioned, yes, so we are the pricing reference for local corporates, and government guaranteed spreads and sort of sovereign, SOE spreads and then corporate spreads are rightly or wrongly derived, from the sovereign. Hence, we have to be really present on these markets. Obviously, we are now present in dollars, euros, Japanese yen, as well as RMB. So whoever wants to issue in these markets, which are basically the major markets for funding, apart from obviously the UK and Switzerland, they can find the reference point. We have a curve. And we also have green bonds as instruments, so that can also be a reference point from a green bond framework quality point of view, but also from a pricing point of view. And we also have green bonds in our domestic currency. So I think we take that role very seriously.
Mm. Martin, your large part of your role is what we would call DCM origination.
No, but nevertheless.
Yes?
More from the trading and client side, but nevertheless, similar area.
Okay. The bank, nonetheless.
Yeah, yes, it's a bank.
The bank does do that.
Yes.
So, in terms of looking at new Hungarian credits, and of course you have comparators all across the region where you're active, are there notable pricing differentials across geographies? And insofar as there are, what is driving that? I mean, is it simply credit, or are there other factors at work?
Good question. I mean, I think obviously we've just discovered that it's the sovereign curve in the hard currency space, which is the dominant one, and it's easiest to compare across geographies. And in the dollar space, for sovereign Eurobonds in CE or in EM, if you plot spreads versus ratings, composite ratings, you don't get too much dispersion around the line of best fit. So 85% of the spread variation is explained by the composite rating, so what OLAF is doing or what the other agencies are doing. So that's the first point to highlight. Nevertheless, what we did see in the financial space when we had in the last year or two this growth of the MREL financial issuance in the region, that CE MREL issuers, so banks, did pay more than their Western European equivalents, but that is gradually, that's converging over time, particularly in the higher rated space. So the simple message is that credit quality in the hard currency space explains a lot of the variation in spreads. And then obviously in addition, lower liquidity, credit, smaller issues obviously have an illiquidity premium too. And then of course on top of that there's idiosyncratic factors, but it starts with credit quality.
Yeah. So the majority of it is just what you would expect from standard credit analysis across the piece. I don't know if I mean, does everybody in this room know what MREL means, or M-R-E-L? It's a reasonably esoteric bit of financial jargon. It's to do with the amount of loss-absorbing capital on a bank's balance sheet. Is that an accurate description? And obviously it's a Europe-wide regulation. And we're going to talk about it a little bit more, which is why I thought it was important just to bring. What does it actually stand for? Remind me.
I thought you were going to ask me this, and I was just wondering.
Minimum
requirement of eligible liabilities.
Minimum requirement for eligible liabilities.
And own funds.
What?
Own funds and eligible liabilities.
Right. Okay. This world is definitely full of alphabet soup, as I said earlier. Peter, let me turn to you. We just had a bit of a conversation about ratings, about pricing, and so on. You last accessed the international bond markets in 2021, is that correct?
2020.
2020, okay, 2020. And there are rumours that you might consider returning to international financing operations during the course of 2024. So obviously, as you've been planning that and considering that, you've been taking advice from your banks and perhaps from potential investor accounts and so on as to likely pricing and other considerations around returning to the market. So could you tell us what some of those are, and how do you view a potential new issue or series of new issues by MOL shaping up in terms of currencies, maturities, when you might go, what might drive, what might be a go, not go kind of decision?
Sure. Well, I guess rumors can come from the fact that we made our program, so we have an EMTN program.
Yeah, you told people about it, yes.
And end of September. But that being said, that program was basically put in place for, well, I mean, in the morning as well, we heard a lot of times volatility, uncertainty, and so on, which we convert that to the capital markets terms. It basically means that if someone would be thinking about an issuance, then issuance windows are much shorter. So it's much less time to react. They can go away much quicker. So the kind of option value of a program, having a program, is now probably more. In that being said, basically it was established as an insurance in this sense. So if there is a need, we have the quicker access to markets.
The documentation was done, it was all there, you could press go reasonably.
Indeed.
Immediately.
Reasonably immediately, yes, I would say.
Yeah.
But with regards to the actual plans, I mean, that's basically like one of the cards in the pack, I would say. So it's not like that we're preparing for something immediately, and not at all. I mean, ultimately, our role is basically to secure that we have the proper amount of funding for the company's different purposes, capex and so on. So we are driven by that, essentially. We have to be ready to be able to move, but we're not kind of doing it just, la pulla, that, okay, now we think that we should be going because we like the relative terms of the capital markets now. In general, about the markets, I'm not so sure I'm on the same side, actually, because I do see there kind of a displacement in the price, or in the, let's say, the perceived risk premium.
What Martin calls idiosyncrasies are a bit more significant.
Yes, indeed. So, like, I mean, in general, like, risk perception of the market, I kind of try to identify with the CDS, the credit default swaps, and essentially that level, if we look around in the region, obviously was distorted a lot when the war broke off. That's natural. But after that, the normalization was on different scale, for instance, in Poland, in case of Poland, than in case of the Hungarian. So we are still being, Hungary is still being a bit punished in this sense from the market
and let's be
perspective.
Pretty clear about it. You are positing a political motivation for this.
I'm not saying what's the reason. I'm just saying that
okay, well, what is the
didn't
reason?
go back. You tell me.
Well, would anybody like to hazard a guess? Clearly, the whole question of although this applies equally, or has applied equally to Poland, which you also mentioned, the sort of degree of disquiet between the European Union and those two countries about various issues, which we're not really here to discuss, but we all know what they are, and they're in the background, and if anybody wants to unpack them, obviously we can. But so you do see there as being pricing discrepancies that are not credit-based. And notwithstanding the fact that you, as a multinational corporation, you operate in dozens of countries, right?
Indeed.
But if I understood correctly what you told me before, all of that activity is funded centrally?
Yes, we have a fairly centralized financing indeed, with small exceptions for good reasons, but in general, yes. So when we talk about long-term financing, then essentially it's centralized, and we channel in the funds at once and then channel down towards the subsidiaries.
Which is the biggest
solution.
operating unit outside Hungary?
The biggest one, I mean, I would guess it's INA in this sense. So
What?
Croatian subsidiary.
Croatian.
probably.
Okay, so the Croatian subsidiary, were it to go to market itself, would still be very much a Hungarian company.
No, it wouldn't. No, I think. No, they are actually one of the exceptions where we allow and where we actively help to have external financing on their own as well. Obviously, a bit like in Slovakia, Slovnaft, so the national champions are always well perceived by the market, and they are the national champion in this field there.
Okay. Anna, let me turn to you, because and we can go a little bit into this MREL business. It's not Emerald, which, you know, kind of green bond it might be, but it's MREL, M-R-E-L. But also just sketch for us, if you would, I mean, you look, part of your role, your many roles, you look at financial system, financial sector stability across the systems, the countries, the markets you cover. So give us a little bit of a tour d'horizon, because obviously the whole conference, we're not talking only about Hungary, a lot about Hungary, but give us your view across the region of the relative health of financial systems. And then I'll stick with you and go a little deeper into this question of whether there are other EU-wide regulatory factors that are at play in terms of financing. So, but first of all, relative health of financial systems, and what do you observe in Hungary, Poland, whichever countries you look at most closely?
All right, thanks. Our assessment on banking systems across Europe. Well, we have representatives of some banks. They could tell us about their health. From our perspective, I mean, what is striking in the current cyclical moment is the high profitability, yes, that banks have been waiting for, helped by, obviously, monetary tightening. So this net interest income has been, very dynamically increasing, one can say booming. So that's certainly positive. It gives banks some space, also possibility to invest. At the same time, there are risks linked to these rising interest rates, and this is one of the issues we are closely looking at, especially credit risk, and in particular in banking systems where there is a high proportion of variable interest loans, be it for households or corporates. So the situation is quite different across Europe. Some systems are quite indeed exposed to this risk of changing interest rates. And here we have to look very carefully at the repayment capacity of borrowers, individual borrowers and companies, because these higher interest rates, coupled with higher living costs, generally will affect them. So that's a bit the negative, let's say.
So are you predicting, in some sense, a degree of non-performing loans increasing, households defaulting? Is that where you're taking this?
I don't want to make predictions, and of course, from our perspective, it's the last thing we want to see. We are responsible, kind of, for financial stability, so we prefer that financial systems remain stable. But indeed, it is one of the key risks on our radar screen. So we cannot exclude them. Yeah, it will all depend how persistent is inflation. I mean, indeed, we have favorable trends now. Interest rates seem to have peaked. But okay, we have to look at economic developments and all the other factors. So that's one of the key risks we see across Europe. Next to this, of course, other issues, sustainability, it has already been there. It's there again also for Hungary, yes, quite energy, exposures to energy-intensive sectors. So maybe for Hungarian banks, this would be another element, among others, that we would look at.
And okay, thank you. And actually, I think we'll park a bit the regulatory emerald thing, and I'll come back to you on that in a second. Martin, can I just turn to you? The Raiffeisen obviously has a large presence in Hungary across the whole financial services sector. Your retail bank, commercial bank, and so on. So clearly you compete with other foreign banks and local banks, but there is a shift underway before our eyes in the Hungarian banking landscape with the formation of a new number two bank. I'd be interested if you would, just for your comments on how you see the system as a kind of competitive landscape with OTP very much the largest institution, this new institution coming in, the Hungarian Bank Holdings as number two in terms of size, and then of course yourselves and the other foreign banks that are active here. What's your kind of, I don't know, health check, or I don't know, just a tour d'horizon of the Hungarian banking scene?
I think the first point to highlight is the loan deposit ratio in the Hungarian banking sector is relatively low, and obviously radically different to how it was pre-financial crisis, more than 10 years ago. So if you look at it from a sort of loan deposit ratio perspective, the system is, it's got a lot of capacity potentially to grow on the one hand, and is not sort of is in quite a comfortable starting point. I think that's important. Secondly, and this is really to take a big sort of step back here away from the banking sector towards the economy, which obviously the banking sector is ultimately going to grow along with. I think if you look at Hungary from a regional perspective, Hungary is benefiting from nearshoring, friendshoring, has very high greenfield FDI commitments. That's not just important for the economy; it's also very important for the banking sector. The pie in general is growing, and therefore, if the pie is sliced up in slightly different ways, is perhaps less important than if the whole pie is growing. And I think Hungary's longer-term growth potential, particularly through these greenfield FDI projects, is a positive for the whole banking sector. The final point I would mention, speaking from the perspective of a bank with a regional presence, our RBI, is obviously we offer a slightly different product set to a national championship. We have a regional or a global product offering for our clients in Hungary in terms of not only corporate lending or household lending, but also in terms of hedging products. And in these volatile markets, if we have sort of competitive global or regional FX or interest rate hedging products is important and sets us aside perhaps from a domestic specific player. So we have sort of a broad sort of access to global expertise and regional expertise, which I think is also important to highlight.
Okay. Michali, if you wish, do you have any comment on the development of the competitive landscape in Hungary? And then I'm going to delve back down into this MREL topic that we touched on.
Yes, I think it's a natural process, and it will go further. So if you look at the size of the Hungarian economy and compare to the number of banks, there's still a long way to go, and in banking size is very important. So I think it's a sort of natural process. There was some help, now it's speed up after a long sleep. Something big happened, and I think it's going on like that. There will be more consolidation, and of course, Erste is ready to take the challenge.
And are there some non-bank financial institutions developing in the fintech arena, for example? Obviously there are, but are there any competitive
I don't think
ones?
it's so immediate in Hungary. It's not so immediate.
Okay, so to come back to this loss-absorbing capital requirement, banks, including yourselves, have of course issued MREL bonds specifically in order to create an instrument that qualifies as that loss-absorbing capital. But let's speak about that for a moment, if you would, but then from there, take us on to what these kind of regulatory restrictions, what impact they have on your ability to lend and finance the real economy.
I think it's sort of neutral, that point of view. MREL is a strange animal in a sense that basically and bluntly speaking, banks are forced to issue very expensive instruments from funding instruments, get liquidity, which basically they do not need for business point of view. So I think it has when it comes to the Hungarian market, it has a sort of strange double twist that banks in one way drain the liquidity of investors, but at the time they backed up with extra liquidity. So I think it's very important to see that MREL is not something what banks really need for operational point of view, banking point of view. It's a regulatory liquidity from a business point of view. So now all the banks who were forced to issue MREL and attract more liquidity and financing capacity at the same time are forced to make use of it. So it's also stirred up the market. So it's a sort of shift of activity. It's like a bit of hot potato going around. What I mean by that banks are, it's limited due to the risk what the central bank is strictly watching, but still banks somehow involved buying in MREL bonds or others. So just the liquidities go around like in a strange game. So that's definitely have some impact on the market, on the behavior of individual participants. But overall, I think it's a sort of zero-sum game.
Okay. Anna, let me, from a regulator's point of view, I mean, you're always stuck, any kind of financial regulator is always stuck, ultimately, it's a political decision, right, which is then fed down. So ultimately, you've got this desire or pressure that states want to put on the banking sector to lend more for economic growth, general prosperity, employment, all of the positive stuff. At the same time, particularly since 2007-8, you were terrified of banks going bust. Banks go bust because they lend money to people that can't pay it back. It's very simple. So at the same time as wanting banks to push out loans to the economy, you want banks to de-risk. And those two things are potentially mutually contradictory. How do you square that one away?
So,
Easy question.
You're right. These are two important objectives. So in this sense, you're right. Ensuring that banks effectively fulfill their function of financing the economy, but at the same time ensuring their stability, solvency, soundness. To us, it's very much complementary, actually, not at all conflicting. Maybe to nuance a bit, the latter, so the stability, really underlies the ability to service the economy. And this is what we try to kind of explain, to communicate, that the stability of the banking system, all these capital requirements, other requirements, they are there precisely to ensure the continuity of the banking system in servicing the economy. So we would prefer that it's not seen as a kind of cost, burden, but rather as a
expensive
necessity,
was the word that Mihaly used, and I saw you write it down as he said it. Unless you're writing down something else. You might be writing a poem, for all I know, but it seemed to be the word expensive caught your attention.
I stick to my view.
No, we note down, views, of course. It's always interesting to hear the experiences and insights, so of course we note them down. It doesn't mean we would reconsider the policy. So I believe the policy makes sense. But I understand the point of view of banks.
Bank capital, bank financing is an intensely technical and multifaceted field of human endeavor. From tier one and all the different levels of subordination, and each new level of subordination is somehow different from the last level of subordination, and the whole bank capital field is kind of moving target completely. Is that a fair comment?
Sorry, what was the moving target?
You're thinking of that poem again, aren't you? I would say that the whole field of bank capital, in terms of different levels of subordination and so forth, different levels of loss absorption, is intensely complex and constantly moving.
It is a moving target, but I think we achieved a lot in the area of ensuring banks' robustness. So, yeah, a lot of progress has been made. So I think a lot of work has been done.
Okay. Zoltan, it's not your topic, but you're a former banker, and you used to. Were you a FIG banker?
No, I was an originator for structured financings.
Okay, so
risk management solutions.
Complex stuff.
Yeah.
Yeah. I mean, what do you think of what people have said? I mean, just in terms of the ability of the banking sector in Hungary. Let's restrict it to Hungary. The ability of the banking sector to. I mean, what is a bank? In essence, a bank is a machine for recycling household savings into productive industrial use. Is that a fair, short definition? So, insofar as that's what a bank is, how effective is the Hungarian system at doing that? How do you view the complexities of these different kinds of regulatory structure? Yeah, that's probably enough questions.
Look, I think regulation is a given. And the regulation is always a reaction function to a crisis. And it kind of evolves as we learn. So I don't think, we should be, we should be complaining about regulation. It is what it is. And the cost side of it, obviously there's a lot of fixed costs coming through because of regulatory compliance. And, obviously return requirements and profitability expectations of shareholders have to adjust accordingly. So I think the Hungarian banking system operates perfectly. Obviously it changes. I mean, just one thing, obviously this region is going to need a lot of infrastructure investment into energy security, energy supply. Obviously the green transition of power generation is going to require a lot of, sort of energy infrastructure investment. In this country in particular, for example, project finance in the classical sense wasn't really needed because banks could provide the loans, Maybe these are project finance structures, but not your classical large, project finance structures. This will come, this will be something new. Obviously, capital markets, banks have been present, and they will continue to be present. Now, they have to be present, through the MREL requirements, but that's okay. So I think it's fine. I don't think, this actually has a negative impact on the other asset classes, i.e. corporate debt or the sovereign. This is a natural, sort of transition, and it has to be embraced. I mean, change is good.
And I was very impressed this morning that the guy from the Austrian Central Bank quoted Lampedusa, that for things to... Fantastic novel, by the way. If you haven't read it, you gatto pardo. You have got to read it. For things to change, for things to stay the same, they must change. Martin, switch to a slightly... comment by all means on this topic we've just been covering, but I'd like to move on to the question of, darting around our list of questions a bit, to the question of what sort of alternatives are there or might there be for SMEs across the region to straightforward bank lending?
I'm going to spend more time on the previous topic than the SME topic.
Well, but it's up to you.
I just, on the MREL topic, to pick up on what Mihaly said on expensive, for every investor in the room and for every investor, around the world, expensive means obviously opportunity as well, that you're getting good quality financial credit at excessively wide spreads. And I think that's been a key thing that we found talking to investors in the last year or so, that the more you put this asset class, which is a rapidly growing, regulatory-driven asset class, onto the table, the more A, interest you get, and the B, that this expensive nature of funding relative to the parent bank in a multiple point of entry regime, it gradually comes down. So there is something which banks can actively do about this excessively expensive MREL from a regional perspective, and that's to obviously spread the word. And it is a new big relatively big asset class. So in CE, it could be 10 billion euros, next year in terms of outstanding. So I think that's an important message, that the expensive also means opportunity from an investor perspective. On the SME topic, which I'm desperately trying to...
You're a big bank. You're in most of the countries of the region. So, you have commercial bank managers who sit there and, their local companies, they go and play golf with them and so on, and they, lend them some money or don't lend them some money. I mean, it's part of the business of the group, right? It
Yes,
may not be
absolutely.
your personal business, but we've only got you to ask.
Exactly. No, so on the SME topic, I think one point is that the nature of SMEs have changed over time as well. I mean, you have now, in the service sector, IT sector, programming, it's a different SME to what it potentially was 10 years or 20 years ago. And secondly, I think on the SME topic, what you do see is that this is something which is often involved from a government perspective in terms of development plans and development banks, and some of them have some sort of equity financing component within the SME, because one of the things with SME in particular is their thin and narrow equity base. So it's not just a question of lending the money, it can also be a question of growing equity, which is not just from retained earnings. And that's something which is more of an equity topic, and can also be sort of a development program topic.
Michele, I mean, have you got a thought on that? Because, I mean, again, it's not your particular level, area of banking, but obviously the bank does do this. And I know that I'm not sure, is the stock exchange represented here? I know that Richard couldn't come because he's away, but anyway, the stock exchange, the Budapest Stock Exchange, I know, has a particular program where it seeks to educate SME owners, partners and shareholders into ways of accessing capital rather than just borrowing it from the bank. I mean, do you have some thoughts on that? I think it would just be interesting to know where that is.
There is the Nomad, this nominated advisor, there is some advising, and there is a special section called Extend. This is the, let's say, the entry point for the stock exchange. And there are quite a few companies there, but and at the same time, it's also an initiative by the stock exchange. They have this every year, and I think this year it was the 10th or 11th occasion. They selected 50 companies, which sort of prospect for and ready to go to the stock market. I think it's, from an educational point of view, these are very important initiatives, but if you look at the result, it's relatively limited. If I am not mistaken, and it's a 10-year process, so quite a number of companies, and overall, not in the premium, but in the standard section, there is 2 companies out of this, let's say, quite big pool of the companies. So, and I can only repeat myself, maybe that's my mantra, that I think if you look at the size of the SMEs in Hungary, I think this is typically, we can have a look at it from different angles. This is ask for or cry for bank financing. So only large Hungarian companies, again, I think it's important to see that in the European level, these are mid-caps. They are ripe for the capital markets. And again, this after the privatization, that the structure of the economy where we are only a handful of such companies. There are lots of international companies. You shouldn't forget that, if I'm not mistaken, 30, 40% of the corporate financing is intercompany in Hungary. That's extremely high internationally. That also shows and reflects the structure of the Hungarian corporate sector. So I think right now, looking at the size of the economy, looking at the size of the companies, I think there is no better solution than bank financing. And I'm just hoping we will see real bank financing soon, because just one comment on that, that right now, only banks are really channels to let's say, transferring the money of the state, because roughly 50% of the new loans are subsidized loans. That comes from the interest rate environment. So I just hoping that the good old normal SME bank financing comes back, and I think this is what perfectly the best solution at this stage for the Hungarian SMEs.
Peter, obviously MOL is the antithesis of an SME. I'm going to get you to agree with something I say in a minute.
Fine.
But nonetheless, I mean, obviously you have an enormous number of companies in your supply chain. Some of them will be smaller. I mean, do you ever, as a group, and two things that I think perhaps you might do, maybe you do, maybe you don't, you'll tell us. One would be kind of supply chain financing. So companies that are supplying you with products or services that you require, you might assist in financing them. And the second thing is, do you have anything like a sort of, what people these days call the fintech panel will be full of this sort of jargon, a sandbox, or, do you finance a sort of technical group to do blue sky thinking and so forth in terms of, I don't know, greening the oil business? So there are two things that you might be financing, you might not be. You probably...
Okay, well, starting with the first one, so supply chain finance. We don't have, we may have in the future. So that's kind of the story of it. With supply chain finance, I mean, there are several different things called supply chain finance, actually, but one particular arm was basically where in the zero interest environment, there were such kind of differences between the buyer and supplier in some cases, financing cost-wise, that it basically made sense to say, okay, the supplier says, instead of 30 days, you can pay to me 90 days if I can use your nice beneficial rates. And because of that big difference in the financing cost, it made sense to make that kind of handshake deal and agree. Now, after the zero interest rate environment very much is behind us, so if we fast forward to today, currently, I mean, let's stick to euros, not forints. It would be a bit uglier probably, but let's stick to euros. Then you have to add 4% for both of the financing costs on the two sides. So basically, if there was a deal space that, okay, 0.5% and 2% spreads originally, that's a 1 to 4. You could agree in a 30 to 90 days, both sides still wins. Simply because we shifted up the interest rates. Now it's 1 to less than 1.5. So now you cannot add 90 days. And if you agreed earlier, you're making a loss actually as a supplier on that one. So that financially motivated supply chain finance agreements, that's a much narrower deal space now. On the other hand, why I said it may come actually, that there are some regulations essentially coming likely on supply chain due diligence requirements, supply chain due diligence directive. And as and when that comes, I mean, that basically will require buyers to vexate their suppliers with a bunch of questionnaires and so on. And one of the ways could be actually how they are motivated to still remain their reliable, stable, partner, is to say, okay, I'm not asking for, payment term extension. You can just participate in my supply chain finance program for helping me comply with these additional regulations. So that can be an extra push for that product in the future, I think.
Okay, good. Anna, part of your job is Capital Markets Union. I mean, obviously, the background to this clearly is European companies, leaving aside the UK for the moment, say German companies, typically pretty much all their financing came from banks. Say 2/3 from banks, 1/3 from markets. Probably it's even more unbalanced than that. In the United States, it would be the inverse of that, even for relatively small companies. Capital Markets Union, obviously, part of its aim is to enable smaller companies to access market kind of financing, rather than bank financing. That's the background, right? That's part of it. So where is it going? I mean, the example I gave you when we were chatting before, that a Dutch pension fund might buy bonds, perhaps a private placement from a Spanish furniture manufacturer, that kind of thing, when is that going to start happening?
Yeah.
And what impact does it have on companies outside the Eurozone?
Yes. I mean, yes, CMU is a big topic, long-lasting project. Indeed, it's about, as we were also chatting, incremental, step-by-step progress, changes. So maybe I give a small update on the recent actions, also maybe referring to what has been discussed, SMEs, and what can have effects beyond the euro area. So indeed, it's a very multi-sided project. Actions are aiming various stages of development of a company, various fields. So very briefly, I don't want to bore you either and leave space for others. So first area, transparency, information landscape. So here we have European single access point. That's a recent achievement. Also European consolidated tape. You may remember discussions. Now it's there. So we hope to show up also in trading data and market activity. Then equity issuance, and in particular SME access to public markets. Listing Act, it's precisely aiming to ease some procedures for smaller companies. There is still a lot of work done about retail investor participation. That's another, let's say, side of the coin, yes, to make retail investors participate. It's not yet fully the case in Europe, as we know, so we have actions, recent actions in this field. Then a lot on market integration, and some themes have been mentioned earlier in panels. These withholding tax procedures. We have now new ideas, new actions to simplify, precisely accelerate these procedures. Also some difficult topics like corporate insolvency. It's still with us, not easy to tackle.
National regulations govern insolvency everywhere, right?
Right. We try to make them converge. So we have some now actions. Let's see what happens. So there is progress. There is also progress on national fields. So some countries do their own capital market strategies. We provide some technical assistance for that. There are also progresses at regional level. You may remember from the summer some achievement, a Baltic index. Yeah, so making one of the index providers treat the three Baltic countries markets as one market. That's quite an achievement, maybe an idea also to develop regional markets.
Admirable, obviously, and there are three wonderful countries, all of which I've visited with great fondness, but they are collectively smaller than a large city. So, I mean, Benelux, if you could say it was Benelux, that might be... Anyway, Olaf, are you... Capital Markets Union, is it a real thing? Are you a buyer of the story?
Yeah, it's difficult to judge from my point of view. Of course, we would welcome sort of unification and make the market more transparent and more accessible across the region. So, yeah, I think I'm not part of that political discussion. You know, what's the hindrance of it? But, so it would be a good thing from my point of view. But on the other side, this diversification, I mean, funding diversification also for a small company cannot be bad. I mean, we've seen some companies who've been taken over by the banks, some family companies, because of covenant violations, which is for a family, which is the worst case which can happen. Some certain funding diversification, not only being dependent on the banking market, but also capital markets should be quite a good motive for small companies to follow.
We've got a red zero flashing there, but we've actually got a couple of minutes left because that's obviously meant as a kind of goad rather than an actual guide. Zoltan, have you got a thought on the corporate financing universe in this country and how you think it might be improved?
Look, I think as long as the corporates get what they need from the current intermediation and there is no regulation forcing them to do something else, then the market is going to settle. I mean, supply and demand will have to meet. The central bank was making an effort to introduce a corporate bond program, which obviously flourished, you know, until the high inflation environment hit, and central banks stopped buying these bonds. And then nothing necessarily happened afterwards. So I think certainly there is room, but this room is only going to get filled if the demand is there. So I think there is a natural way things develop, and I think this is a relatively small market. So, you know, in that regard, you wouldn't see a Hungarian SME-sized company in Germany doing a bond, right? It's just the barriers of entries are too high. Capital Markets Union is a good thing because of the fact that it aims to, or could be a good thing, it aims to standardize the requirements. And I think that would help. And obviously, if it leads to a sort of a reduction of the barriers of entries, then maybe it helps. But I don't think we need to force things. So things happen naturally. And if things happen naturally, that's great. Forcing things will always result in some sort of a disequilibrium. And so I'm getting very philosophical, right?
No,
because
that's absolutely
you
right.
didn't ask me about liquidity of the government bond market and all the rest of it.
Well,
so
we talked a bit about that before, but you're right, forcing things, which is why roundabouts are better than traffic lights.
Yeah, 100%.
Traffic lights are communist.
Because they are red, yeah.
Right, well, on that final note, thank you all very much. We obviously could have talked a great deal more about many aspects of this all-embracing topic. I'm guessing that on our final panel, which is going to be about technology and fintech, there'll be a bit of discussion about venture capital and seed capital and those kinds of things, which is obviously even further down the sort of corporate financing ladder than we've been able to delve. But before that, we're going to talk about financing the green transition. And you'll just have to bear with us a moment whilst we swap over microphones with the next panelist, the next panel, which will be led by my colleague Taylor. And so we'll swap those. Please don't go away. We're moving straight on to financing the green transition. Please join me in thanking these excellent panelists. Thank you very much.
I don't think I had it before.
Yes.
But thank you. Very kind.
Testing, testing. Ah, okay. Hello. Thank you, everyone. We're going straight into the next panel. If you could please take your seats once again. Please have a seat so we can start. Be greatly appreciated. Thank you. Okay, I'm going to get started. My name is Taylor Pierce, and I'm senior economist at OMFIF. It's a pleasure for me to be moderating our ESG panel today. So I'd like to start by introducing our panelists. Laszlo Fazekas, the Deputy Chief Executive Officer of MVM, the Hungarian energy company. We have Ferenc Kemence, sorry about that, Deputy Chief Executive Officer and Head of Corporates, Markets and Investment Banking at Raiffeisen Bank Hungary. We also have Tomomitsu Maruta, Sustainable Finance Associate Officer at the European Investment Bank, David Papp from the MNB, who is Head of Sustainable Finance Policy, and Anastasia Petraki, Head of Sustainability for Germany, Austria, German-speaking Switzerland, I believe, and Eastern Europe at BlackRock. So thank you very much for joining us today. We've already heard on the previous panels about the importance of facilitating the green transition of the real economy, as well as the issue, how finance can help drive this, the issuance of GSS and labeled bonds, and some of the risks that come with these new challenges and instruments seeking to address them. I'm delighted to be joined today by representatives from both the public and private sector, as well as from the financial sector and the real economy, as I think these are all important voices in discussions as we talk about the sustainable transition. I'd like to start by talking about ESG standards and international cooperation. And first I'll come to you, Tomomitsu. As the EU bank, how has the EIB been contributing to the development and implementation of EU and international standards in sustainable finance?
Thank you very much for the question. So first of all, why do we need standards? Well, in 2016, there has been a report, the Green Finance Synthesis Report by the G20, that was identifying as a core challenge for green finance and sustainable finance as a whole, the lack of clarity as to what can be defined, what kind of economic activities can be defined as green. This is a challenge, this is an obstacle, both for investors, but also for issuers of green bonds. What has been the experience of the EIB? How have we contributed to the development and the implementation of the standard, the response to this challenge? We have heard of the intervention of the Commission of DG FISMA in the previous panel, and I would like to stress that in the context of the G20 observation of the lack of clarity in sustainable finance, the EU has taken bold steps in a reform of the Capital Markets Union to facilitate sustainable investment in the Union. The key legislation, the key standard in this area is the regulation to establish the framework to facilitate sustainable investment, the so-called taxonomy regulation. This is the core pillar that provides clarity as to what green finance activities are, or to be more precise, the economic activities that contribute substantially to environmental objectives. This is on the EU side, and this is also a core pillar for international cooperation within the context, for example, of the International Platform on Sustainable Finance, where you have the development of a comparison of different taxonomies. You have, for example, a report on the common ground taxonomy that compares the EU taxonomy with its equivalent on the Chinese side. So, for the development and the emergence of the EU taxonomy, the EIB, the Capital Markets Department, with the help of its in-house expertise in project evaluation, has contributed to the first proposal of a taxonomy in 2017. And for this, comparability and interoperability of markets has been core. There has been a white paper on the need for a common language in green finance that was published jointly by the European Investment Bank and by the China Green Finance Committee under the aegis of People's Bank of China. So then there have been more work, more technical expert groups by the Commission, and this has led to the final adoption of the EU taxonomy regulation to delegated act for the various environmental objectives. And on our side, given the Climate Bank roadmap of November 2020, the EIB has decided to become even more the EU Climate Bank. And in this context, the tracking methodology for green finance of the EIB, which should reach at least 50% of new lending by 2025. So this green tracking of the green finance methodology tracking should be progressively aligned with the EU taxonomy, and to the capital markets with the issuance of our green bonds and sustainability bonds, we are reflecting this gradual process of implementation via the eligibilities of the projects that we can allocate with these bonds, and all of this in an auditable manner.
Great,
Thank
you. We'll come back shortly to some more specific examples of the investment cases of the EIB. But first, I want to come to David. Can you provide some insight on how the sustainable transition is progressing in the Hungarian economy from the MNB's perspective?
And thank you very much for the question. I think it's absolutely crucial to talk about that. And I mean, the first question was about standards. That also, I think, is vital because that creates, they call the plumbing for the ecosystem for sustainable investment. Taking a step back, okay, so just looking at, okay, where we stand in the country, but it could be probably also valid for the region, what I'm saying. So talking about the sustainable transition, I would define that as decarbonization of the economy, because sustainable transition can mean a lot of things now. We don't only have climate change, but we have also the biodiversity reduction as an environmental issue. We have pollution and everything else. So we're just talking about decarbonization here. And I think that's, if you agree on that, that language now, please understand what I'm saying in that context. So where we stand. So looking at the Hungarian economy, I think we can say that we have some good news and some bad news. So from the base year of 1990, we like to use the base year, the Hungarian economy decarbonized by 33 percentage points, which is, I think, a substantial number. I think in the first or second panel, there was a remark about, okay, was this a low-hanging fruit or not? I would like to maybe kind of shed light on an additional figure that from 2005, the Hungarian economy decarbonized 17%, sorry, just not to be mistaken. So certainly it's not only kind of like the low-hanging fruits that happened after 1990, after the economic transition from the planned economy to the market economy. Something is going on, modernization of the economy is seemingly decoupled from emissions. So there is a good trend that we have observed in this past, let's say, 23, 30 years. It's a bit of bad news that in the past 5 years, this trend has slowed, and then we reached a plateau. carbon emissions have not been reduced substantially. I mean, we have also seen rapid economic growth, so certainly we could not decouple in such a meaningful way that economic growth happened and the carbon reduction continued further. So we reached a plateau. I think it's a very big challenge of how we're going to continue the decarbonization. I think there's a huge potential still in the economy, and I would like to highlight maybe three things, three messages that is very much related to this. We have seen some positive developments in Hungary in the real economy. I think solar power installation has been a major success. Based on the production figures, I think we have reached really good penetration of solar power. It's absolutely vital that this continues, but there are technical challenges. So some good developments in the real economy. Some bad news, though. All these developments are due to more on non-market-based instruments. So I'm talking about standards regulation, which is partly coming from the European Union. It's absolutely vital and it's very important, and it has played a great role. What is not really strong, I think, here locally is the market-based, the market signals for the decarbonization. I'm talking about prices. For example, household energy consumption is really high. Also comparing it to other countries in the region and in Europe, there's certainly a price signal issue there. Energy prices are capped, so we should think about policies of how to incentivize the players of the economy to internalize kind of like decarbonization. And we have a huge potential. I mean, see, in the past year, for example, household energy consumption decreased, but it could have decreased more if there could be more incentives for the households to save. So we'd like to see, I think, for further decarbonization, more market-based instruments next to regulation standards, so more effective carbon pricing. Okay, maybe we can talk about taxation, etc., etc. So I think that's a big challenge that we're facing. Third one is there is a huge investment need. So if we want to transform the economy to a net zero economy, I mean, there are some estimation done by the Hungarian government and also from McKinsey, the consulting firm. We're talking about the region from 60 to 200 billion euros, so a multiple of the annual output of the Hungarian economy that needs to be invested for decarbonization to reach net zero economy. And yeah, that's a huge number. That's a huge number everywhere. But I would like to contrast that with what the figures we have seen, talking about the financial sector, that are aligned with decarbonization. So what percentage points of bank loans, investment funds are really channeled into towards decarbonization. And sadly, we are not seeing very high figures. So we're seeing figures lower than 5%. Of course, it's a transparency and data issue can be. The real figure we cannot really know because statistics are not available for all economic activity that are related to decarbonization. But the numbers that we know about are in the very low percentage point region. 1%, 2%, and 5% of the banking system is currently financing this decarbonization. So there is a long way to go. And now the question is, okay, how that can be accelerated, and yeah, for that we need these standards, of course, but not only that, I mentioned also these market-based instruments. So maybe I stop here,
yes, thank
and then
you.
we can continue further.
Thank you for the very comprehensive overview of the decarbonization agenda in Hungary. You mentioned private markets, so maybe, Ferenc, I'll come to you next. What do you see as the role of private sector banks in facilitating the green agenda, and what are the challenges and limitations that you face?
First of all, but I would say here that the banking industry has an immense responsibility in this green transition overall. So this is very important. We stand between the regulator and the real market participants, companies. So our role is crucial here. On the one hand, we would like to enable new actors to enter the market with innovative climate solutions, like solar in Hungary, for instance, is a good example. On the other hand, to help to modernize also the old market participants. And the basic role of the banks here is to channel capital into investments, I would say, that then really have a positive impact on the environment here, and to help the clients to rather go to the circular economy than to the linear, and so on. So there are many initiatives, and how we do this? So we basically are incentivizing here green loans, based on the European Union taxonomy alignment on the one hand, and on the other hand, on our own green bond principles, of course, which is then as well aligned with the international capital market standards here. And this we do. At the same time, we are also, I would say, we cherish the National Bank program here, the preferential capital requirement. This is a very important point. I think Hungary is a pioneer here, giving 7% EU taxonomy aligned or 5% practically capital relief measured on the asset amount, which is then reducing the Pillar 2 capital requirement and the SREP ratio. So I think this is a very important step here. And because in commercial banks there is a RORAC, return on risk-adjusted capital-based steering, this goes directly into some client conditions, and for that we can then provide really green loans or organized green bonds much cheaper than otherwise. I would of course say maybe this incentive is maybe not enough, as we still do not see very high volumes, but I would say this is a major step here. There are a lot of challenges, and maybe also that's the reason why the progress, despite of this incentive, is not so quick. So the one challenge is always the availability of the data, as there are many customers. So how to organize here the green certificate? This is not easy. And the clients do not know how to proceed. So I think this is a difficulty here. The incentives could be more, I think, and also broader, maybe not just the capital. We would need much more incentivized funding also from European institutions here, as there is a funding issue in Hungary, clearly. We have no high rates everywhere. Hungary has a high country risk comparatively. So we need as well a more preferred funding, I would say. And thirdly, and foremost, we need more education. So I would say we are educating our internal staff, our clients. What does that mean? How they can use the green framework? But I would say overall we would need much more education. Maybe nobody should graduate from a business school not understanding the green framework and how to transform and how to use it in a financing and company management. So I would say, I would propose here also on a regulatory basis to insist on more education everywhere in the economy. So these are the main challenges, limitations from my perspective.
Data, incentives, funding, and education could all be better from your perspective. Yes. Thank you. Anastasia, I'll come to you now. Same question. What do you see as the role of, as an asset management firm? What are the challenges and limitations you face as well, and how are you working to help facilitate the green agenda?
Thank you. First of all, the role of asset managers here is that of a fiduciary. We are not a bank, and the money that we manage is not our own, it belongs to our clients. So what is our role here in the context of the green finance agenda? We follow the same 3 principles that we follow overall in terms of how we manage money on behalf of clients. First, we start with the client. What are their objectives? What are they trying to achieve? And then our job here is to make sure that we offer an appropriate platform of sustainable and transition investing products and solutions. The second principle is performance. So our job is to maximize risk-adjusted returns within the mandates that clients give us. And here, of course, consideration of sustainability factors comes into play, because we need to consider them when they are financially material, even if we do not manage a product with an explicit sustainability focus. And the third thing is, the third principle we follow is base everything on research, data, and analytics. So, for example, for the transition, it is our job to understand how is the transition likely to unfold, what are the investment implications for our clients, and it is also our job to make sure that we offer clients the data and analytics that they need to also understand this and the impact that it will have on their portfolios. Now, on the challenges, I would probably add on top of what has already been mentioned, the sheer complexity of this. And I say this, I'm mindful I'm representing now the largest asset manager. The second thing is there is still a lack of clarity and lack of standards and lack of clear definitions, which then leads to issues like what Matthias mentioned at an earlier panel, where you have a patchwork of regulations and different labels that are not necessarily 100% consistent with each other. And the third thing is that we should not forget that the transition and sustainable investment is not immune, does not exist in a silo, in a vacuum. It is subject to the same macroeconomic challenges that we see overall in terms of, rising inflation, rising interest rates, geopolitical fragmentation, and so on and so forth. But to come back again to the original point around our role here, financial capital by itself cannot deliver an orderly transition. It is the cooperation between governments, companies, and the financial sector. It's like a team sport, but again, if I look across the room here, I think I am preaching to the converted, so we'll stop here.
Thank you. I think that's a good opportunity to bring Tomomitsu back in. Obviously, the EIB is a major financier of green projects. Could you tell us a bit about that and maybe list one or two compelling examples of the EIB's investment in green bonds?
Thank you so much. Actually, there are so many examples. As you said, EIB is one of the major financiers. And I would like to comment what Ferenc has just mentioned about the loans before moving on to the bonds. Because we have had some loans, actually 6 projects in 2020 and 2021, located in Hungary that had been allocated from our green and sustainability bonds. So there have been disbursements, actual flows of money to the real economy that have been allocated from our green and sustainability bonds. And one of these projects is actually with MVM, so it was a network upgrade. So now about some examples of recent examples, some recent innovation that the EIB has taken on the investment side of the green bond market. There has been recently, for the first time, the EIB has participated as a lead investor in a green bond issued by a French corporate, Valeo. The EIB has purchased 150 million euro of a 600 million transaction. And this was the debut green bond of Valeo. Another example is beyond the borders of the European Union. It is called the Global Green Bond Initiative. This is a fund that has a de-risking mechanism that is supported by a, I quote, European Fund for Sustainable Development plus guarantee. And it sees the participation of many development finance institutions where the European Investment Bank has a coordinating role. And this fund will invest in green bonds issued in emerging markets. So as you can see, Team Europe is acting beyond the borders of the EU, and where exactly the standards that you were mentioning, where there is the need for, let's say, some more clarity on the consistency within the EU standards, you can imagine when you go outside the borders of the EU that this need is even more important. So this will be part of this fund to work about this. And you were also mentioning education, Ferenc, and you as well. And I completely agree. And this market is also relatively new. The first green bond was in 2007 and was structured by the head of the sustainable finance team of the EIB, Aldo Romani. So I'm working in this team. So it's a very new market, and there is the need to build a pipeline for new green bond issuance, and this is why it is also a focus of the Global Green Bond Initiative, because in emerging and developing economies, this is even more needed.
Great, thank you. I think we can talk all day about greening portfolios, but really, at the end of the day, this discussion also needs to green we need to green the real economy, really. That's what this is all about, decarbonizing the real economy. So I'd like to bring Laszlo in. Financing in Hungary, in Central and Eastern Europe, and generally in Europe, is still dominated by bank lending. So can you speak about your experience with bond issuance earlier this year and how this relates to MVM's sustainable transition?
Yes, thank you very much. Just to give you a context, so MVM is a fully state-owned company, and we have market leader or monopolistic positions at almost all of the natural gas and electricity value chain here in Hungary. So when we talk about transition and decarbonization, then transition of the Hungarian economy and especially the energy industry basically cannot be done without MVM Group. And this defines basically our strategy. And as you perfectly said, also in case of MVM, our financing is still mainly based on bank lending. But in 2021, we realized that basically we reached our limits with our banks. Or otherwise, they reached their limits towards us. So we experienced that we cannot increase further our credit limits because of lending limit issues. So we had to make the decision to go to the bond markets. So we obtained the credit ratings, and first in 2021 we issued foreign bond, then euro bond, and then this year we issued dollar bonds, and this was a green bond, first in our history, basically. And we consulted a lot with investment banks, other banks, and peers, and our conclusion was that as a utility company, against which the market expects really the decarbonization and the transition, basically, we have to go to this direction, to issue green bonds. So we set up a green financing framework in this May, in which we outlined the reporting, the way of reporting, the use of proceeds, and all these necessary requirements. This green financing framework was completed and prepared in line with all the relevant guidelines, EU taxonomy, and so on. And actually, it was quite a good experience, and it showed us that this is the way we should proceed. Because it was already mentioned, I think by David, that this transition, and especially in the energy industry, will require a huge capex. And basically, we expect that in the next 5, 10, 15 years, MVM Group will have the biggest capex program of its history, because we have to really spend a lot on the transition. You know, we have in our portfolio the last lignite-fired power plant, Matra, and one of our key target is to reduce greenhouse gas emission and the intensity of greenhouse gas intensity of our power generation, which means that we will need to phase out Matra power plant, and we will need to replace this capacity with other capacities with lower carbon emission. Of course, huge capex. On the other hand, it was already mentioned that the increase of the photovoltaic capacities is a big success story. Absolutely agree. But we see that it will continue. And it is, on the other hand, a huge challenge for us because we operate the transmission system and we operate part of the power distribution system. And you know, the integration of the photovoltaic capacities into the grid is quite a big challenge, I would say. So it also requires development. So for all of this, we think that that basically the green bonds, sustainability-linked bonds, this is the way to go. So this is how we see this in the future.
Right, thanks. I have a couple follow-up questions, but I also want to give Ferenc and Anastasia the opportunity to please also post questions or comment if you'd like. My question would be if you could provide more insight on the green financing framework itself, which KPIs are used and how these are being monitored.
Yeah, so based on green finance based on our intake, which was by the company. Million tons till 2030 of our energy or electricity production, the emission intensity by 40% till 2030. And in the green framework, basically, we included capex in relation to the development of the grid, so the transmission and the distribution system, and also the photovoltaic, the increase of the photovoltaic capacities. And basically all of the reporting, audit, and other principles are set up very clearly in this public document, in our green financing framework. And this year, we will make the first decision on the allocation of sources, also in line with the framework.
Great, thank you. Ferenc, I wonder if I can come to you now. Is Raiffeisen involved in active corporate stewardship practices as a shareholder? Are you engaged with investee companies in their transition plans, or if you want to comment on anything that Laszlo has laid out?
Yes. So in terms of the group strategy to facilitate here the green transition, I would say there are three main pillars. One pillar is through our balance sheet. Of course, like financing as much green as possible for customers on the green transition in terms of green advisory, like how to do this, but also setting the best possible financing structure is the second. And the third is to shape the market, I would say, awareness as such, like there's a readiness for a concert strategy making and action plans on the overall market, which is consistent in terms of data requirements and the advisory. So this we also are facilitating. And in that sense, we are also concentrating on some partnerships. So we have signed, for instance, the UN agreement that we will have, I would say, in our loan book, 35% of green loans, and we have some till end of 25. We as well have some sector, I would say, exclusions, like we cannot finance anymore, and as well we shall get rid of those industries. And this is also clearly, I would say, communicated here. That's also important point. We internally have also our sustainability report, where we are also transparently communicating here with the market. I would mention we have also asset management companies having and managing couple of ESG funds, which is then again an investment opportunity on the other side. And here, in terms of the investee companies, I think what is very important, we are advising them to use the National Bank opportunity here, and we simply are structuring loans and bonds here cheaper and also more easy to decide based on the capital need. We have some also internal fund transfer price benefits for the green loans, which is, I would say, a concise decision of us to support here the growth of the green loan book for the investee companies. We do, well, in Hungary, we were the first to do green bond advisory, emitting, buying green bonds. We have all internal green bond framework, so this is also, I would say, very important. But this is not an easy road. So we see on the investee company side that the governance of this is not an easy one. So need to concentrate on many things here, like also their corporate board composition, for instance. In our board, there is a clear responsibility for the green agenda. There is a sustainability council, and we have the sustainability report. That's one topic. But also executive compensation and MBO targets, for instance, in the bank, but also in investee companies is, I would say, a big topic. So bribery and corruption to be avoided, political contributions and lobbying to be regulated. Many things shall as well be aligned to effectively use the green framework. So these are the major areas what we have in the governance and what we see as a necessity in investee companies to have a governance. No?
And just one follow-up to go off of Laszlo's comment that they've kind of reached the end of what can be accomplished by a bank lending. Would you agree with the assessment that there is a limitation in terms of what bank lending can do and that there is a need to bolster capital markets and turn toward other kinds of instruments?
Well, in terms of limitations of bank lending, I think, for instance, in Hungary, I think it's true for CEE, the banks are well capitalized and highly liquid. One limitation is that this green framework is support national banking capital. There is, for instance, in Hungary, not necessarily in other countries, there are a lot more to do. The funding currently is more expensive, but still, I see rather this price issue of the funding than a limitation on the ability of the banking sector. So here, capital liquidity-wise is ample possibilities available. It's more the incentive side and the price of funding, and here I would say the funding institutions, and here also National Bank help, but other preferred fundings, also EIB and so, to provide more beneficial funding for this green transition. On the bond side, well, this can be, I would say, a good competition, whereas from a risk-return perspective, it's feasible. We organized a couple of green bonds in recent years, even for the real estate industry. So it can be a good complementary, but I would not say that currently bank lending is limited. What is limited is more the beneficial funding and those capital incentives, as well as the previously mentioned other obstacles.
Right, thank you. Well, that's a perfect segue to Anastasia. Can you speak about any active stewardship practices of BlackRock, or more generally, if you can offer your perspective as an asset manager on the progress you're seeing with regard to GSS issuance, and maybe commenting on what Laszlo's laid out from the MVM experience?
I will start big picture first. What do we mean when we say stewardship? For us, it is about engaging with companies to promote, to encourage effective corporate governance and corporate practices that we think are essential for the long-term success of companies, and we do this through the engagement, that is the dialogue with companies, through our voting activity, but also engagement with broader stakeholders. And coming back to the point I made at the beginning, that what we do is based on research. We have done the research that shows an orderly transition will basically be better for everyone. It will foster a macroeconomic environment that we think is better for returns for our clients. And that is why we consider, for example, that companies could benefit from developing credible transition plans. And what do we mean when we say transition plans? We think this is a core aspect of corporate strategy that sets out targets and actions to meet those targets in terms of the green transition. And this is useful both internally and externally. Internally, we think that this process of transformation helps bring together business strategy and climate goals and CapEx, capital allocation decisions. And all of this, we think, helps company management assess the long-term opportunities of a company, but also the future competitiveness, like where am I going to stand as a business compared to my peers in 5, 10, 20 years from now. Externally, this type of plan is useful not just for shareholders, but also broader stakeholders to understand how a company plans to create value through this transformation. Now, companies are different depending on the sector, the region, the starting point. So we do expect that the content, how specific a transition plan is, will differ across companies. We also expect that the content will also depend on how essential the topic of climate change and climate risks are to the business model of a company. So then comes the question, how can we tell if a plan is robust? The things that we will look at will be, first of all, is it a core part of the company strategy, or is it let's call it a shiny brochure that sits somewhere on the side? The second thing that we will see is, does it do what it says on the tin? As in, does it set out the short, mid, long-term ambitions of the firm, the plans it wants to, the actions it plans to take? CapEx, the magic word for me, capital allocation, where is the money going to go to? Towards what activities? Then the third point is the plan honest with the challenges that the company will face as part of this transformation, and also the limitations of what it can do? And the fourth thing we heard, governance and oversight. Who is accountable not just to set this up, but also to see it through, to make sure that this transition does happen and it is a success? Now, do we see company progress? Most definitively, we do see company progress, and we think that the landscape has developed massively. I mean, there are different things we can say about how companies choose to finance themselves, and I think this is not just a company decision, but a broader financial framework. In terms of stewardship, what we have been very pleased to see, we have set, for example, a climate-focused universe. It is over 1,000 companies worldwide, and these companies together account for 90% of Scope 1 and 2 emissions that we as a firm own in terms of equities overall. And we have seen that the commitments, but also the reporting in terms of TCFD framework has increased drastically. Right now, about 80%, that's 80%, of this universe is actually reporting towards TCFD. It was less than 60% just a couple of years ago, so we definitely see progress.
Definitely seeing progress. Is there anything that you would like to see specific progress on, either on the corporate or the SSA side in terms of issuance?
It is the transformation. I mean, it's one thing to set the targets, but another thing to see what is the business, what is the company actually doing to meet those targets, the CapEx, where is the money being spent on, how much does the business model need to change to be competitive in a low-carbon environment. It's many different things.
Great. Well, that's a perfect opportunity for me to go back to Laszlo, as Anastasia laid out credible transition plans and how important they are. What are some of the lessons that you have learned that might be helpful or relevant to other energy companies as they consider how to finance and implement the sustainable transition?
Yeah, I think here in the region with all of the other utilities and energy companies, we are in the same shoe, basically. So it was perfectly mentioned that you need a credible transition strategy, transition plan, and if you set this up, you will need to focus a lot on the documentation, on the data, basically data collection. We all see the increasing reporting requirements, and for a big company like MVN Group with more than 100 subsidiaries, basically meeting these requirements and setting up the IT systems for the monitoring the data and collecting the data in an auditable way. This is I think a big challenge, and this you cannot start soon enough, I would say. This is our experience and our lesson, basically. And you know, with this whole transformation, we also had to realize that it needs a kind of mindset change for the management as well. And we, as MVM Group, just at the beginning of this procedure, we just started a transformation program with education, with the involvement of the different levels of the organization and also the subsidiaries. I think it's a long way, and then you need, as a senior management, a high level of commitment and enthusiasm, I would say, because it will need a lot of effort to transform a big organization in a sustainable way.
Great, thank you. Well, we've heard about a number of challenges, but I would like to shift now to maybe a more positive note, which is highlighting the pioneering and innovative initiatives from the MNB and including incorporating sustainability into the central bank mandate, which is really quite progressive in this space. So, David, I'll come back to you. How has the MNB been taking a lead within the central bank community on sustainability? And if you can speak to some of the programs and initiatives.
Yeah, thank you very much for the question, because maybe that's my opportunity to shine now, but so that's not my intention. I just want to start with one important thought that, yes, we do have a green mandate, which means that, I mean, next to our primary like inflation, financial stability mandates, we also need to do something about environmental sustainability, and that's very important. It's absolutely, so how we look at this is absolutely vital to consider sustainability, risk sustainability issues nowadays. So you heard in the morning panels and the morning discussions of how much kind of like the energy sector or energy prices have been driving up inflation, for example, and what kind of vulnerabilities it means for this region, but for a Hungarian economy in particular. So it's absolutely a risk issue, a risk management issue to deal with sustainability. That's how we look at it now. We have done our numbers, we have done analysis, and I also want to highlight that by far the worst scenario for the Hungarian economy is that we are not transitioning. I'm talking about kind of like a 30-year horizon. When there is no transition, just kind of like we let climate change run wild and all the physical risks to materialize, it's by far the worst scenario for the Hungarian economy. A disorderly transition is a little bit better, but an orderly transition is the best in terms of welfare. So kind of counting in all the different costs and the benefits, kind of like the big picture is that yes, we should work towards it. And I'm seeing in this panel we have representatives from multilaterals, capital markets, banks, and I see that everyone is doing a lot, and that's a good sign, but I think we need to come to the mainstreaming, so how this can be scaled up. And that's, I think we are a little bit now not seeing a very positive picture that the scaling up, how this will take place. I mean, we have good drivers, but the scaling up is not happening yet, I would say. A bit of the justification of why are we dealing with this issue. We think it's a big risk, and it's also an opportunity for the Hungarian economy. So we have started working on this 5 years ago, so we come a long way. We basically have a green mandate, as I said, and two strategies, one on the monetary policy side and one on the financial supervision side. On the monetary policy side, of course, that is very much connected to the economic environment of what is the monetary policy. If monetary policy is restrictive, of course, kind of like the green elements in a monetary policy are also limited. So that should be understood in that way. There have been a number of successful initiatives, refinancing programs, asset purchase programs. We also helped a lot with the green bond market, residential housing, etc. So we've done a lot on the monetary policy side. And we have done quite a lot on the financial supervision side. And I think by far the most important, maybe two things. One is that we really started taking climate risk environment very seriously and integrate it into the prudential supervision of the banks. Really set expectations, we set guidelines, expectations, supervisory expectations, and now since from this year we are actually in the reviews of the banks, we are looking at item by item whether these expectations are met. And I think this is very important because with this, I think we can elevate sustainability issues into kind of like boardrooms. We will see the results that there are changes in corporate governance. We see some financial products are being developed, so we really see that this is working. Of course, I mean, mainstreaming is yet, I think, a challenge. The other one, so that's on the part of risk management, and we try to also do with our tools, we try to also help developing the market. That can be also trivial things like data provision, provision of statistics, etc. But we also, for example, Ferenc, you mentioned that this capital incentive that we have in place, it's quite, I have 2 minutes left. Sorry, I try to
it's okay, we can go a bit over. We can cut into the coffee break.
So we have this capital relief program for green assets that's quite progressive. Also, I mean, it may be a whole issue in itself of whether the capital regulation can be used for incentivizing the green transition. I don't want to go that much deep into it, but we're using this as a toolkit also to provide a little bit of the incentive for Hungarian banks to reduce cost of capital on certain green exposures. So that's two, so market development, and maybe the third, kind of like in a big bracket, example setting. We try to also, in our own operations, also do that kind of like carbon reduction programs, and we also offsetting our footprint that we cannot reduce, so that's on the operations side, and we try to be as transparent as possible. We issued TCFD report for the second time, a climate risk report, if someone hasn't heard about TCFD for the second time. This year, we are doing our own green finance report, and we try to also, how to say it, to walk the talk, or is that an English expression? So try to set an example of how this can be done, and I think that's also very important. Sponsoring education, Ferenc, you mentioned education, capacity building, technical assistance, so we try to kind of approach it in an ecosystem way, which I really think is the most important, that everyone is really kind of trying to incorporate the sustainability into their business practices, and this is happening as we see in this panel. So I think we can be optimistic, but there is still a long way to go. 20 seconds.
That's great. Yeah, we're just going to go a little bit over. I hope it's okay if we cut into the coffee break, but I do want to have a chance for everyone to have some kind of concluding remarks very quickly. But first, I just want to say it's really laudable what the MNB is doing, and I think it's really important to see examples like this in the central banking world, which is quite conservative when it comes to issues of sustainability and decarbonization. And clearly the market response has been positive, as Ferenc mentioned. So with that, just very quickly, under a minute, if everyone could just say what the most important thing that they would like to see in ESG, in the ESG finance space, and maybe if we could end on a slightly optimistic note, that would be great. Tomitsu, maybe I'll start with you.
Thank you. I would like to comment what my former colleague Thomas Schlatzik in a previous panel, who is now at the Austrian Central Bank, he quoted Il gattopardo di Leopardi, di Tommaso di Lampedusa. So everything changes, so nothing changes. I would like to, I love Lampedusa, but I would like also to go back to the Cratylus, as this is kind of a Socratic dialogue. And I will finish shortly. Ta pantareica uden menei. Everything moves and nothing stays. I think that it can go in many directions. There are many risks. We heard about greenwashing risk, but there is also great opportunities. And you are mentioning education. And Ferenc had said, why are the benefits? There are many types of benefits, potentially. Some are some market. What about demand? We heard in the second session, a gentleman, Mr. Nali, I hope I'm not wrong in the pronunciation, from Neuberger mentioning a lot of demand for such type of products. So if there's a lot of demand, what to do? Well, last Greek word, phronesis. There's need for wisdom applied to practical action with prudence. This means willingness and care. This means being accountable, this means being clear. On our side, for example, we have an audit by a supervised auditor with reasonable assurance. And there are many cases. AKK, who was talking earlier, has its framework. It is public. They have done transactions that are quite striking, like green samurai bonds. And I think that this is public information that can motivate new players to come to the market. Thank you.
Thank you very much. Anastasia?
Okay, nothing as poetic as that. I want to just say something about policy and regulation, because, many people will say, oh, no, not more regulation. We do see policy as one of the three main drivers behind the transition, the other ones being technological innovation and consumer preferences. And these three drivers are mutually reinforcing. So you can see, for example, policy reducing the cost of renewable energy that then makes it preferable for consumers. So we really need to spend some time on this. And when we're looking at sustainability overall in the transition, we need to see the big picture and the whole puzzle. It is not just sustainable finance. I mean, we can all have disclosures and data and so on, but it's also industrial policy, because this is where the natural incentives for green investment will happen.
Great, thank you. Also?
Yeah, so as representative of the real economy and the energy industry especially, the sustainability basically strives us to really do this transformation of our generation portfolio, the grids. So we expect that in 5-10 years, the generation portfolio will be with much less greenhouse gas emission. Our systems, grids will be more robust and will be able to integrate all of these renewable capacities. As I mentioned, this is a big modernization and transformation program, and this basically brings development, and this is the future, so it's fine.
Great, thank you. Everyone's staying optimistic so far. Ferenc, will we continue this?
So, as a bank, of course, we would like to see more preferential capital treatment for such financings and transformation. I would say on the one hand, this would be important. I would like to see also more regulation maybe on this education topic, potentially also mandatory transition plans for companies. We can go that far, helping here the green transition. And we are also optimistic this will go. I truly believe as well that on the long term for the Hungarian economy, the successful transition is key. And here the financial sector will play a key role. So,
thank you. David, you have the last word?
Yeah, so try to just go back to my first thought about kind of like using the price signal and the market-based instruments. I'm very much in favor of carbon taxing, carbon pricing. In some way, it's a very difficult topic, of course. I mean, it's no wonder that this is not kind of like a universal, there's no universal carbon price yet, effectively high carbon price yet. But I think it's absolutely essential that we work towards that goal, that these externalities which come from emissions are somehow internalized. I think carbon pricing can do that, and then it probably will solve a lot of the issues that we're facing, cost issues about green technologies, etc., etc. So somehow kind of like strengthening that, kind of like the price signal which comes from, like polluting activities with high emissions. I think that's also what the Hungarian economy would need. There are certain different paths to that, and there are other objectives. But in some way, I think we should strengthen that and work towards that make it to our benefit. So that I would like to add here.
Great. Well, thank you very much for your attention, and thank you very much to our panelists. It's fantastic to have such voices from different representative backgrounds here on this panel, and it's important to bring together the real economy, finance, and policy making together in these conversations. So thank you very much. We're now going to have a coffee break, which will be cut slightly short, just a few minutes, and we'll return here at 3:35 for the final panel of the day on fintech. So thank you all very much.
Great pleasure.
Okay.
Okay.
And please will start.
Thank you.
There? Yes. Good. Ladies and gentlemen, thank you very much for joining us for the final panel of the day today. All the most important people have stayed till the end, and that is evidenced by the fine company that we have. We also have a very highly qualified panel to talk about this topic today. This session is titled FinTech and a Digital Future in Central and Eastern Europe. And because it is the last panel of the day, I'm going to make sure that everybody is awake. So I'm going to actually be asking a question about 2/3 of the way through the panel, and you have to participate. You have to put your hand up and answer one of the two options that I give you. But you'll only be able to do that if you're listening very carefully throughout the panel. So without further ado, I will introduce these guests here, and then we will talk about fintech and a digital future in Central and Eastern Europe. On my left here, we have Mate Brzozowski, the CEO of Perfinal. Sitting next to me here, we have Anniko Zambati, the Chief Digital Officer from the Hungarian Central Bank. Sitting next to me on my right and on your left, we have Balint Fischer, the Chief Business Development Officer from Dawson. And from Germany, we have Tobias Tenner, Head of Digitalization and the Associate Director of the Association of German Banks. And so in this panel, we're going to take quite a wide approach to this topic. We're going to talk about digital assets and the future of capital markets generally in Hungary and in the region. We're going to talk about the emerging role of fintechs and how fintechs and banks are working together and what the scale and pace of innovation looks like. And finally, we're going to talk about central bank digital currencies and public digital money and the role that that plays in fintech in the region. My name's Chris Ostrowski. I'm the CEO of the Sovereign Official Digital Association, SODA. And SODA works with technology companies and central banks as they go about their public digital money work. So I'm going to start with Anniko, as it's very much a kind of a home game for you. And I'm going to ask you first about the fintech sector and how the financial institutions in Hungary are being prepared for digitalization. Talk us through the progress that you've seen since you've been doing this role and how you see the state of play at the moment.
Thank you, Chris. So I would jump back to the years of 2016-17, when we at the central bank realized that our banking sector has been operating quite expensively and quite inefficiently. And so when we were looking around, and we have found that maybe we should do something special to speed up the digital transformation. And therefore, the management of the central bank set up a dedicated executive directorate for supporting the digital transformation of the incumbent financial sector and to support the safe spreading of fintech initiatives. So this executive directorate, under my leadership, issued a fintech strategy of the central bank, which exactly highlighted the need for digitalization of the incumbents with the help of the fintechs, but we didn't want to set any preferences, so we also wanted the fintechs to be active, to approach the customers with the modern, convenient, cheaper and safer products. So we centered the customers as the final objective. who has the selection. And actually, in this way, we wanted just to ensure that there would be incumbents to be active in Hungary, because we felt that without this push from the central bank, they would just be outpaced with either European or global financial service providers.
And how have they responded to that? How have the incumbents responded to this push, this incentive?
Actually, this was not so easy to start the dialogue with them. And we, first and foremost, started to measure the level of digitalization. So we set up our own methodology, we set up our FinTech and digitalization report, and based on the findings, we also issued a central bank recommendation, which was aiming to advise strongly to the banks that they should set up a digital transformation strategy, adopt it at board level, and of course share it with us. And so we are still following the progress of the implementation with the yearly interviews and discussions on what they could achieve and where we can be of their help.
So it sounds like you can report some progress in this digitalization change of the landscape, but perhaps some frustration as well in perhaps how things are going. So, I mean, I will, if I may ask Balint here in the company that you work for, Dawson, you can tell us a little bit about that. But this is one of the, I suppose, best positioned organizations to work with the existing financial sector as a technology innovator. And how have you found the journey? Has it, would you say that the incumbents are also not as active as you would want, or have you been impressed by the pace of change?
Well, hello everyone. I am Balint Fischer, and I am from Dorsum, which is the, basically, we are seeing from the numbers, the leading fintech company here in Hungary, operating in 10 countries around. And answering the question is changing. It's changing rapidly because, like 5 years ago, we used to be a vendor. And it's not just the wording, it's the way how we work together with incumbents, with financial institutions. Like, they want something and they are looking for not partners, but vendors to deliver that on the solution and technology side. And I believe what is changing rapidly, and it's a good thing, and we also operate in the UK and the Swiss market, and it's working like that for a decade now, and now it's in the region, it's getting the same shape, meaning that we are getting partners, and we are speaking about real partnerships with financial institutions. What does it mean in practice? That basically we can shape together what they want. Because in Dorsum, what we are doing is investment wealth management related software products. Pure B2B, we work with the leading financial institutions in Europe, more than 80 clients, and obviously we understand the domain that we are covering, this investment wealth management domain. And what we can see is that the other side, basically our clients, are looking for not just solution providers anymore, but end-to-end partners that can help understanding the problems that they are facing and solve those problems. What does it mean in practice? How we work these days, we start from the very beginning of solving a problem of financial institution, like doing a feasibility study together and doing the business case together. And then we set KPIs, we measure the impact of the change that we are driving together in an agile way with our partners, and at the end we can also measure the outcome. And this is a new way of thinking, and this is a new approach, and I believe that this kind of approach is also helping to deliver better solutions and more client-centric solutions.
So this is a move from being just a vendor to an end-to-end partner with existing institutions. And do you work in the wider region as well? You spoke about the number of clients you've got and your work in Switzerland and the UK. Would you say that CEE is your main region?
Yeah, absolutely. So basically the core market for us is obviously the Hungarian market. We are almost 30 years old company, so we are not a newcomer startup fintech, and work basically with all the leading banks in the region. But the stronghold is definitely Hungary and the CE region, and have more and more clients out of the region as well. But absolutely, the core experience that we have is coming from the region.
Thank you. And Tobias, if I may ask you for an outsider's perspective, as someone who works for an association of German banks, how does it look like the CEE is doing from where you're sitting? We've heard about some progress here. We've heard about how fintechs and financial institutions are collaborating. Does it look like that from the outside, and how does that compare to what you see in Germany?
Thanks, Chris, for this question, because I think there's one difference between the markets.
Yeah.
If we look 12 to 15 years back to this fintech market, we believe that the fintech's going to eat our lunch in 2020. And we realize that's not a fact. We realize, and that's what you mentioned, is there is a partner relationship. There's a relationship especially in the automation of processes, in the digitalization of client interfaces, but also we see in the last 2 years innovation in the area of distributed ledger technology, tokenization, which is more driven by fintechs as by banks. I think the big difference between the German market and the Hungarian market is that Germany is a wider market, it's a bigger market, and if you look for some challenging banks, so like a N26, a Trade Republic, etc., who have to scale up quite fast the business, who wants to go or step in at first in the German market, the French market, or in the British market, either then that they would go to the Hungarian market, which is a big advantage for the Hungarian banks, because they will have not the competition with the fintechs as what we have in Germany, for example, in that manner. On the other hand, there's in Germany a big disadvantage because of this huge market and this strong competition also, that if you want to apply for a license or if you need any kind of support, and it's good what you have mentioned from your side, we know, for example, at the moment, if you want to get a crypto custodian license, it needs 2 to 3 years to get them. Commerzbank yesterday get them, and it's an incumbent bank. And the regulatory authorities need 2 years to confirm that Commerzbank could run the business of the crypto custodian. Imagine if you were a startup and if you want to run this business to convince the regulatory body about your activities, it's quite more difficult. And I think there are some chances from the Hungarian market to step in, to show that this process could be more easy. And I think there are some good war stories from Lithuania. So they ran this business more than 10 years, and that's one of the markets with the most PSP licenses. On some point it's critical because of the passporting and the trust if the regulatory body gives the same security check as what we have, for example, in Germany or in France. But I think the chance could be usable for the Hungarian market.
So, I mean, I suppose an outsider's recommendation might be to find a kind of USP, like the PSPs in Lithuania or the identity work in Estonia, or some of the things where you just can have something which makes, as we see behind us, Hungary a regional centre. That's probably something for us to think about. I mean, Matti, just if you tell us a little bit about the work that you've done with Perfinal, and is there something that you think lends itself naturally to Budapest to take that space that Tobias is describing?
Yes, good afternoon everyone. My name is Máté Brazovsky, founder of Perfinal. Perfinal is a core banking system provider, and in the discussion, as I hear the introduction of the others, we represent the fintech side in this whole workshop today. What we have built is, I mean, as a fintech, what we are trying to do is to leverage the most recent technologies that basically front-running the innovation and bringing in other use cases. But building a fintech is about risk. So introducing new type of asset classes into existing operation or launching new services, it's always a risk. And regarding to just reflecting on some of the topics that the partners has mentioned, is that how I feel being a fintech in Hungary has evolved in the last 2 or 3 years. But I think where it evolves is that fintechs are the one who are legitimately and by nature required to take a risk to experiment with these new technologies, because otherwise we would not be able to show something new that's already not present at the financial operation. So
tell us how it's evolved then. So what's changed, I suppose, in these last few years that you mentioned there?
It was nice how Tobias mentioned that a few years ago, even like 5 or 6 years ago, the story was that fintechs are gonna challenge the banks, they will take over the market, and they are gonna eat the lunch. It's important to differentiate fintechs who are customer-facing, like Revolut and the neobanks and other neobanks, and fintechs who are actually trying to build innovative solutions for the financial sector itself. We're in the second position, so I haven't really faced the challenges of building customer-facing products yet. But when we are trying to, how our kind of pitch evolved during the days, that first we wanted to create a core banking system for banks who would like to replace their existing core banking system to be more efficient, to be more transparent, to be more faster in innovation. I mean, in operation. Right now we are changing that story. So in the last 12 months, we have basically offered the financial institutions the chance to actually launch and experiment with new technologies in a way where they don't really take too much risk. We do the research, we do the heavy lifting, and eventually they can have like a much better understanding. And this is true for the financial institutions, but this is also true for example, already established technology providers who serve the bank. So they are all interested in our view that what's going to happen and what our experience when we talk about DLT technologies or even CBDC approaches.
And talk us through these technologies a bit more. Are you talking about the more pioneering and innovative technologies like blockchain, or are these better systems than what are currently there? Talk us through the kind of USP for Perfinal here in this space.
Yeah, in case of Perfinal, our USP is that we wanted to create a system that is able to replicate the new type of asset structures or new kind of economic structures that are eventually brought in by the innovation and the customer expectations. So, for example, when you think back around 10 years from now, that was when Revolut TransferWise launched. They offered some really easy to understand features like free transaction between customers or free exchange of forex between one currency to another. What they have done there is that they moved the actual operation into a virtual space in this e-money structure, which was a walled garden of an internal operation. So that's how they could eliminate the features. But where they evolved is that the competition after a few years was about that who are the ones who can introduce faster and better customer experience features, because they are going to one who eventually will prevail. So there can be like 300 neobanks. Lithuania is a really good example. So I think in 2022 there was like 400 e-money applications pending at the Lithuanian Central Bank. I never understood what all these companies want to do or was the competitive advantage for each of them, but that was the structure which was new and which was more effective.
Thank you. And Nico, just reflecting on that, do you see I suppose, the space for Budapest for this to become a centre where you get 400 applications for something else, like digital assets or like other forms of technology? Do you see that as a possibility, and is it part of how you think about the future?
So actually, just referring back to the selling point of Budapest and Hungary, so actually the mere fact that we are at the heart of Europe, so easily accessible, we have a very wide talent base, we have excellent technology universities here, and of course economics universities. and we have a very appealing tax rate of 9%, which can also be a unique selling point. And we have a very flexible integrated regulator, so the central bank and the supervisory authority are unified, and so we are offering for the fintechs a unique platform called Innovation Hub, where they can approach us, ask about the licensing process, ask about the regulatory boundaries, and they can seek our opinion whether the idea fits into that, or they should revise it before entering into a more formal discussion with the regulator. So I think all these make us an appealing place to make business. And just to finish it, that we are a relatively small country with something like 9.8 million inhabitants, so we are an ideal size for something new. So I usually say we have the perfect size, being a regulatory sandbox or a sandbox overall.
Yes, go ahead.
Yeah, just referring to that, my experience, and basically it's coming from comparison with what we experience in the UK and Swiss market, is that in Hungary, if we are speaking about engineering and speaking about experts on the domain of technologies, it's outstanding. And if you look on the teams gathering fintechs, building good products, it's amazing. What is missing is the capability to really bring it out of to bring it to the market. So this kind of building partnerships, building business, this business development and sales-driven mindset, this is what is missing. And what I can see is that several good fintechs from the Swiss market, from UK, from other parts of Europe and globally as well, bringing their technology hubs to Hungary. But when a team is starting something from here and want to scale, and really scale, and scale doesn't mean like 30% of growth or 50, but like triple every year, 5 times growth every year. This is not happening without a very strong business development and sales-driven mindset and finding the right product market fit. And this is what is lacking from the market today, and I hope that this is something that will change. And about the size of the market, I have a theory, and maybe it's not a good one, but I like it. That the size of a country like Hungary, with approximately 10 million or a bit less than 10 million people, can be captive. What does it mean in practice? That you use the market as a pilot one. So if you do something new, you try to sell it for Hungarian players, which is obvious as this is your home market. But what you do after that? You sell it to another Hungarian player and another one, and if you start to work for one market, even if you think as this is a pilot market, it's even more difficult to scale. So if you don't start to think big at the very, very beginning, think of Europe, think of the globe, just think on one pilot market, it can be very easily sticky. And what I can see in several cases, that after they start to, they can be successful here and not able to really scale up as the market size is sticky. And it's not about Hungary, it's about the size of the market. In case of Germany, the market is big enough to grow strong just from one market, and then you're able to scale because the market is big enough. If you're speaking about like Estonia or Lithuania, smaller markets, you don't even think about starting anything with your own market. So you're basically pushed to go from the very beginning Europe-wide scaling at least. So this size of countries are having this kind of situation where fintechs and newcomers can be a bit sticky.
Yeah, Tobias, go
Yeah.
ahead.
I think I totally agree that you have, I would call it a medium-sized country. So Estonia, etc., is a small one. Germany, it's a bigger one. But I told also you some disadvantages that we have on this manner. But where I'm not agree, and where I'm especially in these times, I would slow down the expectations. Think big, it's okay. It's as well what we would think in German. You say think big because there are 80 million citizens. But what we see in the last 12 months is that there's a lack of funding. And the capital burn rate increased so much in the last 18 months because of the inflation. We have the strong increasing of interest rates, which lead to the fact that you get no funding and that you have to tell a real success story. And it doesn't matter if you're in the Hungary market or in the German market or whatever. So will be a good wish to the whole market that we can accelerate in the same speed as what was happening in the last years. But I think we would be in a good position to put down all the expectations as long as we have this high interest rate level. I supposing if that interest rate level will be decreased a little bit, there could be new success stories. But the Association of German Banks has also an extraordinary membership. And we were the first banking association in Europe who allowed fintechs to be a member, and that's now 7 years ago. And what I can say from the last 6 months, I never have seen last year such a high reduction in reducing of memberships in banking or bankruptcy or merchant acquisition, etc. So reduce the speed. I think it's for us out because also from the risk perspective, but fintechs are quite important for the market and the most important innovators for banks.
Certainly. I mean, there are a few different points we've covered here. One is the actual financing of these firms, but also the positioning of Hungary being slightly different because it's not in the Eurozone, it's not so small that it's part of a large market, but it's a sandbox on its own. So we can see some advantages here. Mate, from your point of view, I mean, do you recognise the funding point that Tobias is making there? Are we in a tech winter still? In terms of how you would consider funding Perfinal, are there as many options as you would like there to be?
No, not at all.
What can be done about that? There's the overall climate, but is there anything practical that can be done about that?
Yeah, I think the most important macroeconomic reason behind the fundings being evaporated from the market is the high interest rate climate. So that basically means that money is more expensive, then eventually investments are more expensive. So they are much more risk-averse regarding to what and how they invest. But regarding to investment and venture funds, the money usually goes where the story is evolving. And if we are reaching back to the main question of the discussion, is that Hungary is a regional economic and fintech center, but for what? I think that's the main question. So what is going to be the story, or what can be the story in Hungary which can eventually become something that not just locally, not just in the region like Central Europe, but also from Europe-wide, but also from globally can be attractive. And there are not many potential stories which you can eventually leverage to be the story. I mean, opportunities to leverage to be the story. So since we already talked about Lithuania, Estonia, and the e-money regulation there that came in 2012, 13, something like that, the central bank and probably the whole government was strategically building Lithuania and Estonia as a hub within Europe to approve and operate these new type of financial institution, neobanks, because due to the regulation, they had the chance to actually serve the whole market. So from global directions and even after Brexit from UK, the financial institutions have actually approved for licenses in these regions because they know how to do it. It had practice. It had all the vendors and all the consultants already know what needs to be done in order to launch securely an application and eventually get a license. And as a next story, I know the cryptocurrency is also approached from different opinions, but as the evolving markets in crypto asset regulations is going to be a European level regulation, and by anybody obtaining a license in a particular country at the national competent authority, they will have the chance to go for the whole European market. That basically creates the same kind of narrative that has started with the e-money regulations in 10, 12 years ago. Yeah. So, and like I said, there are not many stories like that. But so just one last sentence to praise the Central Bank of Hungary a little bit. So that kind of top-down innovation supporting approach is already has proof. So I mean, even Perfinal and the CBDC project of Hungary is a proof that it's working, and I think it's a good example, not just locally for the commercial banks, but also globally, because in global space, the innovative nature of the Central Bank of Hungary does get lots of recognition, which is even good for us as a company trying to go to the global market from Central Europe. So that's happening. That's supportive. Even with MiCA, I do know that there are many researches, many opportunities that the central bank and the regulators are working on. But I don't know the exact recipe what would make Hungary a potential hub, just similar to Lithuania that happened in e-money regulations. Maybe Anniko.
We'll talk about the CBDC work in a minute. And on this particular point of MiCA, because this was passed with quite a bit of fanfare, earlier in the year when the MiCA regulation gives the opportunity for banks to issue stable coins. It allows a regulatory framework for crypto assets. I mean, has that had the impact that you thought it would have, Mate? Are we in the position you thought we would be in at this point? And if not, do you expect that to change?
We actually did a survey with crypto companies in Q1 2023, exploring their appetite towards regulation, and the results were quite fascinating, because I think we have talked with around 45 cryptocurrency service providers who already operate in Europe, and 60% of them are actually said that they are gonna obtain regulation within 1 to 3 years. So they want to keep in the market, because otherwise they have to leave. Yeah. So they want to keep the market. Yeah. They operate with European customers. On the crypto side, there is indeed opportunity for regulation, but only the ones who have the capabilities to actually become a regulated operation, almost like a bank, are the ones who are actually taking the steps eventually. And it slowed down a little bit as far as I experience. So I don't really experience that. I mean, there are these good sandboxes. Even in Germany, there are like custodian licenses. France had its own sandbox, so it's happening. But it doesn't really have. I mean, if I recall a most recent conference in Dubai, they were really talking about regulated operations. So it's happening. The commercial bank side, they're I think a little bit more risk averse.
Yeah.
Even more than risk averse, just referring to MiCA, which is basically a European level regulation on crypto assets for incumbents. And there was a conference here in Budapest last week. It's the banking technology, basically the biggest technology-related banking conference of the year. And I had a presentation on MiCA and the impacts of MiCA, and I started my presentation, approximately 100 people in the room, and I asked them, how many of you ever heard about MiCA? That it is not coming, it's here, so it's already accepted by the EU Parliament and coming in force with all the detailed regulations, 2024, December, here to Hungary. And I asked them, how many of you have ever heard about it? Commercial bankers, technology guys from the big banks, from like 100 people. Guess how many of them ever heard this word of MiCA? What do you think?
5.
3. 3 people from the room.
I was about to ask the audience. That was a question. But no,
so it's not even. It's very, very far away from their thinking. They don't even know that 1 year from now they will have the chance by regulation to basically sell Bitcoin to their clients, theoretically. They will have the chance to do that by 2024 December, and they don't even know.
Yes.
But if I can
Go
jump
ahead,
in,
yes.
so-
Go ahead.
because I think there's one challenge, and that is what we're discussing already. And perhaps you know that in Germany we drove the electronic security law since 6 years, and that is since 3 years in place. It was a long way, but I think there's one challenge, and obviously you think, okay, as Mika, you can issue stablecoins, great, you have something to sell to the clients, perfect. Yeah, but look, you have also to trade them, so it's a nice place that you have a primary market, but you also need a secondary market, and that's not in place. You have the DLT pilot regime. And that's the right step in the right direction, that the regulator is driving like a sandbox and is just trying how to define the best regulatory framework. But if you want to invest as a banker, and don't think as an innovative bank like Revolut, just think as a Deutsche Bank, Commerzbank, UniCredit, whatever, you need absolutely security about your investments, not this year, not next year, about the next 10 years. And if it's a pilot regime, it's just a pilot. So I think that's a real challenge. So at first we need the MiCA, the second is we need the secondary market, and the third is, now you have the asset on-chain, you need the payment on-chain. And we have the payment actually on-chain. So if you want really to participate on the advantages of the distributed ledger technology, the atomic payments, the delivery versus payment, etc., then you need the whole infrastructure, asset chain, payment chain, primary market, secondary market. And I suppose if this is in place, you would not only have 3 persons, you would have perhaps 40 persons. Not 100, yes, but yes, much more.
Well, and perhaps you will see that if you ask that question in subsequent years in Budapest. I think part of the issue is also that many incumbent actors get their information through the mainstream media. It was 1 year ago exactly that Sam Bankman-Fried was arrested and the whole FTX thing collapsed. I was in Dubai at the time making a presentation. I had to change all my slides because he'd been arrested that night. And then I asked the question, again, to very politely, who recognises this guy? And I pointed at the picture of Sam Bankman-Fried on stage with Bill Clinton and Tony Blair. Not one person recognised him. And then they all started checking their phones, and they're like, oh yes, I have heard of this guy. And then we saw the FTX logo everywhere in Dubai, where they were sponsoring all these events and so on. And of course, that has had a big impact as well. So that's also part of the macro climate for investment and for MiCA and for people moving into crypto assets. So you certainly have your work cut out, Enrique, if you're going to make Budapest a centre for this, and if you're going to make MiCA, I suppose, user-friendly at this early stage. So, I mean, how do you go about this? How can you get to a point where this new form of asset class can become something real to the banks that you supervise?
So actually just referring back to whether we would like to attract 300 or 400 applicants for e-money license, we definitely not, because we do believe that we have to offer a solid regulatory base and not like communicating that if you are small enough, we don't even watch what you are doing because it can make harm to your market, to your reputation. And we have also read some news about the heightened casualties for AML, KYC issues and things like that. So we would like to be transparent, solid, but we are there to discuss and to interpret the rules, which are the common rules of the European Union. And here, just coming back to the spread of the DLT-based business models, we also encounter that banks do not see the opportunity to invest huge money to something which might be the future in 10 years or so. And therefore, we are pushing them a little bit. So we are informing them, we are attracting them to participate in international projects like cross-border CBDC pilots and things like that, just to build up the skills and to have those preferably not too far from the management level who can decide on these directions. So this is what we can do. And also the other way we can do is to build infrastructure and build standards, because we also had quite a huge endeavor a couple of years ago when we implemented the instant payment system as an obligatory participation-based system for the whole country. And so we realized that, we not only have to push the banks, but we also have to create some standards so that the new form of payment can be really part of the everyday payment practice. So we cannot let the market to fly as freely as you would think.
And one of the things that the Central Bank of Hungary has done is created the CBDC pilots, which you can tell us a little bit about now, because what Tobias was saying is if you're going to have the assets on chain and if you're going to be able to invest in crypto on chain, you need to have the payments on chain. And now CBDC may or may not have anything to do with blockchain, but a form of digital money that allows people to access and to buy and sell tokenized forms of value is something that's very important. So I'm going to come to a question for the audience in a minute, but do you want to just tell us about how you're working on that bit and how the CBDC work is part of the wider digitalization strategy in Hungary?
Yes, with pleasure. So just referring back to the technology experiment on a DLT-based framework, we see that we have to lead by example. So the central bank already has a blockchain-based system in its core ledger, which on the one hand it's a very serious experiment. It was our CBDC pilot where we are allocating NFTs to our users in return for solving quizzes, and these NFTs can be collected, stored, exchanged, and finally, they could be qualified for a lottery, and when the real physical sets of coins are distributed, they can also be registered on the blockchain. So on the one hand, this is a very small-scale, gamified exercise, where, let's say, we don't run so much credibility risk or operational risk, but on the other hand, we are preparing the central bank to work with the new technology. But we also have an even more serious CBDC pilot. It is called digital studentship, where we, on the one hand, are targeting the age group of 8 to 14 years of primary school year students, and we are offering them a free digital wallet, which is actually registered in the accounts of the central bank. So it's operated as our CBDC offering, and these wallets can, of course, be topped up with a card payment, and with the help of the QR code system we implemented, you can pay at more than 20,000 merchants, and also you can transfer this money to anyone who has a bank account. So we want to incentivize the digital financial inclusion of the next generation, who anyway could be the users of CBDC, but we also want to install our own capacities and skills and processes so that the central bank could be familiar with what the task is, how wide the area of decisions is that we have to make, and also, of course, to to know the market, to know all the vendors, or the technologies that helps us to make the proper decision and also have a very short implementation period when the management decides to have it in a larger scale.
And this is one of the things I think does set Hungary apart and plays into the sandbox story that you were saying, is that these are actual assets that are used by actual people. I mean, the CBDC is a claim on the central bank's balance sheet, and that is unusual from the work that Soda does, certainly I noticed, but also the actual tokens as well in the NFTs are actually issued from the central bank's ledger and used by members of the Hungarian public, which is different from how most central banks are approaching this. Any questions from the audience? If we can have a microphone, please. There's a gentleman at the front here who's got a question. Any others? We'll ask them all now. Thank you, sir. Do you mind just saying your name and where you're from and them?
$50,000 people at Web Summit. This week, 60,000 people, probably 100,000 people go to Singapore for MAS, the regulators event, which is basically the roadmap for fintech for the next 10 years. I was in London, there's Digital Asset Summit. I spoke at an event called the Fintech Talents Festival, which had 400 speakers across open finance, embedded AI, open finance, all the things. So why can't Budapest be the center for events? Because you need media, you need buzz, you need international sort of presence here, because I don't see Warsaw or Prague or any of the others taking the mantle, but as part of it, budget for bringing people to Budapest to talk it up. That's my advice. And this is a big week for fintech anyway.
It's perhaps a challenge for OMFIF as well, who are hosting this as part of the conference. I mean, the storytelling is a hugely important part of it. I mean, what I've noticed is that the storytelling, it represents a real clash of cultures, because if you spend any time in the crypto space, then the storytelling is the main thing. Look at what we've done. We've saved the world. We've created this token. Haven't we done brilliantly? And central banks is almost the opposite. It's a very kind of even-paced approach to this is what we're doing, this is how we're doing things. And so how do we get this right? If you want Budapest to be a center where people come, you need to be able to tell the story in a serious way, not with the sort of hype-type crypto events that can sometimes backfire, as we've seen. And Balint, you must see a lot of this as Dawson expands quickly. What do you think is the best way to tell the story, I suppose, which is John's question there?
It's a good question, as you somehow need a real ecosystem around, and if you don't have that, it's just not going to be real, and you're not going to be able to attract the right people to one place altogether. So what's going on at this time in Singapore, basically, they are a hub, and everyone knows that if we are speaking about that region, it's Hong Kong and Singapore, and that's it, and everyone knows that. And if you're speaking about digital assets and crypto, it's basically Zurich. If you wanna be somewhere where it's really happening, not faking, but the doing, it's Switzerland. And that's why it's just not feasible to do it here. For even me, if I want to be on the highway at that topic, I go to Zurich, because I know that the guys there that I can meet there, they are doing this. They have real use cases. They have clients on that. They have something really on chain that is in production. And it's not about Hungary. It's about basically, if you're not a hub, and building a hub, I don't know the success receipt or how to build a hub. But if it's not there, it's not enough to have an event, because no one will be there. Why come here if you want to know what's happening in the fintech universe? So
But actually, we are in a very close relationship with the MAS. So usually we are in Singapore, we are in Zurich. We have been co-organizers of Point Zero Forum with the Swiss authorities and MAS. So we had several occasions. Especially in the COVID times, it was easier to set up World FinTech Festival as a satellite event of the Singapore FinTech Festival. So actually, the problem is that, as I see it, that if those gentlemen are doing the business, they don't have the time and effort to build a network and promote the ecosystem per se. So therefore, some of this work is done at the central bank, but of course, we can be successful only if we do it together.
Thank you. I'm going to just come back and ask a question about the German perspective. I'll also make a comment on Portugal. But this gentleman also has a question. I want to involve you.
So my name is József Zimmer. I'm working for a Hungarian IT company. And I wanted to say that, of course, Budapest will never take over Singapore's role. That's for sure. But there are certain territories where Hungary can be on the forefront of development. Aniko has mentioned already the instant payments, which the first part of the project was not a classical fintech project, it was an implementation of systems. But the second part, the instant payment 2.0, is a fintech project where the central bank is a very effective driver. There is a good gyro, and there is a company, it is a Capsys company, which has produced the Capsys Smart Payment Solution, which is the basis for the whole solution, which makes possible to initiate instant payments from whatever use cases. And the pilot project for Europe, let's say, is going on in Hungary, and we can say that most probably by next September it will work. Everyone can watch it, and we are already presenting it to the European Commission, to the UK leading organizations, to the largest payment companies in the world, and everyone is looking at it, and on one side is waiting what will happen in Hungary, and on the other side they are looking how they can use this solution. So there are parts where Budapest or Hungary can be, and the Hungarian community can implement a fintech-type project also.
Thank you. And I think the seriousness of the discussion today does actually reflect the quality of work that's going on here. The storytelling also matters. It's just this unfortunate reality that, showing, being able to get the storytelling right is something that's... Did you have a comment on that, Tobias? Yeah.
Yes, because...
Actually, after you've spoken about that, can you also talk about your... Aniko spoke about CBDCs, and just talk about how your members, fintechs and banks, are viewing a CBDC. What do they think it will be useful for? I know we're sort of squeezing a lot in, but answer the first point and then move on to that, because we should talk about CBDCs a bit. And then I will come back to you as well, Belinda, don't worry. We might have to overrun a bit on this panel, I think. Don't worry, gentlemen, they can see the clock ticking down.
Just give me one comment to the last aspect, and then come to the CBDC.
Of course, yeah.
Because you're talking about success factors for fintech ecosystems, or to accelerate any kind of startups and ideas. And I think you never should forget that you need also industry, politics, interest.
Yeah.
So, and if you look to Switzerland, if you look to UK, if you look to Luxembourg, if you look partially to Lithuania, if you look to Singapore, it was always driven from the politician. And we have in Europe in general, for the whole Europe, one core problem, and I'm a lobbyist, and I can tell you several stories about the last 10, 15 years after the financial crisis. The lobby of banks is still not good. So the politician, it's not a topic where we can get any votes from any voices, votes from electors. So from that point, I think that's a real issue if you want to run a business. And then come over to CBDC, because there is perhaps some political interest to install CBDCs in Europe, and then we have to differentiate if we're talking about retail CBDC and the wholesale CBDC. We have talked about wholesale CBDC and the ecosystem of digital assets, etc. I think that's clear. We need some more, and the ECB is working on this one, especially for Hungary. And I think it's a chance because the cross-currency business, to manage it with a wholesale CBDC, it is a chance to make a really counter-risk party-free business. From the retail CBDC side, and I know that a number of banks are quite skeptical, have some doubts about retail CBDC. We published our first paper now approximately 5 years ago about the ECB should run a digital euro project. And most of our banks don't understand why we published this paper. So then we installed a number of ideas, and I think from the geopolitical perspective, as well as from the sovereignty perspective, it's quite important that Europe has any kind of CBDC. And we could perhaps speak about a market failure because API is not in place.
Yes.
I don't will make any finger pointing why it is not in place, but the case is that we need any kind of alternative. And just imagine what could be happen if Donald Trump will win once again the election in 2025. And what's happened if Donald Trump will put any defense fee on MasterCard and Visa card by 3% of each transaction to European? So to refinance any efforts that the US is doing in Europe. So we get a strong problem not on the banking side. As a society, we get a strong problem on the whole economy. So from that perspective, I think we need a common sense in Europe, not in Hungary, not in Germany, not in France or whatever either. We need a common sense about, do we need CBDCs? Yes, we need to underline our authority. The question is, in which kind of role model? And that is a role model what we see at the moment from the ECB. It's not our initial idea. Our initial idea was to install like a raw material. And the same what you're doing today with the cash. It's like you have the street and you have the car. The car is the cash and the ATM is the street. So the ECB is telling us how the paper, the cash that we're distributing is look like, but the color of the ATM and where I want to install the ATM is just my own decision. And I think it's totally fine and to leave that to the market. What now the digital euro has come with that is the ECB is delivering the car because they explain us how these digital euros should look like, and they're installing also the payment rails. So they install a completely new payment scheme. And there's a conflict of interest because the ECB on the one hand is a supervisory of banks and now get also the competitors of banks, and that I don't understand. Yeah. So from that perspective, we get much more critical, and because we had a number of other conversations on the stage, and I was quite positive to the CBDC approach of the ECB, but at the moment I'm skeptical, and hopefully the politicians with the legislative proposal what is published in the summer get in the right direction, that we come back to the role model and the two-tier system, because that's what the market finally needs.
There's another whole couple of panels in CBDC, but you've been waiting patiently to make your point. So make your point, and then I will ask the audience, and then we'll wrap up, okay?
Just referring back, and don't take me wrong about how we build the ecosystem in Europe, because it's going well. But my point was that you really need a high density of companies and people doing something that can be a success story. And it can be like the retail CBDC, which is something unique. It can be like the instant payment, which is something unique. But you need a success story, and you need a high density of people and companies around the success story. And this is something solid that you can build on if we are speaking about a hub or ecosystem. And the topic itself, I think, is crucial. And selecting the right topic, and strongly agree that after that, a high, I wouldn't say pressure, but a high support from politicians and from the political landscape, including really the government, but including like public organizations as the National Bank, is crucial, because this is the next step. If you have the success story and the right people, then you need to somehow build up the defenses, the bubble around, and this is part of good policy making. And I think on the policymaking side, and I am not just telling this because Aniko is here, but
we're okay. We're doing a good job as a country. We miss those loud success stories, even if we have those as the retail CBDC and this project around the student safe. It's a success story. I love that project. It's amazing, but still, the visibility is not high enough at that point. And this is what I mentioned at the very beginning, that this kind of business development and sales mindset, this is just something that here in Eastern Europe, this is not part of our DNA. So it's more of a US and UK kind of DNA, and this is something that we need to better understand and learn how to do it right.
Well, that's certainly a challenge for us all. And I think some of the hubs that we do see, we spoke about Lisbon before, that is a political decision. Many of the people we know who work in crypto live in Lisbon because they tax them nothing. That means you can have a conference whenever you want, but then Antonio Costa, just before he resigned, said he was cancelling the zero tax. So maybe that will be the last 50,000 people summit in Lisbon if all those crypto people have to leave by the end of the year. And that's not the sort of thing you want.
The taxing policy of crypto is quite favorable here as well.
You also, I think,
one of the best ones.
have a serious approach to it. Right. I did promise to ask the audience something. We've way overrun, but I'm only going to give the speakers a one-word answer to finish. So we didn't speak about CBDC much at all. I thought we would speak about it more. Who thinks, and you can define this question however you wish, please raise your hand. I'm going to give you two options, which currency zone will introduce a CBDC first, wholesale or retail. I'm going to go for Hungary. I'm going to go for the Eurozone. Who thinks Hungary will be the first to introduce some kind of CBDC?
Retail or?
Retail or wholesale.
Okay.
Who thinks the Eurozone will introduce any form of CBDC before Hungary? Anytime. Who thinks neither will introduce them at all? Anytime. It was just who would introduce it first. Right, okay, you can have a one-word answer. Who do you think will introduce the CBDC first, the Eurozone or Hungary?
I vote on Hungary.
Anika?
Actually, we have already running CBDC, but on a larger scale, I think we might have the advantage from many points of view. And I just would like to refer back to your paper, because it was about setting a new platform for innovation. And this is probably that could be really relevant for the digital euro and for advanced countries. And as we see, it's the design characteristics doesn't really reveal this direction. Maybe we should work on it.
Balint, who will win the race to introduce CBDC? The Eurozone? Or
Definitely, hopefully, Hungary.
Definitely, hopefully, Hungary. Tobias?
I suppose it would be Hungary because you have some pilots. I'm afraid that the US will be the first one.
Interesting. Thank you all very much. So we've got a closing remarks shortly from Christopher Garnett, but please join me in thanking my panelists for a very enlivening discussion. Thank you all very much.
Put back the lectern or something? Or no, he's just going to
Running